Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Tuesday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick with you on this, we'll call it a slightly down to flat morning, but we had a rip-roaring day yesterday. So as far as I'm concerned, we're still in the green. Got a lot to get to. We're going to talk through trades, what worked yesterday, what didn't. Well, I'll tell you what, buying worked and selling didn't. Misha Schneider is our guest today. She's Director of Trading Education and Research at Market Gauge. She would join the show at 8:35. Before I throw it to Joel, and Joel, while I'm doing this, can you share your charts, please? But before we throw it to Joel, I wanted to make a quick programming announcement. We've gotten a lot of feedback in the last few days about doing separate streams and all-day streams. Today we're doing both. Yes, both. We're doing an all-day stream and separate streams on YouTube, Twitch, and Twitter. So you can't go wrong, okay? If you want the all-day stream, it'll be there. If you want separate streams, it'll be there too. Separate streams. And then the last thing I want to hype up before I throw it to Joel here is tomorrow, Jason Raznick is doing an interview with Cathie Wood. Why is that relevant to you? Well, one, it's interesting, but also we are opening up the floor to our viewers to ask Cathie Wood a question. I'm putting the link right now in chat. There it is. There's a link to a landing page. You can submit your question, and we're going to draw them at random and ask Cathie Wood your question. So there is the link. It's go.benzinga.com. It's right there. I'll put it again in the chat throughout the day. But there is a link. Ask Cathie Wood your question, and maybe we will ask it on tomorrow's interview. That'll be at 2 p.m. tomorrow Eastern time. All right. All that being said, let's do this. Joel, let's bring up your charts. How are we doing this morning?
Good morning, Spencer. We're slightly in the red by 3.5 handles at 38.95 and a quarter. We had a dip overnight down to 66.25. Maybe some turmoil in the Asian markets, but we rebounded right back up. Pre-market high, nothing up there, 39.0650. What we're looking at would be yesterday's high, Monday's high at 39.12, and then kind of opens up after there. We could get that rally. Dennis and Spencer were talking about if we can clear that 39.12. Gold trying to distance itself from 1,700 down to 0460, back up at 33.5, up $11. Silver going the opposite way. That's down just a little bit less than a cent, about 6 cents to 26.61. Bitcoin quiet range here, $2,000 range. Got over 50 and under 49, but we're hanging at 49,300. That's in the futures. So Triple D, we're going to bring you on here. Some retail earnings after the close. Rocket is blasting off. We got a lot to talk about here.
Yeah, the rocket ship is off. Congratulations to everyone who's been holding on to that one. I sold it back in the last short squeeze. I think it's another short squeeze. I mean, you obviously have the special dividend, good earnings, so you get that, that earnings momentum going. But they're talking about it over on Reddit. I'm looking for a headline to see why it's up another 15% today. I'm going to give Reddit the credit because I don't really see the headline from last night that's driving the stock. It was up all night. It's up, continued here this morning. I think Reddit's squeezing this one.
Credit to Reddit. That could be
credit to Reddit. I like that.
Okay,
you Reddit traders, you got the rocket ship going here. I'm sure Jason Raznick pretty happy about this one. Thoughts here, Joel? I mean, this has been a stock that has been a dog for a long time, but now it's breaking out. It's through that critical level, that 25.55 high that it made back on the last short squeeze. So you start thinking you got 28, maybe you got 30. I mean, obviously we don't know when these things end. But it seems like once they get going, they can go for a little bit. So I don't know if I'm not chasing up 15% here today, but if you're in it, Well, we don't give investment advice, but I think it's got a shot at 30. I think it's come this far. So it's tough though. When Reddit's, there's a whole different animal. I'm learning, when retail grabs a hold of a stock, how far they can go. You think it can go this far, and then you find out it can go a lot further.
Kenny's making a good point, but we knew this a couple days ago. The dividend payout is March 9th, right, for the deadline. So, if you wanted that, it would have been a good investment on Thursday or Friday. They've already put more than a buck on this. I'll just give you the pre-market high, and that's really only thing we have right now to base our analysis on. That comes in at 28.59. You hit that a couple brackets. So see what it does up there. Not much on the dailies, not much. The monthly, it had that crazy run to just over 34, just after a little bit after the IPO. With the bump, I believe Kramer was involved in a pump on that. So first things first, take out the pre-market high, 28.59, then look at your whole numbers, 29 and 30. Right now, it's hard to call top.
So let's jump to the earnings parade here. Lots of
Sure.
earnings from this morning and last night. Let's start with Target. I got down and dirty this one. Somebody got really excited last night, and they wanted to own it. They had to own it before the report. This thing, I watched it go 187, 188, 189. I'm like, this starts going over 190, which would actually put it to, I believe, Target over 190. No, sorry, I was looking at the wrong chart there. But it had, it was up there a few days ago. But I was like, it's giving you a pretty good lead. So yes, the evil Dennis shorted the stock last night. Target 190, 20, 190, 10, multiple trades on it. Took it through the report, shorted it to take it through the report. My logic here was one, I thought they're gonna have to blow it away because we saw Walmart have a pretty good report, and then it didn't get the pop off.
That's what Joel said.
Yeah, were you listening to the Afterclose show?
Oh no, you read my mind, Joel. So we were thinking the same way. I guess we've traded with each other for so long, we think the same way. Second thing is, I hedged it with Walmart, and I did it. I did it huge. I did it 3-1. Because I figured that the Walmart move would be a lot less because it's already reported. But I was like, you know what? Target rips up $5-6. They'll buy Walmart up a bit. So I hedged it 3-1 with Walmart. End of the report, and it worked like a charm. Target it comes in. Walmart was actually trading up, so I was able to take it off here this morning. Walmart is still trading up about 40-50 cents, and Target's obviously significantly down from that 190. So yes, you can make money shorting stocks even in a bull market.
Yeah, it was nice that you put the head. Spencer, you want to give that report?
Yeah, here are the numbers on Target. Q4 adjusted EPS, $2.67 versus a $2.54 estimate, so they beat that. Sales beat by a smidge, 28 versus $27.5 billion. Q4 comps up 20% year over year. Digital comp sales up 118% year over year. They are not providing guidance. Sales guidance for this year or EPS guidance for the year due to the pandemic. They also said they did not buy back any stock last quarter, but they have resumed buybacks this quarter.
The funny thing is that's the first time I've actually seen the numbers since you just read them. I've traded into the report, held it through the report, got out of the report. I never actually looked at the numbers. That's how much I cared about the numbers. So stock reaction tells you it all. It's trading up here a little bit, but we've seen, some stocks get sold on good earnings. And is this as good as it gets for Target? I think it is. And if I was long the stock, I would actually sell it. I shorted it, but I'm flat now, so I can freely talk about it. I don't know if I'm going to go short it again now, but if I was long it, I think I'd ring the register here. It's been a great year for Target. And I just see what Walmart has done. I see what Home Depot has done. A lot of stocks have been absolutely hammered. The retail stocks, like Walmart, that's a pretty good hammering from 150 down to 130, on a consumer staple, big company. Again, these stocks, it's not sexy really either. So if we start coming out of COVID, is Target, the place? They were already going to Target. They're going to start going to other places, so you see that reopening. Target is not a reopening story. It's more of a lockdown story, Target and Walmart. So that's why I think this is as good as it gets, and I think I'd ring the register if I was in it.
Isn't that interesting? They're not providing guidance.
Well, how do you? It's so hard. And you're going to see companies do this more and more, but it's tough. Like, Joel, we don't know where, yes, the vaccine's working. but they're trying to analyze, okay, well, how much did we benefit from the lockdown? Did we benefit from the lockdown? Obviously, don't people coming in and buying, we have them buying, our essential products here, but we don't have them coming in and buying a lot of other stuff. So maybe we don't. Maybe we are a reopening play. I mean, Target is a little bit of a mix, but I tend to think that they were more at least being priced as a lockdown trade.
And also, think about the comps. Think about the year-over-year comps from last year to this year. It's impossible. It's impossible
to beat those numbers again because
you can't.
You set the bar really, really high, and you know what? Shareholders have been rewarded. The stock from the March
90 there,
basically 100%.
Yep.
It's Target. It's not some high-tech growth company. This is a big box retailer that's been around for
You picked a good technical level. Let's see what happens at 189 today. I know it's traded through it a lot. I'm looking at the move, the pullback off the high from just over 200 down to 177. So if Target wants to continue on its merry way higher, make another shot at 200, I'd look for this thing to hold 189 over the next couple days and then, gain some momentum. If not, I think you might have a date here with the 177 level. Looks kind of tired. It had to break. It had to rebound. Definite lower high here. And now you're tailing off again. I mean, I don't want to get all patterny on you, but you could have a head and shoulders top on top of a head and shoulders top. That's a double head and shoulders there.
Whoa.
So working on the right shoulder. Yeah, a lot of dandruff there. Triple D, before we move on, some people were kind of curious about yesterday when you had the bold. I don't know if you want to talk about it. If you don't want to talk about it.
I was short ExxonMobil.
That was.
You kind of knew it. I was like, what's the news on ExxonMobil? And then I was like, we're not getting it. And then I'm looking at CNBC and their executives on CNBC. So I need to go and find out the news. First thing you do when you're getting hammered, make sure you know the reason why. And secondly, then you got to go and try to work out of the trades. So, what do you do when you start losing money? You cover. You try to figure it out and you cover. It's not like I'm not in the business of, I hope it comes back down. I'm going to be short ExxonMobil from 50. I don't know where it closed yesterday, but I was down way over $1. I think it was down almost $2 in it. So anyways, I was short ExxonMobil. I had a hedge on. I was long Chevron versus ExxonMobil. It was a pairs trade. And obviously Exxon had the news with the execs. So it was ripping higher. So you got to work out of it. You work out of your losers. I'm disciplined, man. I take those losses.
So you immediately worked out of the spread, right? You just put the fire out.
Yeah, as best I can. Like sometimes you got to look, like you got to analyze, okay, well, you just ripped up $1. You come in a little bit, maybe, you're still working the trade. And, I'm not like got 100 shares or something too. It's not that simple for me. So, you're trading 100 shares. I'm out. I mean, sometimes I've got a few more shares than that. So you got to work it as best you can. And sometimes, I'm going to be big enough that I actually might impact the price. So I got to be careful with where I work it. That's why I talked about like the discretionary order a couple days ago. Get outside the market, start to, and then throw some discretion on it. So you're not in there and like bidding it up. And then the high frequency guys see you bidding it up and then they're penny jumping you and they're getting ahead of you. I take liquidity. It's a type of market where when you bid the stock, then they get ahead of you. We got a hot one. They bid ahead of you and they try to get you to pay as much as you possibly can. So you can't just panic, and you just want to panic and lift an offer too. Sometimes you can. I mean, if the offer is there and I'm on the wrong side of the news, I'll lift the offer, get the hell out. But, in that case, the news was already out. It was already starting to come in. We were doing the show live. So, it's difficult. And sometimes, it's not like I got 1 or 2 overnight positions here either. I'm fairly light overnight. I got 30. So you don't notice sometimes, when something happens. You'll see your P&L. I'm watching the P&L. You're like, oh, what's happening? I'm getting slammed in this. So you got to go find out what the news is. I mean, when you're trading 40, 50, 100 stocks, every day you get hit with news. So it's just a matter of working out of the losers as best you can. So
and CVX
you have winners and losers. Discipline, get out when you're wrong.
And the CVX moved, but not as much.
Because the news wasn't on it. Yeah, I think I ended up covering Exxon up like 4% and Chevron sold for up like 2%. So I would have lost like 2% on it. So, which isn't terrible. You say, well, what's 2%? Well, I'm jumping in edges for 0.1%, 0.2%. 2%'s a butt kicking for me on an overnighter. So, you got to work it. You work out as best you can.
Yeah, because all the years, I mean, you have dropped the mic a few times though. But usually it's like you come on at like 7:58. You're like, I'm buried. I can't come on. But there was one. It was just interesting, and people were like, they wanted to know how you worked out of it. So I thought it was a good exercise in, risk management. That's what we talk about here.
That's all this game is about. It's all that matters. If you're a retail trader, long-term investor, and you're doing 1 or 2 trades in a week, but if you want to do this for a living, which I do, all of my wealth, all of my net worth has basically been created from my trading. Almost 100% of it. A little bit of investing afterwards, but it's how I got started. It's how I, bought my first house. It's how I've done everything. The reason I have been in this game for 21 years is not that I'm good at picking stocks and I'm just good at this and I make money on every single trade. That is not why I've been in this game. The reason is that I'm very disciplined. And when the trades are working against me, I'm very good at getting out. I am not, I'm what you would call a risk manager. I am adverse to risk. People think in my job that, oh, here's this guy, here's this trader, this gambler. He gambles for winning. My one friend used to say, Denny, did you win money today? Because they don't know much, about the trading. Did you win money? Well, I'm not about, it's not about winning money. It's about putting bets, small-sized bets, diversified bets when you have a quantitative edge. Bob Bright, you interviewed him, great interview. We can tweet that out, again, when it gets up there. But, you interviewed him the other day, but he's talking about a quantifiable edge, and Bob's been talking about, shorting those levered products, and that's where he's been making a lot of money over the last decade. So, you got to look at different edges. Last night, Target bid up $4 ahead of the report.
Ahead of the report.
Yeah, ahead of the report. They're giving me a 4-point lead. So that's an edge. They're already giving me a 4-point lead. Somebody's bidding this up thinking they're going to beat.
Why?
Well, they might know they're going to beat. But you know what? I also know that Walmart beat, and they beat handily, and they hit the stock. So there might be the potential that this might not actually go up 4 points. I see the scenario that Target misses, the stock's going down. Target comes in line, I think the stock's going down. Target beats by a bit, I think the stock could go up a bit. Target blows it away, maybe it goes higher. So I see like 4 scenarios there. This person's paying up 4, they're all going after this scenario. I have these other 3 scenarios. There's a quantifiable edge. And then when I hedge it with Walmart, I'm even taking some more of the risk off the table. So you can see, where I'm placing that short bet last night on Target, and obviously it worked out here this morning. So, that's all I'm doing is little quantifiable edges.
Quick programming note. Rob Friesen of Bright Trading, who Dennis just referenced to, is going to be our 3:40 p.m. guest today. That's 3:40 on At the Close show. He's going to talk about just the same thing Dennis talked about, getting edges, how he does his homework at night. He's going to talk about an upcoming event that he's going to do tomorrow. So all you early birds here, make sure you tune in at 3:40 today or catch that.
I've learned so much from Bob Bright and from Rob Friesen. Rob was the father of pairs trading, so he's going to be on. He was the person that brought us this Bright Trading. Rob came in 1998. I came in 1999, but Rob came in with his quantifiable pairs trading, looking at quantifiable edges. And, we still employ all those tactics today. Are we just buying Coke and short and Pepsi? That's the most simplistic example. No, we're doing different things. But look at the pairs trade that I did on the Target Walmart. I'm doing that whole spin. I know there's a relationship between Target and Walmart. I know that relationship I know Walmart, because of our report, isn't going to move as much. So I'm not just going to do it 1-to-1. Your, novice pairs trader might be saying, oh, I'll short 100 grand worth of Target. I'll buy 100 grand worth of Walmart and I'll be okay. Well, no, because Walmart's already reported, so the activity is going to be muted. So in all likelihood, Walmart's probably going to move, at about a third of, I'm just estimating, but I'm thinking about a third of what Target's going to move. So that's why I do it 3-to-1. And, you take it off this morning and it ended up working out. So, but that's a pairs trading edge. These are different edges. So, people, just looking at a chart, and, oh, that's nice head and shoulders pattern. That's pretty and all. But do you honestly think when you look at a chart, there is 6 million other traders looking at the same chart? Do you really think you're looking at that chart differently than the other 6 million people out there? You think you're better than that? I don't know. I'll tell you, Bright Trading, 490 traders at our peak. There wasn't a hell of a lot of traders that were technical traders that were making money. They were using the book. They were using order flow. They were using other different edges. I like to look at charts too. I think there is something there for the swing trader. I think there is something there for the long-term investor. For the short-term day trader, 90% of the trades that I make in my short-term day trading account, I do not look at a chart. I have 3 screens here. I used to have 6, but I used to have more charts. But I have one little chart in the very corner. So about 10% of my screens. And the only chart I have on there is the 90-day. because the 90-day will tell me what the stock has been doing. Is it trending up? Is it trending down? Is it flat? I want to know, is this stock strong, or relatively weak? That's all I need to know.
And it just turned out the way that it were in the Target that it did get. It just was a coincidence. That 190 was a nice level based on the daily highs. So,
and I looked at that too.
Yeah,
so that's another thing,
right?
Yeah, but that wasn't my catalyst. My reason for going in the trade was somebody's bidding this thing up $4 ahead of the report. I don't think it's going to blow it away. And even if it does blow it away, I'm not even sure it goes up $4. So a lot of
why was someone doing that? I mean,
they do it all the time, Joel. People just don't know. That's dumb money is what that is. And that's what, that's what it is. I mean, people are speculating. And then, somebody starts, it might not even be dumb money. It could be smart money. It could be somebody that's like bidding it up after hours. They're trying to get this stock to look strong here. Maybe they've got a whole pile. Maybe there's some fund that's along 1 million shares. And they're like, I'm going to bid this up a few hundred shares to try to make it look stronger ahead of the report. Get other people thinking, oh, it's going to beat. And then it beats. And then it's going to go higher. There's all that stuff that you don't know what happens behind the scenes. But when you're long 1 million shares, and I'm not an institutional trader, but I can tell you, we know institutional traders, and we've known different people. I mean, we know this stuff goes on, that they will try to push stocks their direction, especially after a report. Sometimes like, nobody wants to give a direction. You got 1 million shares, stock reports, there's no bids or offers, bid a few hundred shares, and then it starts to go your direction. I'm not saying we do that. I'm never that big, but I'm saying this stuff happens, and you have to be aware that a lot of times a reason for a stock going down might just be a big fish pushing it down.
And that's a great example. No, and you see that sometimes, especially like that crazy 4 a.m. open where they push Johnson. And I just want to review this one real quick. They pushed this thing to 165 overnight on news that was already out last week, right?
Yeah.
That it was about and then also I looked at it. It was up. Almost 7 points at this when it got to 165.
Crazy.
Do you know what the range for the entire month of February was?
What?
7.
And you're buying it up $6, and somebody's buying it up $6 at 4 o'clock in the morning. You know what? If I woke up at 4 in the morning, I would have sold John. I mean, I've got the kids now. I'm too tired. I used to do the 4 a.m. thing all the time. If I was waking up at 4 a.m. in the morning, I saw Johnson & Johnson bid 165 on that headline, I would short the stock. Yes, so evil, short the stock. And you know what? I would have been paid for it too.
That would have been heatless. You could have went down one back to bed. And
there's a lot of opportunities. And 4 in the morning, there's no liquidity. And again, if you're coming in at 4 in the morning, you're new to trading, and you're bidding something up $5, $6, $7, thinking because somebody else has bid it up. I mean, that's a good, way to get hurt. It's very difficult. There's no liquidity. A lot of funny things happen. I'm going and looking for inefficiencies if I was out there 4 in the morning. Again, I don't do it anymore because I'm too tired. But if I was waking up the odd day, if there was really some movement, I might do it. But you're looking for inefficiencies. That's an inefficiency. Somebody giving too much pop when we've looked at Pfizer and we've looked at the big companies, and we know when they get these pops on the drug news, they've typically given it back. Once you have precedence, once you've seen the move before and a stock that's similar, it allows you to have more confidence going in with that call.
And also, J&J lost $4 on Friday. So you're like, oh, people are
getting it all back. Bag holders.
Yeah. I mean, that was a wicked. I don't know what the imbalances were on that one on Friday, but what a treat that was. And then when we talked about it on the show, we're like, what about previous day's high? Didn't even get there. In fact, it ended up opening right near its high for the session. Didn't get down to the close. We were talking about that. But here's another thing. When we were looking at it, let's say 161.45. You threw a short out there. You took 8 cents worth of heat. It went to 161.53. Missed yesterday's high by $1. And ended up settling still in the green at 159.32. But just wanted to do a little trade review on that one. Spencer,
and we try to talk this stuff like we're trying to do a lot of education because there's so many other shows out here right now that are just doing charts and stock picks. We're not charts and stock picks, and this is what's out there. Like literally, you watch a lot of other podcasts. It's charts and stock picks. Oh, I like this chart. I like this chart. We're trying to show you a different angle. I could sit here and do charts and stock picks too, and we do a little bit of that. It's fun. and it's fun. But, Joel's talking, different stuff here too, like different, like talking about, when we look at the Johnson Johnsons, Joel's not looking, really at the pattern or, is it breaking down? He's looking, hey, the thing got hammered on Friday. Now it's a snapback. There's going to be some people that are willing to sell. There's the value from a chart to tell you that the thing got hammered for $5-6 and it's bouncing back in. And, obviously you got the news. So, it helps you with that too. So we're just trying to educate you guys.
You know what I think? I think our biggest edge here and why we're such the dominant pre-market podcast.
I don't know if we are. I don't know if that's patting ourselves in the back a little bit too much, I think so, Joel. But why we have a good following? Why?
Psychological. We talk about the psychological aspects of the market.
I think I've turned everybody out. Is there only 600 people watching this right now? What's up?
No, I got 1,600.
No, there's 1,600.
Oh, yeah. I'm on a bad feed here now. I was going to say, I must have turned everybody off with this educational stuff.
Actually, that's not even true. There's more than that because there's 2 different streams going on right now. So
I'm watching the other stream.
There's 2,000 watching right now.
Okay, I have to add them up. I'm watching the small stream. I was like, maybe everybody left here. 600 people. I'm like,
no, it's 2,000.
Yeah, so I didn't turn them on. No, but just like the psychological aspect of trading, and that's
what Rob does too.
Yeah,
you're gonna have Rob on. He's gonna talk that. Rob can talk the psychology, and you do too, Joel. You do it well too. Talking. Okay, well, what is people thinking? You see this chart, and then you go. And Jeremy Newsom does it well too. And analyzing what are people thinking. He's looking at the chart. For where people are caught. People are looking at breakouts, or looking at different things, and Jeremy's doing a little different spin. So maybe I should take back what I said. You can look at charts in a different way, and there is different information to extract from it. I would just say it's only one tool in your toolbox. So.
Agree. All right, enough patting ourselves on the back here. Let's.
Joel likes to pat ourselves.
But yeah,
we all like all of the odds. Jeremy told us to do that. Jeremy Newsom said, every once in a while, give yourself a pat on the back. Nobody else can do it for you. Give yourself a pat on the back. We love Jeremy. So Spencer, I've taken the show completely
No, that's totally fine. That's okay.
And you got the Oscar behind you. When did the Oscar show up? Did we win an Oscar?
What? That's been there for like a week, man.
Man, I noticed nothing.
It's been there for a week.
I noticed nothing. Have we talked about it?
It's Oscar season.
Actually,
it's an Oscar that we won. Pre-market prep won an Oscar.
Pre-market prep won an Oscar.
Excellent. I figure, hey, if Netflix and Amazon, if they can win Oscars, then
we got that. The category was best pre-market show.
That's exactly it.
Yeah, we won it. We gave it to ourselves.
We gave it to ourselves. That's it right there.
All right.
Young Spencer, we're patting ourselves on the back. How much has Spencer improved over the years?
I think that Oscar was for best host.
Yeah, best producer.
Spencer, best producer. Best producer.
We tied for the best host.
Enough.
Who is the best?
Okay, this is getting gagging, Joel. We are really turning people off now. I just watched a person leave.
Enough.
Best guess, Bill Santiago.
Oh my God. Okay,
Bill's good.
Speaking of guests,
I'm still laughing.
We have Misha Schneider on, and she'll be on in about 5 minutes or so. She's the director of trading education and research at Market Gauge. Between now and then, though, I guess we'll do some tickers from the chat because there's a few tickers that all right. And
Did Kohl's have earnings?
Yes, they did have earnings. Okay. You want to go over those Kohl's numbers? I didn't see the numbers yet this morning.
They were just sick of hearing about retail.
They were good. They were good.
I'm sick of hearing.
Let's go to TIGR, Tiger.
Let's go to Kohl's because you know what?
Fine, let's go to Kohl's. We're going to Kohl's.
Give us the numbers.
Well, give us the numbers. You anyway, Spencer.
I don't know. Kohl's beat by a mile. They beat by a mile. Yeah. EPS, they basically doubled the estimate, $2 versus $1. Sales 6.14 versus $5.86 billion, and they gave guidance in the fiscal year EPS guidance in the mid to high $2 range.
So they absolutely kill it, which is so impressive. I mean, in an environment where nobody's even going into their stores or less people are going to the stores, so online must just be killing it here. Very impressive numbers. Not good that it's not trading higher. This is a stock that has run from $20 in November to $57 here today. This is a very important day for this. If this thing starts to go red, Katie bar the door could get ugly. So as long as it holds green, as long as it holds up, let's see what it does at 9:30. But man, it's been a hell of a run. It was an awesome quarter. Is this, the buy ahead and sell it on the news? It's a setup for that. That's still to be determined. Let's see what happens here at 57 and 56.90, 56.80. But this has the potential to get ugly if it starts going red. So you need, if you're along this, you need it to hold green. I'm scared of Coles. Right here.
Yeah, it's leaking. It's leaking as we speaking.
Let me I know that's a good one. It's leaking as we speak. And put that on a shirt, Mitch. Joel, Mitch, we need that shirt. We need the meatloaf. We want it now.
Turn that into a sound clip and a shirt.
It's leaking as we're speaking.
Come on, guys.
I'm a little spooked on it. I'll just say that.
It's
been a great run.
Come on, I don't want to laugh at my own jokes. That's not.
I
good.
laughed.
Okay,
Yeah,
I know that was a good one though.
That's pretty lame.
I'm on a roll tonight.
Joel's really patting himself on the back.
My arms are gonna be sore.
Holy cow, is your arm ever sore? Shoulder injury right there.
I think 59. I mean, I don't. Right now, looking at this chart, I don't think you're going back up to 59. If you do,
it got to 59 this morning.
Yeah, good. 58. I'd say I'd take a good hard look at yesterday's high as a potential area. 57.97. That was a high, so probably paper stacking up at 58. So I look at that as resistance. I wouldn't get real. Wow, Friday's low. That was kind of artificial low because of that crazy day on Friday. I would just look for, where do we close at? I'd use that close. Ooh, closes right at 57 too. Oh no, it's up $1.75. So you got some room down to the close. If you're shorting this, see what happens at the close. Strong day yesterday. I don't think you're going to see that 2-day low, but hanging up here right now. That's for sure.
Let's hold it on. We'll see what happens.
Holding on. All right. Is Misha in the house, or are we going to do a ticker?
One more ticker.
She is here. Let's bring her on. She is here, Misha Schneider. Before we bring her on, a reminder: hit that like button, everybody. We appreciate the likes, all the chats, all the comments. Hit subscribe, hit share. Share it on Twitter, share it on MySpace, on GeoCities, whatever websites the kids are on these days. I don't know. All right, let's bring on Misha Schneider. She's the Director of Trading Education and Research for Market Gauge. Mish, good morning. How are we doing?
Good morning. Well, coffee in hand, doing great. How you guys doing?
That's good. We also, well, Dennis doesn't drink coffee, but I've got my coffee here as well.
Thank God.
Thank God for that. Mish, how are you doing in these markets? Been an interesting few weeks.
We've done really, really well because after the initial flood of buying in the early part of the year, we've really kind of taken it easy and picked just a few sectors that we think are hot after correction. Like, for example, we got long Canaan Inc., which is part of blockchain technology at China.
Oh, CAN. Yeah, we're familiar.
We got long on Friday at 1560, so it's trading at 2260. I mean, it was a 50% rise in a day. So, and that was all I bought for really since like a week. So we've just been really, really careful. And I think that's the key here is if you're going to buy on a correction, make sure it's in a sector that you think is hot and for a good reason. Obviously, anything to do with Bitcoin, blockchain right now is still hot. If you're going to be looking at things like electric cars and battery and energy distribution, that could be hot. But then again, right now it's been a little bit out of favor as oil has perked up a little bit. One thing that's really interesting is, we have all these quant models that we've developed here at Market Gauge. And one of the models, it's the ETF sector model, is getting out of clean energy and into regular energy today. And I thought, wow, that's the algorithm is telling you something. So, really, I think the bottom line right now is kind of take it easy because we have a lot of issues floating around the market that need to be resolved before we can figure out whether we're going lower or going higher from here.
We're on the line with Misha Schneider at Market Gauge. Misha, I don't want to go into the whole modern family with you, but you've been talking about the small caps for a long time, and they finally had their day, and a little bit of a comeback by the big caps here over the last day or two. Big caps outperformed for years and years and years, and now the little guy's fighting back. Is this just an aberration here, or is it the start of a 2, 5, 10-year trend?
Well, it's definitely not an aberration because it's been going on for months now.
Yep.
And as you know, you mentioned the small caps, so the Russell 2000 in my economic family is granddad. And there's a reason why he's granddad, because he really is the granddad of the US economy. Because 2,000 small cap stocks are all in the United States. These aren't the companies that have major presences in foreign countries. They may have some, but essentially the manufacturing happens in the US. And that's why I've always been watching that as the best indicator of whether or not the economy is going to look to improve. And that's what Granddad is saying right now. We're seeing some of the numbers follow suit with industrial production, manufacturing numbers doing better. And the big tech, which was leading for years, certainly helped the market, but it didn't really reflect well on the economy as much as I would have liked to see. And so I'm thrilled. Whether or not it continues, I think we need to see us get over this hump right now. Market desperately is looking for something either from the Federal Reserve in the way of maybe possibly QE, which they haven't talked about in a long time because of these yields going up, or certainly by the government with the stimulus and the 1.9 stimulus package, and then potentially infrastructure behind that. And I know there are a lot of people who think that's, oh, wow, that's going to be inflationary and blow the markets up and inflation's going to go out of control. But at the same time, you can see how fragile we are here, because last week the floorboards got a little creaky once those yields started going up and the conversation about the stimulus started to stall.
So, Misha, who or what are you watching right now as your market leader, as your signal?
Well, I'm definitely watching transportation very carefully, which sort of goes hand in hand with Granddad, because where he may be the supply side, and I refer to them as people because they've been my family for so many years, but where Grandpa may be the supply side of the economy, transportation is really the demand side of the economy, right? We know we can measure how robust goods and services are moving through the transportation sector. Charles Dow said that many years ago. And so I think you really have to watch that. You have to see the consumer demand remain robust. Confidence has been better. Retail sales have gone up. You've mentioned now all of a sudden Kohl's reporting this is a big week for retail. That's going to be an indication. But I've got my eyes there. And then, of course, like everyone else, I've got my eyes on the yields right here because the TLTs took quite the dive. Looked like they were going to reverse last week, and now they're down again. They haven't taken out last week's low. So the Fed needs to, I mean, I can't believe I'm saying this, but if the Fed doesn't come in and do some supporting of the bond buying program here, I think that we'll start to see with yields going up, may help the banks, but for the consumer, it's going to get a little bit more expensive, and that could hurt. We'll see.
Have you ever seen a disconnect between the market and the Fed? Is what we're seeing right now. I mean, the bonds are just getting killed. The market's telling Mr. Pump and Powell that rates need to go up, and he just every time he comes on the horn, he's just like, no, we're not going to do that. Have you ever seen that kind of disconnect between the Fed and the street?
Not really. I think this is classic. And that's why I've taken a big giant step back before we start loading up on stocks here. I've been very long a lot of the commodities. I think we talked about that last time. Still long corn, wheat, DBA, sugar, coffee. We've taken profits along the way, but we still have a core position in all of those. And I think even if the rates go up, but one of the things that it's reflecting is this fear of inflation. And the inflation not looking like the classic inflation the Fed looks at, there's another disconnect. The Fed looks at it through really the labor market and the personal consumption expenditure. And right now with oil being still relatively cheap, that they're saying no inflation. But if you look at the food prices, and the prices of industrial metals like copper and steel and lumber and housing prices. I mean, it's insane here what's going on with housing prices. This is a double-edged sword with these interest rates, because if the interest rates start to creep up, it'll affect the market. It'll also affect the housing market. And that in turn could really, I think, send a very negative message to the overall market that things got too heated too fast and we're really much more fragile, which is what the Fed is saying. But they don't have much control right now what's happening in these short-term yields. They can't do anything. They can't lower the Fed's fund rate. The only thing they can do
Well,
is
they can go below zero.
they can, but they probably, yes, good point. But they may not. But what they might do, and it would be amazing, but they might, and the only thing really they have left besides going below zero, as you say, is QE. So it's going to be interesting right here. I would tell people to be optimistic and watch the oil market too. Obviously, that's a factor. But at the same time, don't go crazy right here until we know that we can get through this hump.
Beans in the teens. I haven't said that in a long time there. Look at that.
Oh,
9-month winning streak for soybeans. Is it going to be 10? Looks like it could be a little bit tired here. Potential double top on the monthly chart, at least in the soybeans. But boy, I haven't looked at those commodity in a long time. Just talking about some other any other sectors, some that haven't maybe left the station yet on the rally, or maybe if they haven't left, they're not going to leave. Any of the laggers, anything that you've been disappointed in?
Well, before I answer that, I just want to say something about the beans, because right now Argentina and Brazil are in a very, very fragile situation themselves in terms of the weather. As we know, the crops have been hit anyway because of just the supply chain disruption and lower production, et cetera. But now they're heading into their drought season. And I was listening to somebody in Argentina say that if Argentina and Brazil do not get some very desperately needed rain, that could really, really cut the soybean and corn production. And of course, we know China demand is huge. And so this double top could also turn out to be
a blow. Yeah, weather is huge. We don't talk commodities enough, and the weather factor, you got to keep your eye on that. Excellent point there.
Well, one thing we can't control. What can't we control? We can control the rates. We can control the dollar, and at least we can try to manipulate things. When I say we, I mean the powers that be. But we cannot control Mother Nature, as we have learned over and over and over again. And so that's why I love commodity trading, because ultimately, when things get out of control, beyond our control, that's when you see those things fly and you can make a lot of money. And I like to say, I don't like to make money on the backs of something bad. But what we've been doing is giving a lot of money back to food depots because people are still starving. So if you're going to make money in food commodities, give it back by helping people who need to eat. Anyway,
thank you for saying that. No, Misha, our chat has got a great memory. You were on 2 months ago and you mentioned seed, and our chat remembers that.
Our chat knows everything.
Do you have any updated thoughts there on SEED?
Well, it was going to be one of the things that I was going to say that I'm still so bullish on. I'm so bullish on AgTech. I think that's really the future, regardless of what happens right here with the crops and the supply chain and the demand and anything else that might happen in terms of hoarding. AgTech is here to stay. Seed is a Chinese company called Origin. We have been in it. We're actually looking to add to it. It's been sort of fluctuating here between 21, 25. And I think it's coming in, it's like 23.50 bid pre-market, gets through 25.50, 26. I think we're going to add to it because we've already taken some off. I'm very bullish in seed. I'm also very bullish in App Harvest, APPH, because that's actually in the United States. It's farming that's being done from an alternative way through greenhouses to produce organic, healthy, and cheaper produce. Right now, they're just doing tomatoes, but they're looking to branch out. Huge backing behind them, including what's her name? The woman who's in jail. Oh, all of a sudden, I'm having blanking on her. Martha Stewart.
She's not still in jail.
Well, that was.
No, she's like the only person.
Free Martha.
Free Martha.
I actually have a friend who went to the trial.
Another T-shirt match.
Wait. Listen to me. Keep going. Sorry, say that again.
But no, I have a friend who actually went to the trial during that whole Martha Stewart thing in New York years ago.
Oh man.
But anyway, I mean, so App Harvest is a big thing. I keep getting these sense that Bill Gates, who we found out recently is the largest owner of farmland in the United States. I mean, I thought, wow. He can get involved with some of that existing ag tech. So yeah, I'm big into the ag tech. What else am I really looking at here? Well, I'm still really into 3D printing. 3D had their report come out, so it's coming in a little bit lower. I'd be looking to buy that if it gets anywhere close to about $30-$31 a share.
Why did 3D have such a move? I mean, and obviously we can look here. This has been a stock that was $80 back in 2014. It's been dead money for 5 years, and all of a sudden, at the beginning of 2021, it goes from 10 to 60 in about a month. Was this a Reddit thing? Like, what do we know why 3D printing all of a sudden just decided everybody thought this is the future when they didn't think it was the future for the last 5 years?
Well, there was a few reasons. Number one is from a fundamental standpoint, there were definitely improvement in terms of the revenues that they've said that they were going to report. There was some guidance that showed that they were going to do very well. Well, the earnings were a little bit disappointing, but that was a factor. Huge short float there, as you said. There was some Reddit buying. Kathy Woods came in and bought DDD. And I think after it floundered like around $5, $6, $7, it was just ripe for a move going up, as 3D printing is also another one of those future megatrends that I think could explode over the course of the next several years. And it's great technology. So anything that's sort of technology that's either been ignored or new technology has been definitely on the radar of Kathy Wood and ARK. And if it's got a huge short float, as we know, on the radar of the Reddit group. So all of that. And we've been bullish too. So we've taken several profits. We're holding a little teeny bit of a tail here. And again, we either get stopped out under 30 and we bought it like 8, or we add at that level. So I really like that area too. So 3D printing. I'm also really interested in data collection.
Okay.
Because that's another huge thing that's going on all over the world. You think something and then you open up your Facebook page and there's an ad for it. You didn't even tell anybody that you.
Yeah, how does that work?
Right? Well, that's all done. That's all algorithms that are all done through data collection. And because what's happening in China right now is it's going from a service economy into a more consumer economy. What they're doing is they're really tracking the preferences, particularly of women, but not just women. And this tracking of the preferences that we all have, whether we buy something or we mention something or we Google search something, gets tracked. And that's data collection that is huge. That is the real future of retail as well.
So you have a stock?
Are you talking talking Trade Desk or PubMatic or
my personal favorite is Datadog, maybe just because I like to say it. but DBOG, because it really did take off. We did great on that. We bought it at like 95. It went all the way up to like 115. We're gone from that, and we're watching it. It's sort of basing here between 95 and 100. It's high on my list to be watching right now. Again, I'm being cautious all around, but this is sort of my list. And then I'll give you one more that I'm really interested in. It's another company. It's a blank check company that it's SVAC, Starlight.
That's the Starboard Value one,
the
right?
Starboard one that they just bought.
Yes. Thank you for my memory of detail sometimes in the morning is a little fuzzy, but
I've got a small piece in this still left
as do I.
Did you hold on? You held on.
Really?
Me and Spencer is still on.
Oh,
we were on this pre-SPAC, and then wow, I buy a lot of the SPACs pre-deal and then sell into the pop. I did sell a lot of this into the pop, but I held a piece because you know why? The company they were buying, same thing. I was like, I kind of like that idea, so I didn't mind the target.
Terra, CYX Terra.
Yeah.
And what are they doing? I mean, they're going into the global retail space to connect all this data. So it's not quite data collection in the same way we just talked about with Datadog, but it is definitely in terms of connecting all of the different global retail people to be able to talk to one another through this software is why it's got huge amount of money behind it with this blank check company. We haven't gotten in yet. It's funny. We're looking to get in. I've been watching it so carefully because it's just sitting there. Yeah. But as soon as it shows any signs of life, we're in. So I'm trying to go more on the social disruptor technology and not necessarily the classic stuff that we've always been into. I mean, we've got some Wells Fargo, we've got some classic stuff. We were in China, we got out. Yeah, I mean, I think that we're looking at food commodities, new technology, blockchain technology, and AgTech. That's my. And
I got one more I want one more sector, and you've mentioned AgTech. What about the marijuana sector?
Excuse me. Oh my God! I almost choked on my coffee.
Joel, what did you do?
No, yes, thank you for reminding me about that, Joel. Yeah, we are totally bullish in the cannabis sector. And I think that the fact that it's sitting here is another great opportunity to keep your eyes on, because it hasn't gone anywhere. It had the big move up. And again, Tilray in particular, attention of the Reddit group. Now Tilray's been sitting. We have a small position. We're looking to add to Tilray. I think that you've got Virginia now passing legislation for recreational marijuana. I'm in New Mexico. It just passed the House in New Mexico. If it gets through the Senate, New Mexico is going to go legal. I think we have something like 33 states now, medical, and 15 or 16 states recreationally. You've got Tilray being looked at in Europe now, Portugal, France, England, for doing research on medical marijuana. Yeah, that's another one. Thank you. Yes, that would be my other place.
All right. Misha Schneider is the Director of Trading Education and Research for Market Gauge. You can find her on Twitter at Market Minute. Misha, it's always a pleasure to talk to you. Thanks a lot.
Thank you, guys. Have a great day.
Mish.
All right.
Always nice to have that female voice, the cheery.
What, to balance us out is what you're saying?
Yeah,
it's great
my raspy voice, and Dennis.
She really knows her stuff too. I mean, she's just a great guest because she knows so much. I mean, there's a guest that just knows so much about everything. So,
all right, let's do some ticker time from the chat. There's a few tickers that chat was talking about. I want to cover them. I tried to mention this earlier. TIGR, guys. This is one that Jason was long. I do not know if he still owns this thing, but he was betting that he was seeing what's happening over in China as far as trading activity and retail trading, and this is a way to play that. Pull the chart up here on my thing. Guys, thoughts on TIGR? This is a Chinese retail.
You at least got a line in the sand now, and that would be 2 days low, the 2260 low. So if you want to take a shot, you're leaning on the 2260. 2260 goes, you got to get out. Trading, again, is all about discipline and knowing when to get out when your trade is moving against you. How do you know when the trade is moving against you? It either takes out your original out plan or you start losing money. So, I mean, I look at this. It's a stock that's had a nice run, and then you got a healthy pullback here. So the chart is still healthy. I don't know anything about the individual fundamentals on this, so I can't comment to that at all. I would just say the 2260 level from 2 days ago needs to hold. That's
needs to hold. You did have like a couple lower lows, and then that low hold. So I'd like to set up there. What the bulls need here is to get back over 30. If this is just a healthy pullback from 38 to 22, we're going to catch a bid here. We're going to go to 30. We're going to challenge 30. We're going to close over 30 and we'll take a run at 38. So classic, pullback here. Is it ready for a retracement? That's what you got to find out. Don't really like it under this 20. I mean, you got another couple lows to lean on, but look at the way they're spaced out there. So there's not 2075, and then you get into these three lows. So let's see if it's ready for a retracement and get back up. Where's those pair of highs at? Pair of highs, nothing real close. Next target, I mean, first things first. Let's get to yesterday's high, 2643.
There's 100 stock charts, maybe 500 stock charts that look the same, where you've had ridiculous runs.
Yep.
And now you've had pullbacks here. And think about the 50%. You can just bring up any of these smaller cap growth names like Jumaya, Fubo. They all look the same. So they're all going to move together and continue to move together too, to a certain extent, obviously different. But, overall, that's a small cap growth. And that's a small cap growth name, whether it's China, obviously individual, news is going to matter. But, I mean, overall, these things are all tracking together.
Someone mentioned NIO. They reported, right?
Yeah, let's talk it.
Oh, yeah. Let's go over NIO. Oh, we didn't even do Zoom yet, guys.
All right, let's do NIO and Zoom.
All right, geez. NIO, I don't know if you care about the earnings because this company is so early on. I'll just give you the delivery number. They delivered 17.3 thousand cars last quarter versus 8,000 in the same quarter a year ago. They're guiding for Q1 deliveries and around 20 to a smidge over 20,000 cars delivered this quarter. Q1 sales guidance going to be in the $1.1 billion range. As far as the Q4 numbers, whatever. The earnings per share, they lost 14 cents, sales $1 billion. I don't know.
You got some support in the mid 40s, that low of the move 41.66. It's a long ways out, though. I feel like you're coming in here. It's like a coin flip. This is a tough chart.
This is a tough chart. Easier to give you the resistance for now, and that's yesterday's low at 47.63. The close above that. But first things first, you got to get working into get into yesterday's range. If that doesn't happen, I don't know. It just feels, I mean, at least over the last hour here, you have a step down seller, and he is being pretty patient. He's come down every bracket over the last 45 minutes, and you got the pre-market low. It's just the way it's hanging out, the way that it doesn't look. I'm just not real convicted that this one, you buy it here, you can lean on the pre-market low. That's not even giving you much room. So there you go. That's the big number. The big number is the one. Wow, got down to 41.66. Just a lot of air pockets in here. But 2-day low 44.62. That's $2 away. So we'll see if we get there.
What about Zoom, guys? They blew it away last quarter. Earnings per share of $1.22 versus 79-cent estimate. Sales of $882 versus $811 million. So they blew away the estimates for Q4. They also gave a lot of guidance. They gave Q1 EPS guidance that was well above the estimate. They gave EPS guidance in the high 90-cent range versus a 72-cent estimate. They gave EPS guidance for the year that was in the mid $3 range, above the $2 estimate, or $2.90. And they gave sales guidance that was also above the estimate. So everything was above the estimate last night for Zoom.
Again, is this as good as it gets? That's the question. I mean, they need to come out with some other product.
It was better last October. Can tell you that.
Oh, so it's not even as good as it gets. So it's better. So I don't know. 450. That's your level. That's a line in the sand. That's where it's really struggled. Does it get through 450? I know it did in the pre-market. It needs to get back up through. That's your level. So if it can't get up through 450, that I think is a clear resistance point.
Also, I think on this one, I think that some people got caught this one. It looked on Friday, it looked like, we're going down, right? And that 360 area, people are playing. I'm going to bring in my short around 340 ahead of the report, and no can do. Real strong day yesterday, so people were left scratching their head on that. Really, you have some confluence here. You have your pre-market high at 458.19. My rough 50% retracement is coming in at 457, triple D. I'm like the 460 area. Also, you gapped up to that area. How many people are waiting for that gap fill at 460? So that's just short term. That just looks like a sell zone to me if it gets back up there. Might not even get back up there. A lot of people waiting to get the money back in Zoom. Yeah.
Psychotropic Thunder talking about C's. SeaWorld's making new all-time highs.
Can you believe that?
This is this market. It's like so disconnected from all fundamentals. It's like, oh yeah, we're going to get out of this pandemic and we're all going to see Shamu and SeaWorld. That's, the fundamental thoughts behind it. But the real reason is, what's the short interest on this puppy?
It's probably, it's always
been higher.
It's always kind of high.
I mean, you still got this squeeze going on where they're still attacking these. I don't want to be short anything that's got like 20% short interest or more, because it just seems like eventually Reddit finds it. I mean, I'm only showing 7, so I'm actually showing quite light
that's
again.
What I see too.
Yeah, is that what you're showing too?
Yep.
It doesn't show super high, so maybe that theory's got a hole in it, but I don't get it at all. I mean, if you're trading on fundamentals right now, you got to be banging your head against the wall because nothing makes sense. You can't even think about fundamentals. You can't think, oh, here's an amusement park that is struggling, probably not open. I don't know how many SeaWorlds they have, if they have even more than one. But what else do they do besides the theme park? What else do they do? Do they have other businesses? Is there like SeaWorld Channel? Is there SeaWorld app? Is there like a SeaWorld like streaming, so we can watch Shamu swim around in his pool? I don't think so. I don't know. Maybe they do something else, but man, what a gift. What a gift. So I don't know when this party ends for SeaWorld, and the market's stupid enough that these, fundamental, they're so disconnected from fundamentals, price can go anywhere. I mean, when GameStop can continue to be $117, the whole, you can't even worry about fundamentals.
I'll be damned. SeaWorld owns Sesame Place, which if you're not from the Northeast, you wouldn't know what that is, but it's a Sesame Street themed amusement park that I went to as a kid.
Cool.
I'll be damned.
So they got a couple other parks.
That place,
I don't know.
Too. It was kind of dirty. I remember that. I remember coming out of that place and my feet were like, it was. I don't know
the Sesame Street one or the SeaWorld one?
How can your feet be wet at SeaWorld, man? Because you're in the water. No.
Hey, I liked SeaWorld as a kid. Would I buy the stock at $50? No. It could go to 100. It could do anything. Yes. I mean, the stock's making. I don't short stocks. Making new all-time highs. Is this a new all-time high for SeaWorld? Is it really? It's a 7-year high.
I just want to go to Blizzard Beach.
We know. We know.
Huge slide.
Yeah, we know.
And I'm going to make Lisa go down, even though she doesn't want to.
We don't even talk about like other assets on this show, but like, have you guys seen this like NBA Top Shot thing? Do you know what that's about?
Oh yes, I have. Have you heard about this, Dennis?
It's not just the stock market going crazy. There are other assets out there that are going absolutely like berserk. It's basically like a blockchain based thing. It's a non-fungible token, which means you can buy it and trade it on the blockchain. But it's highlights. It's highlights of basketball players that would otherwise be freely available, and you get a pack. Like a card, but it's a digital highlight, and you can resell it. And these things are going for like thousands of dollars.
Yeah, video clips. It's crazy.
It's insane.
Everything is all it's a speculative bubble, and everybody's just saying, okay, there's going to be another buyer for something tomorrow. I should make a triple D coin, and come out.
Should.
Or we should make a pre-market prep coin. I mean, this is just the market that we're in. Let's be honest here. I'm long Bitcoin. Is this going to be, like Citigroup with their report? You think we're all transacting in Bitcoin? And great from FT too. Did you see them debunk the Citigroup report there? That this is and I'm blowing Bitcoin. This is good for me, but they said in the report that 36% of small businesses in the U.S. are accepting Bitcoin.
There's no way.
That's what Citigroup said.
There's no way.
There's no way. You're telling me 1 out of 3 small businesses are accepting Bitcoin as a form of payment? Where did they get that data from? That's what Financial Times was saying. They threw it right out there, and they're like, this is like just ridiculous. This isn't true. This is Citigroup, 108-page report.
They probably did some survey of 100, and they extrapolated from there. But
30, that's just stupidity. I mean, there's no way a third of businesses are accepting Bitcoin as a form of payment. So I don't know what that was all about, but props to Financial Times for pointing that out, because I was like, that is absurd. So I love the Bitcoin story. The reason I bought Bitcoin in Thanksgiving of 2020 wasn't because I thought we were all going to transact in Bitcoin. It was because I thought the story was going to get hot. That is what has happened. This market is nothing to do with fundamentals. It is all about a story. We had Andrew Left on our show said the same thing. He said, story is all that matters. Put that on a t-shirt, because right now, that is all that matters. One day, fundamentals will matter again. But in this market, it is story, and that is it. SeaWorld's got a hot story. We're reopening. We're all going back to SeaWorld. Who cares if they're burning cash? This market is all about a story. Rocket story starts to get hot. There's probably rocket emojis on Reddit, trying to give it. I mean, that's what this market is. It's all about a hot story. Everybody, it's back to 1999. It was the same thing. Like, remember Excite at Home? Do you remember that one, Joel? At Home?
Yeah, I do. Yeah.
It was cable internet, and it was going to change the world because we're all going to cable internet. And you know what it did? We did all go to cable internet. That stock went from $5 to $200. The market cap was billions of dollars because they were the cable internet provider, and eventually it went bankrupt. So, I mean, the story that was carried by a story. The cable internet story was hot. Internet story. AOL. Time Warner, AOL became bigger than Time Warner. Time Warner bought them for that ridiculous market cap. Or AOL bought Time Warner. I don't remember which way it was, but I mean, this is what we are in. We are in the age right now, information age. And information's passed around through social media and, everything, everybody's pumping out their story over here. And, it's all about a story right now. But eventually, fundamentals do matter. So if you're trading, trade with the story. If you're long-term investing, just be careful. If you're buying stuff, on hopes and dreams, eventually a lot of those hopes could get dashed. So just be careful. That's all I'm saying.
Is that a Shark t-shirt you got on, Dennis? Shark?
It's Daddy Shark.
Daddy Shark. Okay.
Yeah.
Right.
Wait, what about for those of us who bought and hold for 20 years our Beanie Babies? What would they people like me?
Well, I got those. My mom's got a whole pile of those.
Yeah.
So you get some money for those Beanie Babies?
Yeah.
I'll sell those Beanie Babies. My mom's got like the princess one, like the Diana princess one. Let's go.
Let's go.
Mom, if you're listening, we got to get... Mom, we need the Beanie Babies now. We're selling those things. $100 a baby. Let's go.
The Beanie Babies now.
The sports cards market is blasted off. I got a bunch of hockey cards. I got to sell those things too. Sell all this stuff. But you know what it is? It's that money is free and money's getting thrown around and it doesn't know where to go and it's trying to find a home and it's finding a home over here and it's finding a home in these speculative stocks. It's finding a home in penny stocks. It's finding a home in Bitcoin and crypto. It's finding a home and in sports collectibles. It's finding a home in baby Beanie Babies. It's just looking for something besides cash because cash is trash.
Yeah. I saw or I heard that someone bought some. I don't even know what player it was.
Hodl the Beanie Babies. Don't sell that.
Hodl the Beanie Babies. My mom's been hodling the Beanie Babies for 30 years, man. Whenever the hell they came out.
Joel,
we have garbage bags full of those things. You want Beanie Babies? We'll sell them.
Joel, what were you going to
say? We're starting up Beanie Babies selling,
pre-market prep token.
Yeah.
I don't know.
I heard, I can't remember. It wasn't even like a really big player, but it was I don't know if it was a video or something, but someone bought it for like 22 grand. And then the next day they flipped it for like 40 grand.
Yeah.
So there you go.
I don't. The real estate market too.
Oh,
I mean, it's gone just silly. I don't know like where you guys are, but up here in cottage country, there's places that we're selling for like literally in the town, not even on the water. The average house in the town where I was like 5 years ago was 200 grand. It's like 600 grand now. Like housing prices have doubled in like the last 3 or 4 years, like doubled, and maybe in some places even more than that. I mean, there is just money being thrown around everywhere right now.
Yeah. The Wall Street Journal has had a number of good stories about people just buying houses.
My mom says her Beanie Baby's not for sale. She's listening. The princess beanie stays. She's hodling the Beanie Babies.
Diamond hands, baby.
Diamond hands on the Beanie Babies.
All right.
She said no in 3 separate texts.
It's gonna
Princess stays, not for sale. Hodl those Beanie Babies.
All right. All right. It's going to be a wrap for our show today. Thanks to our guest, Misha Schneider from Market Gauge. Thanks to all of you in our chat. Once again, this show is available as a podcast. If you're listening to this show via podcast, please remember that all the information on our show is meant for informational purposes only, not for investing or trading advice. Opinions expressed do not represent those of Benzinga, merely the hosts and guests and y'all people in the chat. Hit that like button once again on YouTube, on Facebook, on Twitch, wherever you are watching this. We appreciate that as well. Check out our swag store. That's at swag.benzinga.com. Email us with any questions, comments, concerns, premarket@benzinga.com. I think I've said my spiel. Yes, I have. So here's how things is going to go for the day. Pre-market prep. It's going to be a wrap for that. Thanks a lot, Joel. I will talk to you at 3:30 or so in the afternoon. Good. All right.
Adios.
I just cut Joel off. Sorry about that, Joel. So here's how this is going to work. We are doing separate streams and one long stream today. We're doing both. We've taken your feedback. Some people liked the separate stream. Some people hated it. So we're like, let's just make everyone happy and do both at the same time. So this stream, I say this stream because there's two. one of these streams is going to end essentially, and when that happens at 9:30, Get Technical with Neil is going to start. You'll know it ends. I guess if your stream ends, then you'll know. If you're watching the pre-market prep on YouTube with 1,500 viewers right now, that stream will end. If you're watching the all day, it's called on YouTube. It's called Benzinga All Day Stream. That's how you know if you're in the all day one or not the all day one. The all day one will automatically, there will be a slight transition, but that will go over to the next show at 9:30, and pre-market prep, that stream will end for the day. So that's how we're going to do things going forward. You can do the all day stream, you can do the individual streams, whatever floats your boat, whatever works for you. And we're going to see if this works, because we're trying to make you all happy. So we've taken some feedback and we're going to try that for today, and hopefully it goes well. I saw somebody in chat say that the link to the Kathy Wood contest is not working. Please tell me if that's true. I'm putting the link back in chat right now, and I'm actually going to pin it to the top of I'm going to put in both chats here. Put in both, and here's we have so many damn chat rooms. Putting this link in every chat room that I can. Okay. That link is again to submit your question to Kathy Wood. The interview is going to air tomorrow. It's going to air live tomorrow at 2:00 Eastern time, right here on our YouTube channel. Jason Raznick and Kathy Wood for about an hour or so, I believe. And yeah, submit your question. We're going to draw them at random. And you can have your question. Obviously, we're going to, if it's not a serious question, we're not going to ask it. But if you ask a serious question and it gets drawn, it will be asked. And we are hoping that this gets people excited, because we've been trying to get this interview nailed down for a couple months. She's a very busy, sought-after person. So we are very excited to have Kathy Wood on at 2:00 tomorrow. What else did I want to say? There's a few other programming notes I wanted to say here. I'll just go over today's schedule, because the schedule is always changing and we're still trying to nail things down. But we've got Get Technical with Neil Hamilton at 9:30. Oh, this is what I wanted to say. Okay, March is Women's History Month, so beginning today and for the next 3 Tuesdays, there's 5 Tuesdays in March. We're going to do today, the 9th, the 16th, and the 23rd. So for those first 4 Tuesdays in March, we're doing a special show at 10:30 Eastern time, a women fintech show, with one of my colleagues. Her name is Jordan, and she's going to interview. Every show will have 3 different people from around the fintech or financial services industry, talking about their backgrounds, how they got to where they are. There is still a very large gender gap in our industry. We are trying to close that. And if you know anybody who is interested in joining, women, it doesn't have to be, it could be women or men. It'll be at 10:30 a.m. Eastern time right here on YouTube. It's called Women in Fintech. It's an hour-long special. Again, for the first 4 Tuesdays of March. So the 2nd, the 9th, the 16th, and the 23rd. And again, the idea is we're just trying to promote diversity. We something we could all do a better job at. And women are making more money than they ever have. They're controlling more of the household finances than they ever have. And yet there is still a massive gender gap in this industry. So the link, great question, Eliana. If you go to youtube.com/Benzinga, you can see right there at the top of the page, it says upcoming live streams. Okay. That's where all of our streams are scheduled. There is a link right there. I'll put it in chat for you. How about that? I'll make it one step easier. That's the wrong one, Spencer. Here we go. Here is the link in chat 1, chat 2, chat 3. Gosh, so many damn chats. Chat number 4. You guys, I can't keep all these chats straight. I'm sorry. So highly recommend that. This is going to be something that we've been wanting to do. Wish we had done it for February, but we're doing it for March for Women's History Month. So today we've got 3 guests. As I mentioned, every show will be 3 guests with our host Jordan, just going through how they got to where they are, advice for women who want to break into the space, and we hope that we hope that it inspires somebody, because that's kind of the point. We're just trying to promote diversity, and we all need to do a better job of that. I think we all get so wrapped up in our day to day and in the market, and the stock is up and Bitcoin is up and whatever, this is down, and it's easy to lose sight of the big picture, and we're trying to do that here. So okay, that'll be at 10:30. I think it's going to cut into SPACs Attack a little bit, and maybe Mitch can come on and clear the air, because I don't know if you're here, Mitch. Oh, you are here. Hello. Is SPACs Attack gonna get bumped to half hour, or what's the plan there?
What's the plan there is SPACs Attack's going to be starting at 11:15. We're going to be doing a little bit of headlines until we get into our interview, which is Bullhorn CEO, guys, BHSE.
BHSE, the CEO of BHSE on SPACs Attack today.
Don't miss that out, guys. That's going to start about 11:20, 11:30-ish, somewhere in between there. What we're going to do is we're just going to run through some headlines as the women in fintech finish off, and then we'll be switching into our interview.
Chat's funny. We can trade stocks, but we don't know how to find chat. That's exactly it. Thank you very much. Okay. Hey, that's the life, right? Okay, so CEO of BHSE, that'll be on SPACs Attack at 11:15. Rob Stryer, Bullhorn Holdings. We've got the Zinger Nation Power Hour at noon, as is always there every day. Robert Roy, he's going to do options at 12:30. We've got Steve Kalajian, who's been on pre-market prep before from Ticker Talker. He'll be on at 1. And then another options guest at 1:30. We've got the that'll be options Mike. We've got the crypto show, the BZ Crypto Show, which is airing 2 days a week, every Tuesday and Thursday. On today, 2:00 Eastern time. Myself and Catherine Ross, who is the Benzinga crypto editor. Biotech Buzz at 2:30. What we're going to do with Biotech Buzz, actually, starting today, we're going to scale it back a little bit. 5 days a week is a lot. So what we're doing starting today is Biotech Buzz is going to air Tuesdays and Thursdays at 2:30 right here on our YouTube channel. So Tuesdays and Thursdays starting today. So you'll hear from Vivi today, and then again on Thursday, and then repeat ad nauseum. 3:00, my ETF show. Guys, I've done 1 ETF show so far. I think what I'm going to do is end up doing the show 2 days a week, but for now I have it just on the schedule for 1 day a week. What I'm going to do for the ETF show is, if you missed the Benzinga Cannabis Capital Conference on Thursday and Friday, I'm going to re-air a small part of it. I'll do some ETF news and some headlines, and we'll take questions, but I want to re-air a segment with Advisor Shares. They explained their 2 cannabis ETFs, and I'm going to re-air part of that if you missed it last week. That'll be at 3:00 Eastern time until 3:30. We've, of course, got pre-market prep at the close. Joel, myself, and Rob Friesen from Bright Trading. If you don't know Rob Friesen, Rob is Dennis's boss, basically. So he... Actually, I think he's Dennis's boss. Him and Joel go back years and years and years, just like him and Dennis do. So that'll be at 3:30 or 3:40, and we're starting a new show today. We're gonna experiment with something. Ryan Rosbiani, who was on Get Technical yesterday, he's been on a couple of our shows in the last few weeks, is going to have his own show at 4:00 Eastern time. Just walking through what he's seeing, what he's trading, setups, and we're trying to experiment. We're trying to bring new shows on. We asked yesterday in the middle of the day what kind of shows y'all want to see, and the biggest takeaway was y'all want to see a fundamental analysis show. So we are working on bringing one of those to you, a show basically about how to do your DD, right? How to do your due diligence, what to look at, financial statements, ratios.
Does that matter anymore?
That's what people want. That's what the people want, and I have a feeling it'll end up being more of a long-term focused show, because nobody who's trading uses the fundies. Like that's not really a thing. I think I've never met a trader that's like, oh well, the PE just went higher. Then I'm going to short it. It's over. I don't know no one who does that. Maybe they do. But I think what people want is more of a longer term, either like long-term swing trades or even just investing and how to do your fundamental research. So we are working on bringing that to you, and we'll let you know when that happens. But
All right, I'm giving you the boot, Spencer. I'm
give me
getting
the
to
boot.
stocks. I'm getting to stocks. People want to talk some stocks here. Let's get back into stocks here.
Okay.
10
all
minutes
right.
before the bell.
I'm going to let you run with this. I'll see you all over on Get Technical. I'm not bad.
Yeah. Let's get to some stocks, guys. So what's going on, guys? Anything you guys see on the Gapper scanner that you guys are taking a look at, let me know in the chat. I can take a look before we get to the open here. But one thing I definitely wanted to do is just kind of look at the Gappers and see what we're seeing here. One that's known, SOS, is having a bounce back from $4. This one's going to be interesting today, as you know, this one made a massive move and then pulled back to about 4, and then it's been bouncing up. It's a little bit high on the day, so it's closer towards that $8 resistance. Be careful with that $8, but I think if it gets above 8 today and really holds with some good volume, it can maybe make a move back up, closing this gap up towards 10. So keep your eyes on that one, guys. Of course, Rocket. What can I say about Rocket, guys? This was my first loser of the year. I actually got out right here on this day to crack 20. I got in here around 21.30s and I was going to risk towards the $20. And when it cracked that 20, I had to get out and I took a hit here. But this is just a story of that washout, right, guys? So they washed out a lot of retail traders on this day here, the 23rd of February. And it went down towards a low of 1870. So yeah, if I would have been holding, that would have been really scary that day, because I would have been down a significant amount going past my limit. So I'm kind of happy that I got rid of it. But as you guys see it, it's back up there, $27 now. Big rip. People were waiting for this one for a long time. I actually made some money on this first pop, tried to buy it back to get the second pop, and I got stopped out. So hey, that's the way it goes, guys. But it's looking good today as it's getting up there towards 27. But I think we could get a hard pullback coming up soon. Just be careful in Rocket. All right, seeing some mention of some other stocks here. Of course, Mara. I mean, but that's just a Bitcoin stock, so I'm not going to really pay attention to that. I don't see anything new there. Let's take a look here. He's moved down a little bit. I'm seeing Fubu here showing up. I know a lot of people like watching this one. I saw this one being mentioned here. MVIS. I saw John Shitan going ahead and mention this one. So let's go ahead and take a look here. MVIS. All right, guys. So MVIS, guys, let's take a look at a 15-minute here, see what I can see here. So really quickly, I can see, you know, right out the top, it's been ripping towards that 19, getting above that 19, and it really had this kind of 1 up, 2 up, 3 up, came down towards the level 14, and now really that 14's kind of the line in the sand between the bulls and the bears, and now it's getting above this 18. So I'd pay attention to see how it's going to react at 20. You know, every time it's come towards that level before, you know, we've gotten towards 21, but not much higher than that. You always get a little bit of a turnaround, so be careful in that area once we get up there towards 20. But definitely a big day, some significant volume. I keep an eye on this one. The only problem with this one is that it doesn't seem to be trading on a very close time schedule, but more along kind of this like kind of deeper time frame. If you go to like the 1 hour chart, you'll see this downward slope and then a pop up, but it could pull back towards this 18 today. So keep your eyes on this one. That's MVIS. All right, guys, let's keep going through here, see what else I see. I'm seeing a lot of BFT. That's a Foley stock. That's a SPAC. We'll keep that one for SPAC's attack. Fubo earnings after hours today. Thank you, Vegas. Appreciate you putting that up. All right, so PLTR, guys. A lot of people like this one. I know Kathy Woods like this one. So hey, guys, if you haven't done it already, guys, go ahead and sign up, guys, for the live interview and contest to ask Kathy Woods a question. I know a lot of people out there probably have a question for Kathy Woods, so I'll put it up in the chat right now, guys. Definitely sign up today. We're going to be doing this tomorrow, so don't miss your chance to ask a question to Kathy Woods there. All right, so I'm going to put this link up in there. It should be in both chats now. You guys should be able to see it. Let's go back to my stock here. So PLTR, I actually have the support line drawn out Let's take a look a little bit further back. Let's get on the daily or the weekly and see where it's going. So one thing I noticed on this pullback is that I drew out this line, right? And so I think it can come back a little bit closer towards this 2350 today. And that's kind of where I'd start measuring in some entries. But one thing I would mention, guys, is that you did get a kind of a big pullback here from the 40s down to about 25. So maybe it goes closer towards 21st, but definitely starting to see it level out a little bit. I would like to see this go sideways for like a week or two, maybe somewhere here between 24, 25, and just get some sideways action before it gets right back up. All right. Let's keep going through here. No worries, Max P. I'll get rid of the extra S in Kathy Woods so you don't get upset. Let's keep rolling through here. So I'm looking at FSR. This is a stock that is an old SPAC, one of my favorite ones. I actually was shouting this one out in the 15s, one of my story stocks. And man, look at this chart now. It's going to be definitely one of the charts that I missed because I got stopped out in the 14 area. But man, look at this chart now, up there almost at 30, and it's looking strong. I think this one could get the EVs started. So let's take a look here. XPEV. This is one that I'm watching to see when we're going to get that turnaround. I'm liking the support that we're near right now. So I'm starting to keep an eye on these Chinese EV plays. XPEV. You got LI you can look at. This one's getting interesting too, getting near that support. I would look for a little bit closer towards 24, but getting interesting. Let's see how NIO is doing today. I know it took a hit, after that expected earnings, but the real key is, can it hold the 40s on this pullback? It held it yesterday. Let's see what happens today. I had this kind of little area drawn out, and I want to see if it kind of holds this on the pullback and gets back up there. All right, so seeing mention of CCIV. There's not much there I can say about that one. I'm seeing XL. All right, so let's look at XL. I also saw Plug at the top, so I'll take a look at Plug right after this one. All right, guys, so this looks interesting. I like the turnaround here. Let's take a look at the daily chart. One thing I'd say is this did find a bottom kind of closer towards that 14. So I'd look for an entry closer towards 15 so I can risk about $1 closer towards that 14. But definitely a nice pullback in this one. This one needs kind of a catalyst to really get it going. But I'm looking at this one also with RMO and certain ones that I'm in. I drew out this support line before. It looked like it keeps holding. Maybe we get a third test and you get a chance to get in near that line. But I'm going to keep an eye on this one. That's XL. All right, guys. I know a lot of people are mentioning some SPACs, but I'm going to keep going through here and keep rolling through here. I got a question here from Max P. Do you use the same signals for non-SPAC stocks as you do for the ones that you cover on SPACs? Yes, I actually do. The only thing that I would not use on SPACs is that I used to do a lot of day trading. So I used to do a lot of day trading off the VWAP, and I would not do day trading off VWAP for SPACs. That's how I differ there. I'm seeing mention about INSG Bio. I see you. Don't worry. Let me get the plug first, and then I'll get towards that INSG, which is a 5G play. Looks like it's about to be 9:30, guys. The bell's rung already, guys. So I'm just going to really quickly take a look at plug. Looks like we got to bounce off 45. There's too much gappage here for me to try to get in here now. I would stay away from this one right now. It's kind of stuck in the middle, and I never want to be a pig. I always want to be either a bull or a bear. All right, guys. So it looks like Get Technical is getting started up now. Let me go ahead and pull this up, see if we got a live stream up here, and we'll be switching over on the all-day stream here. So that's going to do it for us on Pre-Market Prep, guys. Like always, hit the like button, hit the smash that subscribe bell down below. One of the things is if you hit that bell, you'll be notified the moment we go live. and we're going to keep working hard, whether it's the all-day stream, pre-market prep. We've tried to listen to the feedback, guys. So give us feedback. Let us know what you want to see, what you want more of, what you want less of, and how you want the show to run. At the end of the day, you guys run the show, not us. We go off of your feedback. So it'll be greatly appreciated if you guys put the feedback. All right, I'm going to start posting the link here so that we can switch on over to, if you want to switch over to the live stream of the separate show of Get Technical, or you can stay on the all-day stream. You guys that are watching right now on the all-day stream here, I'm going to go ahead and put the next show and pull up Get Technical. All right, guys, so I'm going to be ending pre-market prep here. You guys get on over to Get Technical. I'll put up the link here in the chat, and you guys get on over there. All right, guys, so you guys should be seeing it if you're seeing it on pre-market prep, and I'll see you guys next time on pre-market prep. Definitely, guys, smash the like button, move over to Get Technical. It's starting up. I'll see you guys next time.
Go ahead and go for it. So 5-9, let's take a look-see. I don't want to miss out on this. We can see that we had this cup and handle pattern. Our handle was real nice, accelerated very quickly. We've broken above resistance. This is yesterday's session. I'm looking at the daily chart right here, guys. Yesterday's session, we closed green above the breakout point, and we're looking good for a continued breakout. Full disclosure, I own shares of 5-9 based on this pattern. What I'm looking for is my entry was this close above. So my target is about a 19 and some change % gain over a short period. This thing, you know, with this type of breakout, it could kind of look like this, and that's fine. I'm not going to let myself get stopped out. I just want that 19 to 20% over a very short period of time. And plus, looking at 5-9, it's on a whoa, hey, paintbrush tool, classic mistake on this show. It's on a nice upward trend, guys. Nice upward trend. I think we might return to this one and trade up and down. Something to consider. All right, screw it. I can't make those paint things go away. In fact, look at this. Let's just do the garbage can. All right, there we go. We got rid of them. Guys, all right. Let's take a look at the next thing of the day. Let me see if I can pull that back up. Boom. Next thing of the day. That was 5-9. Let's do a quick review of our previous picks from last week. COOP, still forming this cup and handle, but look at something that's really cool that's happening right now. This one should be on your watch list. This one I'm less sure about because it seems to have like a little trickle up. We like to see surges up to our resistance and then through it. The fact that this one has had some selling pressure makes me think that this will not have the buyers behind it to get us to our price target. So on the chart, it is this pattern. This is what the price action is showing us. But it's giving me signs that it's just going to be a trickle upward. I like 5-9 a lot more for the cup and handle. All right, let's return to DocuSign. DocuSign was my favorite pick of last week. Still in motion. DocuSign got hit like everything else in the market. Got hit a little bit by tech stocks going down. But you know, it looks like it's returning back up, so it could be something along the lines of a cup and handle with a longer handle. What I will say about this is the same thing that I saw with Coop. which is it's a trickle up and not like a flood upward. The whole idea here is that we want to establish like a gate, like a gate that an army of orcs are about to bust through with like a battering ram. And when we just see like just a couple orcs like throwing rocks at it, you're not going to get that explosive breakout that you're really looking for. What app do I recommend for options? Currently using Robinhood. That people say that I mix up Tastyworks and Tasty Trade, but I'm pretty sure Tastyworks is the platform and Tasty Trade is the media platform. Is that right, Spencer? Okay, you do.
Yeah.
You don't.
No, sorry. I mean, I confuse them. It's the Tasty brand. Tasty Trade is the. Look it up right now.
All right. Well, whatever. I think it's Tasty Works is the actual platform. I have a former colleague that really, really only trades options.
Correct.
Who swears by it.
You're correct. Yeah.
Okay, cool. I do have an account with them. It's not really funded, and I don't use it much. But they have visual representations of creating options trades. So like multi-leg options trades where it's really nice to see the profit loss potential and see like decay and like all your Greeks visualized. Tasty Works rather does that pretty damn well. I'm not advanced enough with options to really get the full use out of it, so I found it daunting. But I'm sure if I spent more time with it, I would like it. So if you use Tastyworks, guys, let me know. Let me know if you like Tastyworks. This is for options, not just for trading everything. But if someone uses Tastyworks, let me know because I'm trying to switch my brokerage. I'm looking for something more robust. But I also I want a lot of margin. I want my options trade capabilities. I want auto purchasing of my long-term holdings. So I want to automatically like transfer money into the account and then buy into the ETFs that I like without me having to think about it for just the long-term stuff. At any rate, that's some brokerage stuff. Would love to know what you guys think. Remember, if you get this video to 300 likes, we will give away another awesome tool, which is Benzinga Pro, which for options has unusual options activity signals, gives you an insight into the options chain, a lot of really cool stuff for people that are using options both for equities trading and for options trading. So that's pro.benzinga.com. I'm giving away an annual subscription. All right, guys, let's go ahead and hop into the contest. Let's hop into the contest. The trade of the day is 5.9. Trade of the day is 5.9. FIVN. All right, I've got my John Madden paintbrush stuff on here, but take a good look at it. My thesis long term, which I usually don't really like to get into, especially on this show, is that this is an acquisition target. And we want that because, as you know, that when it comes to M&As, the company being acquired usually has a surge in stock price up. And the company doing the acquiring will either sort of stay flat or go down. So we like to get into the stocks that have a likelihood of being acquired. All right, so let us keep going, guys. A big thanks to everybody. So let me switch the tab that I'm sharing. A big thanks to everyone that participated in the roast Neil and win free stuff. So I would love to know what made it for you guys. Was it the fact that you got to roast me, or was it the fact that you could win free stuff? What was the big draw there? We had a pretty decent turnout of participation. Just trying to get a feel for you guys. I'll look at, okay, so CHFS, KJAX, it doesn't seem like you're going to let me forget about it, but I can take a look at it momentarily. What I want to share right now is the survey results. Oh yeah, the free stuff, just providing feedback. Thank you, RG. Some of you guys are so good. Such a smart, caring, and dare I say it, damn good looking chat that we have for this show. I can't. You guys make me want to be a better person. You guys make me want to grow my hair out so that I can have the best damn ponytail in the financial services industry. All right. You give me the courage to do that. All right. Looking at the responses, looks like a lot of you guys have been watching for a couple weeks. And then let's see the other one. And then some of you have been watching every darn episode. So big thanks to you for this. I'm not going to spend a ton of time on this. I do want to get back to the stock picks, but this is a contest. I want to give away free shit. So a lot of you said that you would like to recommend the show to a friend.
Wait, Neil, do you want me to share the screen? Share your screen so they can see what.
Oh,
like that.
Thank you, Spencer.
Okay,
cool. I'm nothing without Spencer. All right. So a lot of you guys said that you would recommend the show to a friend or colleague. Big thanks on that. Reasons. Some of this is inappropriate. Some of you guys maybe are kind of getting flirty, which I like. Keep it up. I need that. All right. You guys are talking about so my technical analysis, not always right. True. Guys, don't trade based on what you see people doing online. Do your own due diligence and take that into account when you're taking risk and investing or trading a stock. What I will say is that I am learning this as I go with you. I just found out what MACD was and how it worked like last night. All right, guys. So I am trading along with you. You guys, a little bit of hate at the old guard. Love to see that. Thanks, guys. Blah 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 blah. Oh, this person is not happy that we're going over the survey right now. Not happy about it. Benzinga Pro subscription for an annual, the essential one is $1,404. Entertainment quality lower than the education. Surprising. Not because I think I'm entertaining, but it's because I think that I'm not great at educating. So this is great. I really appreciate it, guys. Anyways, that's the survey. We got this one came up a lot, guys. We get it. So it's what can we change to make the show better? You want to see people in swimwear. That can be arranged. No guarantee on who it's going to be. The only person that I know besides myself that's available to do the swimwear thing is Spencer. So we can, I don't know, maybe that's a Friday stream thing.
I don't know. I don't know who told you that, but that is not true.
I mean, it's in the survey. We listen to our chat on this show. All right. We do a chat once. All right. So now, guys, we did this so that you guys could be entered to win something. So let's go through that. Prize number 1. Spencer, can you put this somehow in text on the screen? Prize number 1, a year of Benzinga Pro Essential. Prize, actually, Spencer, can you keep up with me or do you want me to type it out? Spencer's gone.
How's that? It's up on the screen.
Wait, what?
It's
okay, first prize. Okay, yeah, I love it. I love the way that you're doing this. So talented. All right, so let's do the screen share. This is where if we had our soundboard that 13 wanted us to have, we would have the music. Yeah, that's right. We're doing it. We're doing it correctly. All right, prize number 1. A year of Benzinga Pro. If you don't know Benzinga Pro, if you don't know what that is, we're just going to go to pro.benzinga.com. This is the Benzinga trading research platform. It is a mine. Think of it like a mine with a real soft metal, and all you have to do is bitch slap the metal, and you're accumulating all of it. Diamonds, gold of trading ideas. That's what Benzinga Pro is. All right. So you get in Benzinga Pro, you bitch slap some trading ideas. All right. And you perform well in the market. That's what it's all about. And it comes with a great community, a great chat, and Ryan Fluna, who you'll see right after this. All right. So that's Benzinga Pro. First prize. Congratulations, Jay, I think. AJ. We've got the email. We're going to record this, and we will email you if you're watching right now, hopefully. We will send you an email with all of the things that you need to claim your prize. Second prize gets $50 of swag from. It's not rigged. Everyone always says rigged when we do this. It's clearly this is an infallible method for choosing winners. The second prize is $50 of Benzinga swag. All right. It doesn't have to be get technical stuff. That's fine. I understand if you don't want to have a guy's name on your shirt. I completely understand that. I'm fine with it because it's my name. We also got mugs. We got mugs, guys. You're supposed to do first place as the last amount. We're new, Solar Up. Next time we'll do first place last. Yeah, you're supposed to do it on the flip. Whatever, guys. I'm giving you free shit. Don't complain. All right. Next up. Bats 72. Congratulations. You got $50 worth of swag. Do me proud and pick the get technical stuff when I send you your little coupon so you can get it. Do you have to be subscribed to win? No, but you have to be subscribed to get the consolary prize, which is a compliment from Spencer, which is worth over 10 Dogecoin in 10 Dogecoin at its current valuation, at its 2021 valuation. All right. Third place.
Neil, what's the prize again?
Third place is the same. $50 worth of swag
Okay.
for third and fourth. How am I running two pods and only watching the comment? I don't know, guys. This is new. We're not perfect. Engel, Hard, Denise, love it. Perhaps a little German in the name. Denise or Angel, whatever you like to go by. You've got $50 worth of Benzinga swag. Make sure you get technical stuff, and we'll make sure that you are delivered via text a compliment from Spencer Israel, and maybe a pick. Maybe we can blend, Spencer, what they wanted in the survey, which was people in bikinis. So, Spencer, are you willing to for this number 4 to make him feel special? Are you willing to contribute your image? You know what I'm asking, right?
I will contribute a pick if you're into that. I don't know if I'll contribute.
It's not for me. It's for chat.
Yeah, I know who it's for.
Okay.
We can talk about it.
Okay, we'll talk about that offline. We'll talk about that. All right, guys. The fourth and final winner of this week's giveaway is now being decided by the infallible random number generator. Golden Hair 888. Well done, my friend. Well done. We will be in touch. All right, that's it. That's it for the little giveaway. We are at 10 minutes until our guest comes on. We've got Simba Stocks coming on. Once again, a fantastic educator. And I love having him on because I sit there and take notes because he makes stuff seem so easy. So yeah, do we ship swag outside the US? Yes. Yeah, no, people in bikinis. I got it, guys. I know what you guys want. I feel like I'm really in tune with what you guys want. So let's go ahead and stop that share, pull up the charts again. And there was a stock pick. Okay. So give me, so I got NBRV, and then there was another one that was, do I ship to North Korea? Dan, no, I think you might have to come to the office and pick it up. There's NBRV, which I'll look at right now, and then there was another pick that someone mentioned. I totally forgot, so I might have to scroll up through chat. I apologize for that. So NBRV. Ooh. What we got? What we got here, guys? What do we got?
Are you sharing your screen?
I'm working on it.
Okay.
All right, so look at that. Look at that. We have got a stock that's had a long downward trend going back some time, my friends. Sometime this stock has been tossed aside by the Wall Street fat cats. All right, this is a therapeutic stock. Wondering if you have a fundamental reason that you're interested in the stock. If you do, drop it in the chat. This is NBRV, which is Nabriva Therapeutics. The interest in the stock. This is okay. So here's what I'm just going to go through my thought process. All right, I'm just going to think out loud. I don't have an immediate answer. Number one, gap to fill. Number two, is this support? Are we at support right here? So let's look back way over time back in 2016. No. So this stock is in a fall, a bit of a free fall, and has not found support. Has not found support. Yeah, it looks like the market is going down, guys. So the stock has not found support. So when I look at this, I would want to see a sustained period of consolidation before looking at it in a bullish scenario. At this point, we've got another gap down. Hell, there could be another gap down. It could return back up, but there's been no period that has established support for this stock, looking at over the history of it. So for this stock, from a bullish perspective, I'm out. Shorting, what you could say is that the MACD right about here confirmed that we're in a downward trend. And we have earnings coming up, but that's a little ways out. No telling what's going to happen there. So not really like a discernible pattern there that's going to help you out. What if they get their cancer treatment approved, though? If they get their cancer treatment approved, it'll probably spike up. But a lot of times, if people really believe in the approach and the management of the company, if people that are doing their fundamental research, especially on the institutional side, into this company, and they believe in it, you will see it reflected in the price action because they'll want to hold it at some point, and that is what will manifest support at some level. But we see that it's just bleeding value over time. So no established support. I got to be honest. I think that means that not really many people believe in whatever this company is. All right. So we got 6 minutes. I'm scrolling up because I want to find CHFS. That's it. So KJack Studio. I'm not going to leave you hanging. Plus your name I haven't seen here before. I don't think I've seen KJack Studio here. So welcome. This is your first one. Hey, nice. K-Jax. This guy, I'm bagging what you're raking, dude. So we had earnings. Obviously, the earnings were good. We've got this little gappy poo right here. Maybe I won't call it that ever again. I don't know. We'll see. I like this thing now. I'm using this tool because it just does like a strong line across everything. So we got our gap established. We've got our rounding bottom. So I'm going to use my arc tool, and I'm going to start my rounding bottom at for the left peak on my rounding bottom. I have two options here, and based on what I'm seeing in the pattern, I'm going to go with the second one. So the first option is to draw my rounding bottom at this spike up. That's perfectly viable. But I think that you'll see what you'll see here is sort of a rounding bottom within a rounding bottom. I'm going to draw mine at this spike up. I'm going to be conservative. And sorry about my stuffy nose. It's spring, and my immune system is very active. Then we can see that with this line, with the current price that it's at, is right at that point. It's right at that point. So we did have a break above. So I'm going to draw it at the high of this red candle and bring this down to the low. So we got a nice rounding bottom, not a very sustained period of time, which we like to see with these reversal patterns, but still viable. I mean, I'm sure we can go back through the chart and find other rounding bottoms. I'm actually 100% sure because I caught some when we were going back. Now what's happening? It broke down past support, gapped down, and then gapped up like crazy on earnings. So let's look at the level that it reached. I'm going to use this full horizontal tool. The tool that I'm using right now, I just click a point and it goes horizontal all the way in both the left and right direction. So back in time and forward in time. And what this allows me to do is find whether or not this point was relevant in the past. And it's pretty darn close to where this wick was. Let's go back a little bit further, and it's probably not because the thing's just been in a death spiral for quite some time. So we hit some serious resistance here, and it beat us way back down. So it's trading significantly lower than what it reached this morning. So does this thing still have breakout potential is the question. So if we use this previous level as our new resistance, what we would want to see is a return to this level. Will there be a catalyst for it? I mean, you tell me. What do you think? What does your heart tell you? After we've already hit the super high RSI, we've sold off a bit, and then we have the MACD fast line crossing over the slow line. So this is the area where it's going down, but now starting to return up, of course, coming from this really fast, explosive candle. There may be potential for this stock to continue an upward trend. There may be potential. What is telling me that it's likely not going to continue an upward trend is that we had this explosive breakout, we had a sell-off, and then now it's trading right back under that resistance, right back under it. So some folks just took some profit really, really quick. If the candle was stronger and the body was up higher on the wick, it would be a different story. So I don't see ongoing, at least in the short term. I'm talking about the short term. If you have a fundamental reason to love the stock, I'm all for holding it longer term. In the short term, I don't see a trading opportunity because the strength isn't here above the this resistance level. We went right back down below it. Turn on the monthly time frame. Yeah, so if I turn on the monthly and you find that stocks only go up over time, that's a great way to save a lot of money. Is just use the monthly time frame and notice how stocks only go up over time. Thanks, Nature Bond, for the tip. All right, guys, I got 1 minute left with you before I bring out our guest. Our guest isn't here yet, though. Where's Simba? Does he know what link to use, Spencer?
Yes, he does.
Okay, thank you. Yeah, Sebastian says the stock is going negative. Yeah, so it's interesting stock, might have a great story, but there are every day there's 100 new opportunities. So don't fall in love with your stocks. Don't fall in love with your picks. All right, anything else you guys want to look at? What happened to TECL? That type of question tends to want a fundamental reason, like news, which you can use. Well, I can tell you what happened. Everyone sold it all at once. All right, that was an easy one. That was a layup. TECL, what happened? Or
Wait. Hold on. TECL is a leverage ETF.
Is it?
Everyone,
correction.
Hold on a second here, guys.
Oh,
this is a bullish 3 times leverage technology ETF. All right.
So McCall and shenanigans. Did you know that when you asked the question? I'm just asking if you guys do you guys know about these leveraged ETFs and kind of how they work? Because it's not just levered over time. Usually it's a daily reset.
It's always a daily reset, but also I don't think that's what they're referring to. I think they did a split today. I think they did a split. So that crazy red bar, that's not real. They did because the stock.
Oh, okay, just
not the stock. The fund closed at 430 something, and now it's at 43. That only happens when there's a split. So that's like a 10-for-1 split right there, or a 1-for-10 split. So these funds are constantly doing splits and reverse splits to keep their price up, to
be useful. These are tools.
Make it useful, right?
These are not investment vehicles. These are tools for traders. Is what I'll say. These are tools for traders. So McCall and shenanigans. he answered the question, which was, do you kind of know how the triple lever thing works? He doesn't. I don't think a lot of people do. So remember, these triple levered ETFs are meant to be a reflection of the performance of a sector, basically of a sector or a group of stocks. And when that sector is going in a certain direction and you want greater exposure based on your either bullish or bearish thesis for a trade, not for an investment, you may use one of these ETFs to get more out of your money. But you also can lose a lot more of your money if it goes in the opposite direction. The interesting thing about these two is that they're triple levered. It's 3 times, three times the slope or the price change of whatever group of stocks they're reflecting. And that resets every day. So it does not accumulate over time. And that's what allows these levered ETFs to maintain their integrity as trading tools. So if you have a short-term day trade thesis on what might happen with QQQ, which is the NASDAQ ETF, their names escape me. There are triple levered and double levered ETFs, meaning that it's 2 times and 3 times the price change of what you get with its underlying ETF. That will allow you to play it without perhaps using options. And they're also inverse too. So if QQQ is going down and you want to buy some and not use a put option or something like that, you can use an inverse ETF.
Our guest is in here, and he's got you. TQQQ and SQQQ are the leveraged and inverse QQQ funds. Again, what Neil said: trading only, hedging, not for buy and hold. Please do not buy and hold these things for more than like a couple of days or maybe a week. That's not what they're for, and we know that because they say so. The funds and the providers, they tell you don't.
Well, this is a great learning moment. So it looks like someone in chat stumbled upon one of these and liked what they saw. And I've done it, guys. Brett's here. Brett, thank you for the call out on TQQQ. I think I gave that like 6 Qs and SQQQQ. Those are the ETFs that reflect the NASDAQ. So that's like your tech sort of levered ETFs. I have lost the old shirt trading options on those when I thought I was being a wise guy. So definitely know what you're getting into and look up a coherent strategy if you want to do that. So without further ado, enough of me. While Spencer is putting on his bikini, let me bring on our returning guest. I think this is our first alumni of the show. This is like what's that guy's name? Tom Hanks when he hosted SNL like 9 times. The man is a treasure, just like Tom Hanks. It's Brett of Simba Stocks. Brett, let's bring you on.
Tom Hanks. Love it. What's going on?
Well, not too much. Things were looking good. Things are getting a little bit red, but sticking to the strategy. How are things going with you?
They're good. They're pretty good. So far, we're having a great trading day already right now. So definitely picking up. It was a rough week last week.
Yes, it was. It was indeed a rough week. So what is picking up for you today, Brett?
So today, right now, we're in Square. Let's see. We took Square this morning, Fisker, and let's see, what else did we take? And RKT.
Square and RKT. Do you want to share your screen, Brett?
Yeah.
While you're doing that, I got to straighten something out with chat, guys. 300 likes. 300 likes. 300 likes for the gifts. All right, 100 likes. I love it. I appreciate the love. I love it. But we gotta get to 300, guys. Come on. It's easy.
Here we go. So Square. So we took this again. For those of you guys who don't know, we mostly do options with like my whole trading group, and basically what we look for is mostly momentum plays for the most part. So we'll see what's moving pre-market using either the Benzinga scanner or just cycling through our watch list itself. And for the most part, we'll go with either like an at the money option or an in the money option, or something that's pretty or fairly close to that. If it's a big mover, then you can usually go a little bit out of the money, which is kind of what we did here. But let's go over this real quick. So Square, I don't know if you saw the news, but they're announcing some type of industrial bank, right? So they were up 3% after hours on that news alone. They want to create some type of like banking service. I didn't read fully into the article, to be honest. But from the close yesterday, and it was a nice close yesterday. We had some consolidation and then a pop up going into that news, so they probably knew something there. But we got a little bit of a dip this morning. Tech was selling off a little bit. We had a nice recovery overnight, because overnight futures were all down about 0.5%. So at the Europe Open, everything pumped back up, and then we ended up opening green this morning. We're still down a little bit on futures here. But anyway, we saw a dip, right, to right around these pre-market lows here, and we saw this 5-minute hammer. So we use a 5-minute when we're scalping.
Can you define the hammer really quick for folks?
What was that?
Can you define the hammer for
Yeah,
folks?
so basically a hammer is going to be a bullish candle close. It's going to basically look like a hammer, right? You have your body right here at the top, and then you have a long wick down. And that usually indicates that bulls or market makers are looking to keep the price at the highs of this candle for the most part. That means that there was a lot of buying pressure going to the lows here, and they bought it all up in this 5-minute period to close the candle here. Now, it doesn't always mean that you're going to continue up from here, right? But if you can line that up with a couple other key indicators, then you're looking good. So the same thing that we went over on the last show, right? As long as we have some of our moving averages right around this area, it's usually going to be a good sign. Now, obviously, it looks pretty bearish at first when this candle was forming, right? When it was down here, this wasn't a trade to take. But when we got this candle closed, we literally entered at 9:44, so right before the candle closed. And then this is a simple play to do. You usually use a stop just below the wick. So if you get a next 5-minute close below this wick, you're out of the trade. So we took actually one of my guys in the group, Timmy. Shout out Timmy. He posted he's the king of Square. I literally don't even post Square. He probably plays this thing like every other day or so. We did a 255 call at 350. So it's at 250, right? It was at 250 then. We went with 255 because, again, this is a momentum play. Square options are pretty expensive. So if you're going to be playing them, you can go a little bit out of the money. Is a 2% move from where you're at probable for Square? Most likely. I mean, it's it's going to move usually at least like 5 to 7% within a day. Especially
how far out of the money do you have like a gauge for how far out you want to go?
Basically, like what? So like as long as we think it's going to definitely hit our target. So like if it's today, again, today's Tuesday only. So as long as we're in the money today, like that's going to be a probable option to take. So 250 would be fine. 250, 250, 255. Even 250, 750 is like pushing it a little bit, but we'll usually probably stick with like 255 or so. But we already trimmed that, and right now it is, let's see, right now it's $6 each. So those are up about.
There were $3 right before.
Yeah, he got them at 350.
Right,
so they're at 6
little,
right now. Yeah, so he's about like 70% or so. I already trimmed a couple, but I'm holding 2 runners right now. So,
let me ask you a question, Brett.
Oh,
so we've had this come up. I'm glad that so Brett is your day to swing trading options, right? So you're looking at Friday expirations in most cases, if I'm not mistaken.
If I'm day trading them, yeah.
Okay.
If I'm swinging, I'm always doing 1 month out at least. Usually, I'm personally in an Amazon trade, but I told them I got out, but I didn't get out because I'm kind of watching it. But I didn't have time to tell everybody. But everybody's in on this Amazon one. This is a scalp too, but we usually scalp in between our swings, right? So literally, the only reason that my swings were able to survive without me having to really take a really big hit last week is because we were scalping every single day.
Mm-hmm.
So last week, while I was getting crushed on all my swings, right?
Yeah.
Let me move some of these drawings here. While I was getting crushed on a bunch of my swings, literally every single day, I think last week, I caught the bottom on Shopify. So, and these were like 4 or 5% moves every day from the lows, even though it doesn't look like, too much on Shopify, the actual candlesticks here, it's a big percent move. And if I'm playing, and I was playing Friday expiration, so every 1% move, and I think we went over this too last time, right? When you're in the money, every 1% move on these high price stocks, right, is going to be pretty much fully intrinsic premium being added. So if the stock's going another $12 in the money, I'm making another $1,200. So as long as we're momentum riding these and taking profits at key levels, obviously this is a key resistance right here, right? Up here, rejected, rejected, rejected. But we made what, a higher low here, and then yesterday wasn't the best, but I think we caught this yesterday too, somewhere around here. But I was just basically looking for scalps as much as possible at some of these lows just to kind of survive. We did a bunch of different trades. For the most part, we caught a good Fisker, I think, the other day.
So really quick, when you're looking at those swing lows that are hitting your support levels, is the touch on support, is that the moment that you're looking to buy the contract?
So yeah, exactly. But we want to see some type of confirmation, right? So I want to see some type of like hammer form there. I want to see some reversal doji, some type of candle indicating that we're going to look for a type of reversal from obviously momentum going down to now switching up. So I don't just buy at those levels. I need to see some type of buying at those levels first.
Got it. Which is consistent for folks that are watching this show as well. It's not an indication of something that you can hang your hat on until there's confirmation in the direction that you expect it to goes in.
Right.
That you expect it to goes in.
Exactly. Yeah, because a lot can happen, right? Just because you're getting there doesn't mean just blindly buy. The only time I'll blindly buy, usually, well, no, I really don't ever blindly buy just based on like a support level. I have to have at least one other thing there. But usually, I think we went over it last time too, is, like the 200-day moving average, I'll just buy there for sure if it's on the daily. So like Amazon, right? Again, this is where I just will blindly buy.
Hold on one sec. I got someone coming to my apartment. Hey guys, not. Can you wait like 20 minutes, please? Thank you.
They're trying to get some tips. They're trying to get the Amazon intel, man.
That's all my neighbors. They hear me yelling. They want the tip.
The Amazon trades are usually hot. Anyway, so they anytime we have a pull back to earth, right? When we have a big consolidation after a move up. So let's zoom out here, right? Obviously, Amazon on a rip all through COVID, right? Huge consolidation here. We were playing in this range for a while. Got chopped out a couple times, right? I got faked out really bad on a 4-hour close here. Had to close that. But basically, in between that, we were scalping, swinging, because this is the daily, right? On a week-to-week basis, all these touches here, the lows. So right now we broke down. It looks kind of bearish, right? We did the same thing though on the Qs, Nasdaq, but they actually reclaimed back into the trend line here, the bottom trend line. If we switch to NQ, I'll show you that in a sec. But I think today is going to be a key day to see like if that was really a pump back up or if we're getting like a little retest here, right? So if we get this kind of retest here and then a move down, it'll be a little ugly.
So when you see, actually, hold on. So I'm sorry if I just missed some of that. I was super distracted by the maintenance guy coming in. When you see, so right here we've got a pennant on Amazon, and I wonder this all the time. When it breaks down out of the main pattern structure, so we've broken out of our broken down past our sloping support line there on the bottom, right, drawn in green. When it breaks out of that, do you still look for it to sort of enter back into the structure and say it's still in play?
So the only reason that I say that here is because it didn't break here, it didn't break here, it didn't break here, it broke here. But what do we have right here? Again, the 200-day moving average. So this is kind of like one of those situations where it's like, you hold a little bit past what you would on the chart, but you're going to still, and that's up to your, it's just up to you as a trader, right? And at the end of the day, we still have these lows. We have these lows here, right? I'm not going to let it go all the way down here. I know if I get a daily close, a hard daily close below this 200-day, you know, if I get another one, pretty much, because we had one on the 25th, but then the 25th was just ugly on Thursday.
Yes.
But the next day we had a nice bounce up, right? And then we're continuing up now. But you know, it's kind of like a case by case basis then. But if the 200-day was like down here, let's say it like curled up and it was like like over here, then yeah, I'd close out of the trade. But the 200-day moving average on the daily is going to be your strongest support, like regardless of anything, always, like all the time. The amount of times that prices bounce there is like dramatic over, you know, the course of history.
So okay, so that's one to remember, guys. 200-day is just the ultimate line in the sand for support.
Pretty much, yeah.
So if it breaks down past the 200-day moving average,
there's a good one.
Maybe run for the hills.
Yeah, I mean, this is probably the greatest Tesla. This was the greatest thing you could have ever done, like, in your probably entire life. Right here.
When it touched
COVID low. Yeah, this was like one of the only ones that like it touched, like the COVID lows was the touch. Because most stocks, right, they broke through during COVID. So it was like, couldn't really do it there. But Tesla was on again, the best way to do it is if it's way above that 200-day moving average, because that means that what happened? There had to be some type of big sell-off to get back down there, or a big consolidation to get a move back here. So when you get that touch, you're going to get a run. And I'm not looking to buy Tesla, and none of, at least a couple of most of the guys in my group, the admin at least, we're waiting until we get in this 550 range, 500 or so, and then that's where we'll load the boat. And what do you think is going to happen when we get there? Probably 200-day will curl up right there.
Oh, I like it. Okay, so we see it sort of a convergence with the 200-day.
Yeah, so, I mean, you know, you could have bought this range here at a decent little resistance here and support, turn support. But if you would have to switch the hourly. Personally, this was a great buy the other day for like a little dead cat, right? But I don't know what's going to happen here, so we'll see.
What is a dead cat bounce for? I mean, I know, but I don't think Chad knows.
Sure. No, I'm just kidding. So a dead cat is going to be basically when you get a relief bounce guy, when you have an aggressive sell-off that's going to continue, but obviously you don't just go straight down in an aggressive day. You're usually going to have some relief buying right before they push price back down. So we don't really know yet if this was one of those scenarios, right? But basically it would be buying pressure here, a move back, up to the previous support level. So this is where it broke down, right? Rejected here, definitely rejected down. And then you have a continuation down. So something, a bounce to here, and then it bounced back down to hopefully the golden pocket of this entire move up.
Okay, so I'm going to start a new thing. We're almost out of time here. I'm going to start a new thing with you, Brett. I'm going to do this with our guests from now on.
Yeah.
So right now you're using a charting tool. Tell me which indicators, and we did this last time, guys. So go back and watch the last episode with Brett, Simba Stocks. Brett, what indicators do you have on right now?
All right, so I'm gonna, whenever we do this, I'll leave them up here, and they're all here, and it makes it a little easier, right? So my 50 MAs, and you can see the color's yellow on the number. So that's the yellow line. The blue is my 20 EMA. Volume is just volume. My 200 MA, we went over that right here, and then I use it's called visible range. It might have a different name on like different platforms, but it's the volume profile visible range, which is right over here. And basically what that does is it shows the amount of shares traded at that level based on what I'm showing on my screen. So for instance, obviously price stayed around here the longest, right? This is the longest period that we had price stay at a certain level on this chart so far. So there's going to be a large amount of volume here because price was there so long. So you can kind of use this. You don't even have to have like, if I didn't even have candlesticks on here, like if I deleted the candlesticks and I just had like a blank chart and only this, I could easily tell that this is going to be a support level because that's where price was for so long. Obviously, it must have broken out higher. So when it comes back down there, that's going to be a strong support.
Yeah.
And if you zoom out, you can see it changes, right? Because what are we doing? We're using a different visible range. We're looking at a different amount of data that is visible.
Mm-hmm.
So now this is where our highest volume was, because what? This is where price was for a period of months longer than this consolidation here. So.
And something to point out to you for folks, a lot of depending on what tool you're using, when you turn on volume profile as a study or an indicator, you're going to get different colors to indicate buying and selling volume. And it looks like Brett says, I don't care whether it's buying or selling. I just want to see the sheer volume. So he just has them both at blue.
Yeah, I can do this.
Yep, there you go. So that's what it'll normally look like when people turn it on.
Yeah, I mean, yeah, sometimes I used to do this, but I kind of don't like to have a bias. I don't know. I mean, it's not even really a bias. Like at the end of the day, that's just volume for me. I'm going to look at candlesticks to see buying and selling, price action wise. So
almost
just leave it blue.
Brett, almost everyone that I've talked to, like through our boot camps, like all of these educators do not care whether it's buying or selling when they're using volume profile.
Yeah, I mean, it doesn't matter, because at the end of the day, you could have a bunch of buyers that just get exhausted, and then the candle closes green. Like you have a hammer, it's going to go up from there. It just depends, how exactly you get that candle close. Even though there was a lot of sellers there, if buyers are going to step in on that next candle, or the candlestick still looks, bullish, that's what you're going to want to go with. You don't want to just base it on volume alone.
So, Brett, we are at that time.
Man, these go by quick.
I know. We don't get enough time. I really think
that
this should be a whole day stream.
All right, I gotta go anyway. Let me go.
So before,
profits. But yeah, no, I'm just kidding. Let me see if anybody has any questions. Do we have a couple minutes?
So one is Turbojet here, and I think this is about volume profile.
Yeah. Okay.
He's asking, so buy at the peak, and I'm assuming the peak is probably the point of control on volume profile is what I'm guessing.
Yeah. So your point of control is going to be your strongest. So if you're above it and you come back down, then it's going to be your strongest support, obviously. And if you're below it and you come back up, then it's going to be your resistance, right? So obviously, so this is a good example. So we're scalping right now. This is just a 5-minute time frame, guys. So the highest amount of volume was at 254.94 right now, because why? Price couldn't get above here. There was a lot of buying and selling going on. So now we smashed through that. I'm sure now we will go to probably right here, this low here and this high. So we're probably, I bet Square will probably close the day somewhere, or not close the day, but hit around somewhere 260 to 261. So that'll be my blow off the top target for this. This will be like a 200% trade.
What? Okay, so do you mind taking a stock pick? You can take a look at it.
Yeah.
NIO.
So NIO, right? And again, when these earnings happen, you have to kind of let them digest it a bit. NIO dropped. It was up after hours because they had good numbers, I think, but they dropped because, or maybe it was XFEV. Shit, I'm not too sure which report I was reading, but I'm pretty sure like year over year demand was up, but it was down big from last month.
I think they had a shortage of. I think they needed chips too.
Oh, that was This one that was XFEV then. Okay, then that was XFEV for sure. And XFEV is also EV auto over there.
So was it NIO was getting hit by like a lot of others by not having
the chips available? Yeah, there's a chip shortage out there, right? So and the semi industry has kind of been holding up a little bit better than tech. So I think whenever they get that sorted out, or if they work out some type of like government deals and stuff, those could pop. So be on the lookout for those. But yeah, NIO kind of took a big hit on ER. Nothing crazy though, right? It only gave up pretty much 1 day gains. So this is always going to be a good sign still. And they had bad sales last month, but that's because of the Chinese New Year. And they said that, and that was an XFEV report also. So, you kind of just want to wait to see how this plays out. Again, I like to kind of play earnings like if it has a little pump after hours and then it dumps, I'll just look for a buy pretty much above that initial level. So like $50 here, but I always use the daily, right? So on the daily, it still looks good. You know, it looks decent. We haven't broken down to like new lows here at all, so it wasn't a crushing earnings, right? But I wouldn't be a buyer until it gets like back above, 50 or so, something like this. And we'll see what happens. There's a big fake out here, right? There's a pop up retest here, and then we kind of just kept selling off, which was kind of ugly. But that was all the EV space. A lot of them did that. So, but yeah, that's how I would play that, I guess, man. Not really any trade here. It still looks good though if you're holding. And then if you wanted to take a trade, you could take a little more aggressive one right now, and then have a stop below, just here like 44, something like that. Yeah, that's what I would say.
All right, great, robust. So Brett, I'm getting from Spencer. Spencer, here are the messages that Spencer sends me. One, he tells me every time he has to go pee, so that I know that I'm in control of the ship. He also told me that we need to wrap right now. So Brett, I want you to tell folks where they can find you and learn more. And that we apparently have a special show up next, so we got to quit early. But Brett, where can folks find
a special show?
No, this is some BS. This is some BS.
Kidding. So this is where you guys can find us. Simbastots.io is our site. If you guys want to check us out, got all our info on there. You can check out all our membership packages and everything. We use a Slack chat, so literally every trade that we take ourselves, we would post. So for instance, here on the Square one, you would have got a signal from Timmy or one of the other guys who posts one. Who was literally said, we're opening a Square 255 3-5 call at 350, and that's what we're getting in. And then everybody just puts an in emoji in. And then that's it. And then we'll say when we're exiting. And so it's up to you guys if you want to take it. But we teach you how to do this stuff in and out. We hope you guys will get to our level or even higher, by joining us. So
let's go.
That's it. That's where we're at.
Get in there. I want to get in there. I'm gonna join today.
Hit me up, man.
I will. Brett, thank you so much for joining us, and we will have you on again soon. So right. You have a great Tuesday. You go collect on Square, my friend.
I will. All right. Cheers. Thank you.
Cheers. Whoop. Okay, guys. It is 10:29. Spencer told me it's hilarious because I see him right now. He's wearing a bikini and he's got this look on his face, wearing his glasses, like Neil and the stream. So I'm all mixed up. I'm feeling all kinds of stuff that I've never felt before.
Neil, do you know who you look like right now with the headphones and the whatever that is on your head? You've got
John Belushi, because someone in the survey said I look like John Belushi.
You got this like Princess Leia look going on, like with the buns on the side of the ears and the yeah. I know Chad sees it.
Thank you guys for joining us for the first ever Women in FinTech special. We're doing this because March is Women's History Month, and over the course of the next several weeks, we'll be speaking to women in FinTech themselves. You'll be hearing about their stories, how they got started, and some advice that they want to give you for if you want to get started in FinTech. They are founders, CEOs, and serial entrepreneurs. They're uniquely equipped to talk on this space because they've done it firsthand. This is what they know and live. I'm your host, Jordan Robertson, and we're going to jump right in with Betsy, Amanda, and Jen. Hi, guys.
Hi, good morning.
Hello. Thanks so much for joining us. I actually wanted to start out with Betsy, and can you introduce yourself and tell us a little bit about you and what you do?
Sure thing. Thanks, Jordan. I'm Betsy Eisenberg. I lead partner success at Akoya. I focus on onboarding and managing our data recipients. So the partners I work with include really any type of a app, product, tool that's focused on managing your finances, helping your budget, maybe paying the babysitter, file your taxes, that really needs access into your financial accounts. So it's essentially the products and apps looking to access financial data to support their use cases. And Akoya's mission is all about making sure that happens securely so that you don't have to share your ID and password with a third party.
Okay, that's really cool. So would you say this is like for beginners, entry level or intermediate?
It's more behind the scenes. So we are more kind of the pipes or the plumbing behind the scenes so that as you use the tools, you're doing so in a way that you don't have to share your ID and password, your login credentials stay private to you, but you can share your data so that if you're looking for a tool that's going to help you budget that needs access to, say, your checking account or your credit card, you can pull that information in a secure and transparent way. And you're aware of what's happening to the data so that you give your consent around it. So think of it more as sort of the piping that makes sure it all works smoothly and securely.
Okay, awesome. And Jen, I am a fan of Lunch Money. I love the name. Can you introduce yourself and talk more about Lunch Money?
For sure. So I'm Jen. I'm the founder, engineer, and designer. So all around one woman show behind Lunch Money. We are a personal finance and budgeting web app. What sets us apart is that we have tons of features that support the modern day spender. So that includes multi-currency support and also crypto portfolio tracking. So our whole tagline is delightfully simple personal finance and budgeting.
Yes, I love that. And I love how you are the one woman show. It's amazing. So Amanda, hi, same questions for you. Can you just tell us a little bit about yourself and what you do?
Absolutely. So hi guys, my name is Amanda Span. I am a marketer turned app entrepreneur. I kind of split my time in between managing my own apps. I run a program called the App Accelerator where I help non-technical and first-time founders build their first apps. A lot of them are working on fintech projects right now. And I also consult economic development entities all over the world who want to leverage startup innovation as a form of kind of economic development. And that often involves building out, fintech accelerator programs for them, workforce development programs, connecting potential fintech companies with developers or directors or, staff and advising them on the right direction they should go.
Right. So you're more in like the B2B space.
Correct.
Awesome. That is fun. So I wanted to jump into some advice for women who want to get started in fintech, whether it's starting a new career path or managing their own finances. I guess, do you have like some best practices? Jen, what do you think?
Yeah, I mean, that's a pretty loaded question. I think like in terms of getting started in fintech and kind of trying to get, into the entrepreneurial part of things, I think that the best advice I have is to solve a problem that you're facing yourself. So with Lunch Money, in the last few years, I've lived in 4 different countries and I've traveled a lot. And so I was managing a lot of my expenses in different currencies. And I found that none of the major budgeting apps were supporting multi-currency. And so I was tracking everything in a spreadsheet. And I did that for a year and a half before, it finally kind of got really laggy. And I was like, I should really turn this into an app. Mm-hmm. At that time, the world was moving to more travel and like remote working. And I was thinking there's a lot of people doing cross-border banking. And so I went for it and definitely found a ton of other people that were feeling the same need that I was.
Right. So you think it starts with like setting a budget, keeping track of your finances and kind of getting yourself settled.
Yeah.
Awesome. I like
for
that.
Sure.
Awesome. Amina, how about you? What do you think? Like, is there any best practices for getting started in like a fintech career or just, personal finance in general?
I think just one, stopping to take inventory, like whether that be with your personal finances and really just taking the time to, figure out how much you're spending, start, setting a budget. There's plenty of plans out there, depending on how you like to budget your money and what's most comfortable for you as far as personal finance is concerned. And as far as, whether you're going to be an entrepreneur or you want to enter the space as, an employee, maybe join a startup or join a fintech company, I think it's just taking inventory of your skills and seeing which skills are transferable. I think a lot of times when people are switching careers or going into another sector or space, they get overwhelmed with the thought of, oh, I have to do all these trainings, all these tutorials, I need, some additional degree. And that's not necessarily the case. Oftentimes your skills are welcome or necessary in the space already. You just need to figure out a way to position them so that you can transfer them over from your existing lane.
Yeah, I love that, especially bringing up education. I feel like a lot of women are like, do I need to do this? Do I need a formal education or not? And there's so many different, courses, self-taught even. So that's really cool. How about you, Betsy? What's your recommended, stepping stone?
Well, so I actually wanted to build on something Jen brought up is, find a problem that resonates with you, whether it's something you are experiencing yourself or it's something that you relate to and buy into, because I think that really helps you grow on your passion and grow on the things that interest you. And as long as you're interested, you're going to put your best foot forward and really excel. I've always looked at opportunities around things that served as a springboard, either a project that's going to teach me something new, something that's going to take me out of my comfort zone, or being in a culture of growth and with smart people. And that could be among your peers, that could be among advisors to the company, management team, but really folks that are going to help you learn to continue to grow. And then I think the other thing I would talk about along those lines is find places where you can have both mentors and sponsors. Mentors are super helpful in terms of advice and guidance, and I think we all look for them as a byproduct of starting our careers. But one of the things that's super important also is finding sponsors as well, people in leadership roles who can help move you forward, team you up for new projects. And I think that's true in both small companies and large companies. Finding those folks are going to help you grow as well.
Right. So how would you say you find those mentors? Does it have to be in your industry, or where I guess would women look for the mentors?
I think it can be within your industry and it can be outside your industry. And I wouldn't limit yourself also to think you only need women, as women, you only need mentors that are women. Some of my best mentors have been men. Some of the sponsors that have helped me progress my career have been men who see my potential and have helped harness it in terms of giving me new opportunities. So, but I would, find people that you can talk to, find people that you can relate to, folks that may not necessarily 100% agree with you, but respect your questions, will give you the time, answer your questions, don't talk over you, those types of things that will really help you move forward, something that you can get out of the experience.
I love that. I think we all need that support system, Amanda, Jen, do you guys have mentors?
Yeah, both mentors and sponsors. And I think, sometimes it takes time to cultivate those relationships. I think, oftentimes, especially when you're first starting your career, you kind of jump in and you're like, oh, I need a mentor. And you haven't even put any skin in the game, right? Like people, you don't have a track record yet where people can vouch for your work. And sometimes people can just vouch for you. A lot of these things are relationship driven, but you need a little time for that. So I think build relationships before you need them, and start getting to know as many people as you can, and just build genuine relationships around, between the two of you, as well as your career.
Right. So timing is a big part of it, sounds like.
Yeah.
Okay. Jen, do you have anything to add?
Yeah. I guess to add to that, I would say that I have a lot of champions. I guess they could be anywhere from people that I've worked with or for in the past, and even just my users, people that are signing up every day and they're excited about what I'm working on. They may or may not be a lunch money user, but they're giving me support. They're giving me advice. There are some people who are in accounting. I don't have a background in finance or anything like that. But they'll give me, support and help. And a lot of times, I think just having a good group of champions that are willing to listen to your ideas and give you support when you need it, as well as people that are mentors and can kind of are a few steps ahead of you and kind of help guide you. I think having a wide range of people like that is really helpful.
Yes, that support system again. I love that. I actually want to take a second to talk about Benzinga Pro. I know that some of you might not know what it is, but it's our very own stock research platform with real-time alerts, Squawk, and the fastest newsfeed in the game. I want to show you guys a little preview of it. Well, I hope that was exciting because someone's going to win a free year of Benzinga Pro today. Yesterday, we posted a poll on our Twitter account, and we're going to have some little friendly trivia between Betsy, Amanda, and Jen, and you can play along in the comments too. But if you wagered who's going to win the trivia, then you'll be entered to win a free year of Benzinga Pro. So we're going to get the questions on the screen. You can play along in the comments, and I'm going to keep track of who wins here. Can we get the questions on, producer, maybe Spencer? There we go. All right. Oh, here we go. Couple seconds. We got about 8 questions. They range from, women in pulp culture, women in business, historical women. So you're welcome to play along. If you've never played along before, so the question and answers are going to be on the screen. You just put 1, 2, 3, or 4. For your answer in the comments. All right, first question. Who was the first woman to run for president in the United States in 1872? Was it Betsy Ross, 1, 2, Victoria Woodhull, 3, Hillary Clinton, or 4, Michelle Obama? Fun fact about Michelle Obama that you guys may not know, she wouldn't go out with Barack until he first played a basketball game against her brother. I know. I thought that was really cute. Okay, you guys, Betsy, Jen, Amanda, you can hold up your answer. 2, 2, and 2. You guys all got it? And so did everyone in the comments. Good job. I guess that wasn't too hard then. All right, next question coming up in about 10 seconds. Oh, some of you thought it was Betsy Ross. Betsy Ross created the flag, right? Yep. And then Hillary Clinton and Michelle Obama, they weren't around in 1872. All right, Susan Wojcicki is the CEO at which company? Is it 1, Cash App, 2, In-N-Out Burger, 3, YouTube, or 4, Starbucks? We've got 15 seconds to get your answers in. Also, another fun fact about Starbucks. So I was looking into, the name and how it came up with Starbucks, and it actually refers to the first mate in the Herman Melville book, Moby Dick. All right. Let's see, we've got Rich wants In-N-Out Burger. I don't know if that's the answer, though. We've got some 1s, some 2s. Computing answers. You guys think it's 3? Yep, it's 3. It's YouTube. Also had to look up the pronunciation of her name, Okay, number 3, Mariska Hargitay plays which female lead in Law & Order? Is it 1, Andrea Benson, 2, Stacey Brenson, 3, Olivia Benson, or 4, she doesn't even play in that show?
She doesn't even go here. Oh, man.
Okay, but also, did you guys know that Taylor Swift named one of her cats after Mariska's character?
Oh, that's a good hint.
Yeah, it is.
Okay, I'm seeing some 3s, some 2s. What do you guys think?
Let me go with
3, Olivia Benson. All right, see some 5s. That wasn't an option, but we're playing along. Okay, it was Olivia Benson. Good job, guys. I'm not getting anything past you. And next question. All right. Which female entrepreneur started Bumble? Bumble, the dating app. Is it 1, Lindsay Snyder, 2, Ginny Rometty, 3, Whitney Wolf Herd, or 4, Emily Weiss? Another fun fact about Bumble. So fashion model Sharon Stone actually created a Bumble account and got kicked off because people thought she was actually a catfish. But it was the real Sharon Stone. So missed opportunity. All right, what do you guys think? 3, 3, and 3. Okay, you guys are too smart. I'm not sure what we're going to do if there's a tie. I guess we'll cross that road when we get there, if we get there. Okay, I see some 3s, some 2s, 3s. Couple more answers. Oh, and it's 3, Whitney Wolf Herd. All right, next question. All right, this company is managed by CEO Mary Barra and reported revenues of $147 billion in 2018. Is it 1, Apple, 2, Best Buy, 3, General Motors, or 4, Microsoft? All right, and fun fact about Mary, she's an engineer and she's actually the first female CEO of a major automotive firm. So hats off to you, Mary. That is quite an accomplishment. All right, what do you guys think? 3, 3, and 3. All right, you guys got it. General Motors. All right. Okay, next question is actually going to be about supermodels in the tech industry. What do you guys think in the chat? Mostly 3s, 3, 3, 3, 4. You guys are good. All right. So question number 6. Which supermodel led a campaign to get girls involved in computer programming? Was it 1, Cara Delevingne, 2, Chrissy Teigen, 3, Gisele Bündchen, or 4, Karlie Kloss? This was actually a pretty big campaign. I don't know if you guys remember it or have saw it, but this was actually a few years back too. Actually, almost 200 years ago, the first person to what would now we call a coder was a woman named Lady Ada Lovelace. I don't know if you guys knew that, but that was really interesting to me. Okay, what do you guys think? 4, 4, and 4. It was Karlie Kloss. Did you guys guess that in the chat? I see some 2s, 4s, 3s. Nice. All right, so it is currently a tie. You guys are 6 for 6, which means I guess I need to work on my trivia game. All right, next question. Number 7. Marilyn Houston is the former CEO at which company? Is it 1, IBM, 2, Lockheed Martin, 3, Oracle, or 4, Visa? 1, 2, 3, or 4. What do you guys think? So speaking of Marilyn Houston, she actually worked at Dairy Queen in high school, and she put herself through the University of Alabama, where she worked as a nighttime switchboard operator. So all those beginning moments are really important. All right, what do you guys think? I see a lot of 2s, some 4s, 2, 2, 3. We might have a tiebreaker here.
Yeah.
All right, computing answers. I see some more 2s coming in, some more 4s, Visa. Lockheed Martin. All right, last question coming up. All right, so according to research, which percentage of leadership positions in the UK Technology Center are held by women? Is it 1, 10%, 2, 5%, 3, 20%, or 4, 50%? Technology sector held by women in the UK. Actually, if it helps, only 25% of all jobs in the tech industry are held by women. Okay, I see some 2s, 3s, someone dancing. 3. All right, what do you guys think?
I'm gonna go with 1.
2 and 1. All right, we got 5% or 10%. Let's see. Twos, 1s, and it is actually 5%. 5% of women hold jobs in the technology center in the UK. Okay, thank you guys for playing. Jen and Betsy, it was a tie, so I'm gonna have to look at the Twitter poll and kind of pool in those wagers, and we'll pick one person to win a full year of Benzinga Pro. And with that, I hope you guys learned something or at least had fun. And I'm really excited to give one lucky lady a free year of Benzinga Pro. I think it'll really help you on your investing journey, especially if you're just getting started. Okay, I'd actually want to open it up to the viewers and see if you have any questions. Any questions for Jen, Betsy, Amanda, can be anything you want related to their career, fintech, some advice, where you want to get started. There's actually one question from Twitter, though. So, Jen, I know how you talked a little bit about how you thought of lunch money and, it kind of came in based on need. What was the first thing that you did after the idea came to you?
The idea to turn my spreadsheet into an app. The first thing I did was I fired up Sketch, which is a design app, and I prototyped what the app would look like. And it basically looked just like my spreadsheet, but prettier with colors. And then after that, I decided what my stack was going to be. So I'm an engineer. I went to school for engineering, and I'm an engineer by trade. So I just, I started thinking about the technical side of things right away. And that's really what got me fired up.
Okay, cool. So you're taking the idea to design first thing.
Mm-hmm. Yeah, because I am also a very visual person. So if I get excited about a design, then I get excited to bring it to life, and then it just kind of compounds.
Yeah. So I guess after how long did it take after you had that first initial concept and design, did it take to actually go to market?
So I like to start off with kind of like small incremental goals. So my first goal was to get completely off of my spreadsheet and using my app full time. And so that took about 3 months. And then from there, it took another 5 months before I started to get my first few users.
Okay. So you were like kind of beta testing it yourself. Did you have like friends and family do it with you?
Yep. Yeah. So my husband and I were using it. Some close friends were using it. My mom was using it. So it was really awesome to get kind of, a lot of raw feedback in the beginning, especially in the beginning. I launched with only 3 features, which was, just transactions, budgeting, and recurring items. And now we have, over a dozen features. So when I launched, it definitely wasn't what you see today.
Seriously, you guys have to check out Lunch Money, especially the crypto portfolio. I know there's a huge interest in crypto right now. You got to have a portfolio, so check out Lunch Money. Any ideas in the comments? You guys interested to, I guess, learn anything new? What do you think would crypto tech play in the fintech industry? I guess, Jen, or maybe do you have any input on that since you're kind of familiar with the crypto space? You got your portfolio.
Yeah, I think I think that crypto is going to be right up there, right next to traditional assets that we see, and that's why I implemented the feature of we're a personal finance and budgeting app, and you can also track your crypto, because that's becoming a big part of people's portfolios these days.
Yeah, that's awesome. I actually have a question for Amanda. Would love to hear more about some of your prior work, like TipHub and the App Accelerator.
Yeah, so I'll start with TipHub. I'm still working with the App Accelerator now. Basically, my work just involves creating a framework for first-time and non-technical entrepreneurs who want to build an app, providing them and pooling all of the resources, education, and information they'll need to make that happen, and helping them navigate the process without the technical overwhelm. As far as TipHub was concerned, it was a huge labor of love I did about 7 years ago. TipHub is kind of an innovation manager that focuses on startups in Africa and the African diaspora, and as well as social enterprises. And we launched an accelerator program where we worked in affiliation with the World Bank and the U.S. Chamber of Commerce to have the largest pitch competition in the world for African-focused startups. We did an accelerator program, both virtual and in person in DC, and actually flew in entrepreneurs from all over the world. Some were working in Europe, some were working in the Caribbean, some were working in the States, and some were working across the continent of Africa. Flew them to DC to help educate them on how to grow and scale their businesses. A lot of them are doing really well now. So one of them just completed the SoftBank Accelerator Program, Emerge program. And so it's really cool to kind of see those companies grow and flourish. And TipHub is still running today, even though I'm not a part of the company anymore. They're, running smaller cohorts. But, I think we were very, very early and probably overly ambitious with that project a little bit. Now you're starting to see a lot more hubs and a lot more funds focus on the continent of Africa. But at the time, people were like, are you sure you want to kind of navigate that space? But Africa's ripe for opportunity. It has, a huge emerging workforce. And though a lot of those people are transitioning into the tech space and solving really cool problems across the continent. So if you're interested, definitely check out. There's a lot of great resources out there surrounding tech in Africa and beyond.
All right, awesome. Thank you for that. That was a lot of information, and I hope you guys, really find it valuable. Any more questions in the chat? All right, no worries. And is there anything you guys want to add? Betsy, Amanda, Jen, anything you want to talk about women in fintech in general? It could be career or otherwise.
So I can take that question. I think one of the things kind of along the lines of finding sponsors and mentors is finding the things that speak to you. For me, I've gone through different content sites at different times that have spoken to me or haven't spoken to me, finding the tools that didn't make me feel dumb, and found resources that helped me, build confidence in both myself and my financial literacy and knowledge. So find the things that speak to you. I think the other thing, and a lot of it kind of comes down to all of us looking for different tools. Make sure that as you use those tools, a lot of tools are free. Well, why are they free? So just be smart about knowing where your data is going, who has access to your data, how they're using it, so that you really get the benefit and learn the right things that you're looking to be successful in terms of making good decisions and following what's important to you for your goals.
Yeah, definitely. So that kind of goes along with resources. What are some, we talked about, mentors and finding those sponsors. Are there any other resources that you can recommend to women who want to get into the fintech space or just, manage their own personal finances? How about you, Jen?
For managing personal finances, I'm seeing a lot of new resources online that's, by women for women. And it is, it is true that the financial literacy landscape is different and has been different towards men and women. And so it's been really awesome to see a lot of female-led companies. One that I want to shout out is one by a good friend of mine. Her name is Vrinda Gupta, and she's working on Sequin Card, which is a credit management app that's designed to help women boost their credit score. There's a lot of talk these days about how, there's the pink tax, when women get divorced, a lot of times they realize that they were just kind of they weren't the primary card holder, and so they didn't have the credit. And so she's really working on building some really great financial literature for women, and she's really building an awesome community to help empower women to get to financial independence.
Okay, that's really awesome. I haven't heard of it before, but I will definitely be checking that out and spreading the word. I got a question here. So what are your guys' biggest piece of advice for women who want to break into financial industries or fintech in general? Amanda, you want to take that one?
I think it really depends on like where you want to go with this, right? Like what does breaking into mean for you? Do you want to work for a company, work for a startup? Do you want to, launch a startup? And I think figuring that out, I think we are kind of touched on this already a little bit in regards to like finding the right problem to solve. So doubling down on like holes in the market or problems that you may face yourself. On top of that, I think it would behoove you to kind of take a deep dive into the regulations and policies surrounding, the financial industry. I find with a lot of founders, whether they have a background in finance or not, they, run into a lot of red tape as far as running their businesses and meeting all of the financial regulations and policies that are, in place already and are constantly being updated. So, make sure you take a deep dive on that, keep yourself abreast on that. And even if you are starting a company, it doesn't hurt for you to know if you are going to work for a fintech company, as is something that is going to be, the talk of your company on a regular basis. And then again, going back to the transferable skills, if you don't, have those skills already, or if you have skills already, figure out how you can transfer them. If you don't have skills already, find, a mentor or people who are already working in the space and, help them. Let them mentor you, let them guide you, or possibly find an executive coach, someone who can work with you to focus in on certain things or certain areas where you may not be as strong.
Okay. All right. Thank you. This is a fun question. So who would you guys pick as a dream mentor or a dinner guest? How about you, Betsy?
I'm going to go kind of expected and say Warren Buffett, actually, just in terms of, there's something to be said for his long career, his success, and I think kind of getting those nuggets while we still have him around.
That's a good one. How about you, Jen?
Maybe Sally Krawcheck of Elevest. I think it's really awesome that she's built up this whole, kind of community and company around helping women, kind of demystify personal finance for them.
Yeah, so great platform. Platform for women, Elevest, check it out. How about you, Amanda?
I'm actually going to go with someone who's not in fintech. It's Myleik Teal. She's actually the founder of a company called Curlbox. But the reason why I selected her is because she's very, very transparent online about her struggles as transitioning from being a marketer to an entrepreneur, and the things she had to learn about finance along the way as she, scaled this 7-8-figure company now. And so, I think having someone who's kind of like who's been in the weeds, who has a similar background to mine, and can give me more of a realistic approach of like how they went about this. Like, what is navigating your life going to look like over the next few years? And here are a few real world strategies that can really help you, or someone who has a similar background to me, to kind of grow and groom and make sure their finances are intact.
Yes, and looking ahead, that's huge. Okay, well, I mean, last but not least, is there anything you want to add? I mean, I'd love for you guys to plug your companies. Where can people follow you and just keep up with your journey? How about you, Betsy?
So you can check us out at Akoya.com. And I think the big things for me was just, the mission and the soapbox that I like to get on as it relates to why I work at Akoya. Make sure that the tools you're using, capture your affirmative consent. They disclose what they do with your information, ask questions, listen, learn, and really focus on, the things that are going to help you in terms of your building blocks for both your financial wealth, but also for your career. Keep asking questions and don't stop.
Okay, I love that. Thank you so much, Betsy. How about you, Jen?
Yeah, to build on what Betsy was saying, I think, it is super important to know what companies are doing with your data. And that's why with Lunch Money, I'm super transparent about everything that I do there. So I blog a lot about my journey as an entrepreneur at my personal blog, lunchbag.ca. I also tweet from the same handle at lunchbag. And you can check out Lunch Money at lunchmoney.app.
All right, thank you so much. And Amanda?
Yeah, so if you guys are interested in building an app, maybe, you're interested in getting into fintech and you would like to do it from the entrepreneurship side, check me out at ihaveanappidea.net. Again, that's ihaveanappidea.net. You can also find me personally on Twitter and Instagram, Twitter at Amanda Span and on Instagram at the Amanda Span.
Okay, thank you guys. I actually have one last question that I wanted to bring up because it's really cool. So what kind of qualifications on paper would be recognized and useful for daughters in fintech to progress in a job? How about you, Amanda?
I think it really depends on what element of the fintech industry you're trying to get into. I think definitely, if you have a degree or if you've taken some type of certification, I think that would definitely be helpful. But, a background in working in some type of, for any type of financial services company, regardless of what position you were working in, I think just having some experience working in that space. Also, if it's a similar company, if it's a competitor, I think it would be great, even if you have to start with like an internship. That might be a great starting place, learning from the ground up.
Okay, awesome. How about Betsy? Do you have anything to add to that?
Yeah, I think Amanda hit on a lot of, important ones. Have some experience, start there. I worked as a bank teller in college, and, it was a way to start and something to do, and paid well or paid decently as a college student. So find a way to get some experience, talk to people. And also I think one other big thing is a lot of the fintech projects and initiatives that are out there are all focused on solving a problem, making something easier. So be able to have an interest in problem solving and demonstrate skills as it relates to problem solving. If you think about how Jen got started with her app, it was all about, she had a problem for herself she wanted to solve. So be able to demonstrate that type of a skill.
Yes, and don't be afraid to put it out there. Put your ideas on paper and then find the next steps. Jen, did you have anything to add to that about, resources on paper or education? What's important?
Yeah, I think that Amanda and Betsy definitely they outlined some really great traditional ways to get, break into any industry, experience, internship, mentors. I just want to offer kind of like, the non-traditional routes, which are so accessible to anyone now that, a lot of us have the internet and, we have Twitter, we have LinkedIn. You can really reach out to so many people and get that experience. You can start a blog if you're passionate about, finance. You can write about what you know and get, into the industry that way. Or you can, you can start an Instagram, you can be on social media. So there's so many ways to kind of break out. And, if you're passionate about it, if you have just, a wealth of knowledge that you want to share about it, there's so many ways to do that.
Yeah, piggybacking off of that a little bit, I would just say that most of the career opportunities I've gotten over years weren't because of my professional career. They weren't because of jobs that worked. They were because of things I just created on my own, because I just had an interest in them, like the blogs, like an initiative, like an event. Companies saw, hey, we need those things internally. And if you make a big enough noise and you do something earnestly, and it will get to the right people, right? Those who are seeking things out like this will find it, and you could just use that again as a transferable skill in whatever company you would like to work for or you would like to create.
Yeah, I love that. And I think that, the overall theme here is just start, pick something and start. And I really, really appreciate you guys coming on and sharing all of your insights and what you do. I think you give some really valuable information. That's all I have. And if you've been with me this whole time, I really appreciate you. Thank you, Amanda, Jen, Betsy, again. I hope to see you guys next Tuesday when we bring on Anka of Trade Out Loud, Jane Galina of C. Jane Trade, and Eugenia Baidu of Partnerize. And we'll be giving away another free year of Benzinga Pro. So I hope you come back. Spax Attack is up next with Mitch and Chris. Actually, if you click the link in the description of this video, you can tune in there. And bye for now. Bye, guys.
Thank you. Bye.
Bye.
last week during earnings report. So they've added 500 reservations just over the weekend. So again, strong interest. And then they have, that new deal with Foxconn for that second vehicle. So lots of interest in FSR. I'm seeing RIDE Lordstown Motors, RIDE, up 8%. That is one that I actually got into last week. So this was one that fell on that news that Workhorse was not going to get the USPS contract for those next generation delivery vehicles. So I saw that as an opportunity, right? The weakness in RIDE associated with Workhorse. Workhorse owns part of Lordstown Motors, but remember, Lordstown Motors, they don't just rely on production for Workhorse and those possible USPS vehicles. They have the electric pickup, the Endurance, coming to market later. So I saw this as an opportunity, take advantage of that dip. And then also Workhorse is now working with the USPS to get some more clarity on that deal. Looks like Congress also wants to know, why did they go with Oshkosh over the all-electric vehicle from Workhorse? So, there is the possible upside that Workhorse does end up getting part of this contract after all. And, obviously that could be a positive impact for Lordstown Motors, RIDE. But again, to me, this was a weakness opportunity playing to, that fall from the Workhorse, news. So RIDE is a new one that I am in, up 9% today, it looks like. Then I'm also seeing Clever Leaves, CLVR, up 6%. So remember, we had the CEO on our show not too long ago, and this was a $9 stock at the time, and now we're back to about 15. This one actually went higher than that. This is a cannabis play, not in the U.S. all the way yet, but they do have the CBD entrant here. And the CEO told us they're focused on the markets with federal legalization at the time. And obviously that's a big story for the US right now, is will we see federal legalization? So keep an eye on CLVR out there, on that news. And then another mover, MP Materials. What else is there to say about this one? We, of course, had the CEO on our show, months ago. We talked rare earth mining. We talked the Biden administration. We talked China. And, all those things that we talked about then are really coming to light now. Looks like China is working on, regulating exports of rare earth minerals from the country, which could have a, devastating impact on the U.S. as we rely on rare earth minerals for so many materials. And, MP could be a major solution, to that problem. And that stock has just been ripping higher, as it really is the pure play for rare earth mining in the U.S. So, another big mover today with MP. And then let's see, what else do we have moving out there? I see JWS, Jaws Acquisition, up 4%. So, this one is the one that is bringing Cano Health public. So that is a Medicare play. I'm actually a little surprised to see that one up today, with the weakness that we're seeing in Clover Health, which we'll, of course, talk to, when we get into headlines later. But, a surprising move there. And then another surprising move today because of Rocket, right? So Rocket Mortgage is up double digits. We're seeing some strength in UWM Holdings. That's ticker UWMC. The largest SPAC deal in history went public. Those shares were trading all the way down in the sevens, and they're up 12% today to 850, as seen kind of as a play from that Rocket strength. So welcome back, Mitch. Looks like you're back in the stream here. What are you seeing out there?
All right. Well, one of the things that I definitely did see is it looks like buy the dip works again, man. I mean, hey. I wasn't mad that I was going shopping over the kind of on Friday and Thursday time when the market was going down. I'm not really mad because I look at my portfolio today and I'm definitely happy about where it's heading. But let's go ahead. Let's start up the show. Let's get towards what everyone wants. Which is the interview that we're going to get into. We should be getting into it in the next couple minutes here. I'm going to go ahead here and start up our show with nothing better than our intro. All right, guys. If you guys are watching here from the all-day stream, the video is looking a little bit laggy, guys. So definitely, if you want, go to the separate stream. Go to the Specs Attack stream. It's going to be a little bit better, and we have the chat working for you. That's where the main chat is going to be going on. The all-day stream really is for you all-day streamer types that are keeping us on the side, watching us all day. But if you want to go ahead and get in towards the direct chat, get in towards the separate show, we'll put it up here in the link here. If you scroll up, you can also find the link here. But definitely, I'm going to put it up in the all-day stream there. So if you guys want to move over towards the separate stream and see a little bit of better quality, jump on in there. All right, guys. So one of the things that I am seeing is there's a lot of headlines, a lot that we need to get towards. So let's go ahead. Let's jump right into it. Chris, what's going on out there? Take us behind the headlines. Let us know.
All right, guys. Yeah, so we want to dive into headlines quick before we get to our interview today. So I'll try to rattle through these and those two new deals that we had announced today. So up first, we have MP. That's MP Materials. Again, I talked about this one a couple of minutes ago. Rare earth mining. Morgan Stanley initiating coverage with an overweight rating and a price target of $57. So MP, up again on that news. And then we have DCRB, so a SPAC that's taking Hyzon public. That's a fuel cell company. They announced that they're going to build the largest fuel cell production facility in the U.S. So shares of DCRB were up yesterday, on that news, again, focusing on fuel cell production in the U.S. GIK, this is a SPAC that I own. We had the CEO, Tim Reeser, on our show. Shares were up 17% yesterday. The company tweeted a picture of an Amazon van with the caption, "Package status out for delivery." So kind of showing off, that they are one of several companies partnered, on Amazon vehicles. So keep an eye out on GIK. That's a electrification play, and I do own shares of that one. Then we had earnings yesterday from Clover Health, so CLOV, and I know there's kind of a mixed bag out there, so obviously, ready for some heat on this one. I read that earnings report, and I wrote an article on it last night. I wasn't too impressed with it. They reported fourth quarter revenue of 166.2 million, which was up 44% year over year. Full year was up 46% year over year. So they beat on their full year revenue of 673 million. That was a little bit higher than what they put in their investor deck for the SPAC deal. But then they issued 2021 guidance. So revenue of 820 million to 850 million. That's down from their original projection of 880 million. And then they're forecasting members of 68,000 to 70,000 members for fiscal 2021. That is also down from 73,477, which was their original projection in that investor presentation. So, Spencer and I talked on the show yesterday. One of the big reasons for companies to go public via SPAC is they can report forward-looking, earnings and financial projections, right? So Clover laid out this investor deck when they announced that SPAC deal, and their earnings so far, those numbers are not hitting in line with what they laid out. So shares were up at one point after hours, and then they dropped. They are down today. This has been a disappointing SPAC. We talked on the show and said we would be sellers in that $14 to $15 range. So hopefully a lot of you were able to get out and did not chase this one. For me, I got to see more from them. They really need to report some partnerships or some deals, or otherwise this one could lag for the rest of the year. Movers yesterday. So we had VACQ up 36% on that agreement with Rocket Lab. We had NSH up 5% on that deal with Spire Global. RSVA merging with battery company Enovix up 25%. And TPGY merging with EV Box Group, that's a charging infrastructure company, up 21% on the day. And then turning to our deals today, so I don't have a ton of color on these deals yet. TWND, that's Tailwind Acquisition. They are taking Complex, a leader in cloud native risk analytics, public. So they see revenue in fiscal 2021 of $141 million, up 47%. And fiscal 2022, $210 million, up 49%. Valued at $1.2 billion. Shares are actually trading down today. So it looks like, that deal is just not in favor with the market. And then our second deal announced this morning, we have ACND. They signed a deal with Beacon Street Group. That's a subscription platform for financial research, software, and education. So this was a $3 billion deal. They see fiscal 2021 revenue of $484 million, up 28%. Fiscal 2022 revenue, $651 million, up 34%. So again, $3 billion deal. Shares of that one are down 6% as well. So market not loving either of these two new deal announcements. And then a note, which we'll dive into later this week. I'm seeing out there that we could have, up to 16 new SPACs issue and price shares today. So keep an eye out, as I talked on the show yesterday about, that unit strategy of buying some of these SPAC units close to $10 where you get, that net asset value, and then you get the free warrants to go along with that. So I'll be watching to see if any of these units, trade under 1050 today. And then turning to our calendar, we have CFII voting on that merger with View Inc. on March 5th. That is the smart window company. And I'm seeing shares of CFII, trading right around that $10 level. So keep an eye out on that one, as you have the opportunity to trade those shares back in at net asset value at the deal time. And then I'm not seeing earnings this week for any of the SPACs on our watch list, but we will keep an eye out. We have Rush Street Interactive reporting next week on March 10th. So that's what I've got for headlines and those two new deals, Mitch.
All right, guys, as you guys can see from the headlines, we had some movement. One thing I definitely note is that it looks like GNOG and RSI is at least catching a little bit of a bounce that I can see from the watch list. But definitely want to get into our interview. One that I'll definitely keep an eye out is just keep an eye out on that MP. You know, I've been waiting for a pullback in this one, but really it's a tough one to get the pullback now because the story had been so hot, and it's at a price that, you know, when we first started, we saw this stock at $16, trading 16, 15s, and now you're seeing a price target of 57. So, wow, that MP made a move since our interview. All right, Chris, so it looks like we got Rob waiting here. So let's go ahead and let's get him in here. Do you want to go ahead and introduce?
Yeah, awesome. So, guys, we're excited. We have another interview today. So we have with us Rob Strier. He is the CEO of Bullhorn Holdings. This is the SPAC with the ticker BHSE. So welcome to the show, Rob.
Hey, Chris. How are you? Thanks for having us today. Appreciate it.
Welcome, Rob. So I'm going to go ahead and I'm going to get on out for a little bit, let Chris knock some questions out, and then I'll jump right back in. Here you are.
Fantastic.
All right, perfect. So, you know, this interview will be a little bit different for us. We normally interview, you know, companies who have already announced those deals, you know, so I don't want to get you in trouble at all. So I know there will be some stuff that you know, will not be able to talk about, but we'll try to be, you know, as broad-based as possible. But before we get into questions, you know, I read the filing and I see that you yourself have worked for a variety of Fortune 500 brands, including Disney. You also worked with the NFL Players Association and the NHL. Tell us a little bit about, you know, your experience working with some of these companies.
Sure, no, I appreciate it. I'm 20 years in, let's call it the sports and entertainment space, but really it's 20 years of leading global strategy for several different groups, ranging in that sports and entertainment space. So we've been leaders on strategy for groups like the NHL. We've worked in racing and cricket, and a ton of work in international soccer, very substantially again in entertainment and brand. Was an all-star team going into this SPAC process. But, you know, we're largely, you know, before getting involved in the SPAC, we've been involved on multiple M&A and advisory deals, both of, you know, selling teams, being involved in leagues and massive consumer transactions.
Perfect. So, you know, I guess the biggest question out there is, you know, we've seen, you know, hundreds and hundreds of SPACs launch. So, you know, why is Bullhorn launching a SPAC? What's the big purpose here with BHSE?
Sure. So we're a little bit different, I'd like to think. First, we looked at first launching a SPAC back in 2018. So we're an incredibly well-researched team on this. This isn't a new phenomenon. We didn't wake up in 2020 and say, let's do this. We looked at this going all the way back to 2018 and thought the SPAC vehicle was a phenomenal institutional way to bring a company public, to give it the resources that it needed to be successful. And that at the same time, we had truly unique deal flow to be able to do that. You know, my business partner in this, Chris Calise, who's also our CFO, is a brilliant financial strategist. And he really looked at the structure very, very carefully. At the same time, we were predicting that there was going to be a massive inflow of institutional dollars into sports and media. And we are indeed, you know, seeing that in other parts of the market. So we thought by being ahead a little bit, by having real planning, that we'd be able to bring a fantastic company to the public market. You know, we really wanted to also look at companies that were content rich, had super high growth, and that were innovative going into what we think is going to be a highly competitive market.
Perfect. Yeah. So all the way back to 2018, huh? That was really, you know, yeah, before we saw this this crazy boom in SPACs, so probably, this would be the year to launch, last year versus 2018, based kind of on the market. One of the things I see is we have a lot of different sports related SPACs out there, and they all vary, in kind of the target area and the size. So, relatively speaking, BHSE is on the smaller size of the money raised in the IPO. How do you, compete with some of these other sports SPACs that are out there searching for similar targets?
Sure. I mean, I think we were either the first or second sports SPAC out there, kind of this new wave of them. As far as the size, structure, we believe, is more important than size. And Bullhorn has both the sports and the financial relationships to scale up to a larger deal size. So, really, as you look at it, and it's in our S1, we can do a deal that's anything from $500 million, probably to $1.5 billion, $2 billion. It's really, in this market, very much up to the pipe and very much up to the resources. However, by having a smaller SPAC, it gives us a very nice competitive advantage at the same time, as we really are a more friendly partner for a deal combination. Because we're structured and our size, it benefits our partner coming in. So there's less dilution. So it makes it an easier process for a target company, for an acquisition company to succeed. Really, our goal is to be a fantastic partner. And we take that responsibility very seriously. It's part of why we built a very operational board, and we can discuss that. But we built a highly operational board so that we can bring real resources, not just the investment, but we want to make sure that we're a great partner to any acquisition that we're looking at.
I think that's a great point when we talk about these different deal sizes and the structures. A lot of these private companies probably want to go public for, various reasons, but they also like to keep, majority control and some of that percent ownership. So, the size, I think, definitely, may play into your advantage, as you said. So I see in the filing, targeting, again, the sports, the entertainment side of things. It also mentions sports franchises. I know you can't give me specifics. Can you just walk, a little bit through, what kind of companies and sectors, are you looking at, with that being said?
Sure. I think we're looking at high growth first and foremost. What has real high growth potential, a large addressable market. I think everyone's looking for that kind of TAM, high addressable market. And innovative companies are very important. There's people who are going to harness technology, people who are going to use data, and really grow that business. While teams and leagues are obviously a focus for ours, and it's an element, the other types of businesses, as far as what are the types of sports, let's call them, whether that's gaming, gambling, or data that get involved in this, are very important. We view sports very much as a platform. I wouldn't say it's go so far as say like an incubator, but where can you operate sport more as a real business and create more growth? And it's something that we've been intimately involved with for years, is creating new revenue channels and more growth for teams, leagues, and brands.
So, in there it said sports and entertainment side of things. Is that, exclusive together, or would you also be looking at, possible entertainment companies outside of the sports world?
Oh, again, we can't get into direct targets, unfortunately, in this. But, it's going to range for us from sports and entertainment to things that combine. I think sports has a real combination of entertainment and things that are content driven and that are media driven as well.
Perfect. So, I want to talk a little bit about a couple names attached to this SPAC. Obviously we've seen the attention, Baron Davis, so former NBA player, he's an advisor here. He's an entrepreneur, investor, and businessman. Can you talk a little bit about, Baron Davis? What value does he bring to this SPAC?
Sure. So, I think Baron joined our board way before, let's call it the celebrity influx of people coming into this. And Baron wasn't added because he's an NBA player. Baron's added, he's a well-known, he's a savvy investor. He's done extremely well on that side of it. He was an early investor in vitamin water. He just did very well in the Hers deal that went public through SPAC recently. Sees an entirely different deal flow, especially West Coast wise. Very smart, again, very, very savvy. a very creative thinker, and has provided us a host of different resources at the same time.
Perfect. Then another name I see is Michael Gandler. The thing that jumps out to me in the prospectus is he's got a lot of experience in the soccer market. So, relationships with Inter Milan, MLS, and, I know, again, you can't get into specifics, but, you mentioned sports franchises, could that, so we obviously have the 4 major sports here in the U.S., but, are you looking past that possibly to, soccer, esports, some of the other, growing sports leagues?
I don't think there's any team or league that for us is off the table. We've done extensive work internationally and globally on how you build sport, whether that's taking a U.S. sport property and helping build it internationally, or taking international brands and growing them through a global footprint. So we're really comfortable on any side of that if that's a path that we decide to go down. Michael was a lead executive with Major League Soccer. He went through the IMG CLC side on collegiate licensing as well. And then he went and he ran as chief revenue officer for Inter Milan. And so, we wanted somebody who understood real revenue from teams and leagues and a brand perspective as well. It's something that we tried to do with our entire board. And when you look at our board, it's highly operational, right? It's not a group that is sitting on top of this and, not working and not involved in deals on a daily basis. And Stephen Masters for us, who's former president of Nielsen Sports, both domestically and internationally, has been fantastic. He also is one of the lead consultants for the American Gambling Association. Opens up a whole nother avenue of resources. And so, between those people on our board, Doug Scher and Jeff Wattenberg as well, we feel we have a really fantastic board with a lot of insight. And then underneath that, an entire support system and advisory.
Perfect. So, in your prospectus, it said looking at companies valued between 300 million to 900 million. You just talked, a little bit maybe of deals over $1 billion. Is there, obviously that's a wide range here. Is there kind of a sweet spot for, valuation at all for, a target company here?
I don't think anything that unfortunately I can get into on this. For us, again, it's about growth. And we're looking at and identifying teams that, or I should say teams, properties, and elements that are poised for hyper growth.
Perfect. So one of the things that stood out for me, we've seen lots of SPACs hit the market, maybe not so much in the sports world, but in other industries that are pre-revenue. And in your criteria, it talked about finding a company with, at least $100 million in revenue. Is that, a make or break level for these companies to already have existing revenue?
I don't think we have a true make or break. We have an internal criteria, and it's called an internal filter that we're looking at right now. A lot of it, again, goes to, addressable market and goes to revenue potential and growth.
Perfect. So, again, in that same criteria, it talks a little bit about, secondary potential revenue streams. So, your board, you have a lot of experience with these different sports teams, different sports leagues, different media companies. Is that the plan to, maybe take hold of, one of these private companies and try to add some additional revenue streams, in additional business lines, if you can get into that at all here?
As you'd expect, I can't get too far into that. But, I think as you'd expect, anything that we're looking at right now, and any company that we're targeting is going to have what we consider to be a rock star management team, and people that have a real proven track record of success. And so they're going to bring their own planning to the table. And then as a board, we want to be able to bring additional resources and insights. And we do think that anything that we're looking at now is going to have additional revenue streams off of what they currently have so that they can build bigger.
Perfect. So I want to turn a little bit to the negotiation side of things. Again, I know you can't get into specifics, if you've already talked to, any of these companies, but, we're in a different time now, right? With the COVID pandemic going on. So, years ago, maybe you flew and met with all these different companies, that you were exploring deals with. How has the pandemic changed the deal making side of things?
I think you're absolutely right. In years past, we would have been on a plane, probably meeting with plenty of people. I think the Zoom process, let's call it, has maybe exacerbated and moved forward a lot of time frames. And I think, in essence, we're spending probably more time with people now than we've ever spent. And we're having longer conversations and deeper conversations because travel, scheduling is far easier to do. The other nice part about having 20 plus years of relationships is you have a real good feel for a lot of people in the industry and in multiple industries. And so you're able to get a real good feel for management teams really, really quickly.
Perfect. And then, again, I know you can't get into specifics on the deal making process, but maybe walk us through, what does a day or a week look like, from the SPAC side of things of, exploring, potential targets? Is it, researching these private companies? Is it doing meetings? Is it, meeting with the board? How is the week kind of split up for BHSE here?
Well, I would say we're probably all a bit research and data heavy to begin with, and enjoy that part of it. The rest of it, I can speak for myself. I can't speak for the rest of our team. I start my day every morning at 4:30 in the morning. I'm probably on my 12th cup of coffee as it is. It is intensive as far as conversations. It's a little bit of scheduled Jenga of moving around pieces and elements, so that we make sure that we're speaking to all of the people that we need and stakeholders that we need and moving the process forward as quickly as possible.
Then I have one more question before we get to Mitch and some possible, chat questions out there from our viewers. And I don't know how much you can go into this, but I just want to clear something up. So Baron Davis is attached as an advisor to this SPAC. We saw some rumors out there, Baron Davis looking at Reebok with his partner, Master P. Can you just, let us know, Master P is not currently affiliated with this SPAC. Is that correct?
That is correct. Master P is not affiliated with the Bullhorn SPAC.
Okay. And I know there are some viewers out there, asking the same thing. I've tried to, clear that up out there too. Again, Baron Davis attached to this SPAC, but Master P is not. So, Mitch, what do you got for more questions from us or questions from the chat?
All right. Looks like I got to fix my focus here. The autofocus not working here. But all right. So the question I have was more along, I was looking at, of course, I'm a big sports fan, so I'm looking at minority stakes in teams. And how is that approach there? Are you guys looking to more of a minority stake? Are you guys trying to maybe look for some teams that are on the cheap? One thing I noticed with the pandemic is that a lot of reassessments for evaluations needed to be met, now that we just don't have that audience that we used to have. So how are you guys approaching that and kind of looking at the targets? Are you guys looking for certain teams that might be discounted because of the pandemic?
Yeah, again, I wish I could comment on that. I wish I could get into it. I think it dives into targets in a way that unfortunately I can't discuss it. I will say, as a broad, not related to Bullhorn, I don't think you've seen a lot of, especially for U.S. teams, discounting across the market. There's some let's call it discounting side in Europe. And I think what we've seen so far is more private equity and institutional money going into those types of deals so far.
Perfect. I appreciate that answer. It definitely gave us some insight, at least how they've been approaching it. So the next question I have, of course, and I don't expect an answer from this. You can either smile or just turn away here. But I've heard this name, and you don't have to even smile or whatever. Just how's the name Sports Radar sound? And I'll tell you at least from that smile, I can tell you at least, hey. I full disclosure, I do own your stock. I am long. I've been long for about over a month now.
Excellent decision.
Hey, one thing I definitely say is I have diversified in a bunch of sports SPACs, and I believe in the industry. So definitely looking towards to which companies each of you guys are going to get. There's a lot of them out there, and I think that in the end, there's some really good growth potential in some of the companies that are being mentioned out there. So looking forward towards that. I'll bring Chris back in so that we can bring maybe some chat questions in here. I know that we got a couple out there, so go ahead, Chris.
Yeah, so we'll try to get to some chat questions. Again, guys, remember that Rob can't, give us all his target companies or share that information. So, we'll try to ask these as broad-based. But, so someone asked, what's the overview of the target selection process? Maybe give us, some sort of, number. How many companies are you looking at in a given week or a given month? And how do you kind of whittle down that list to, the best possible target out there?
I wish I could give you like an easy number on it. We were very fortunate in that between our own funnel that we built very quickly after we priced in end of October, beginning of November, plus incoming deal flow, we've kind of had our pick of targets that we want to look at. What's fascinating to me is the number of incoming outreach that we've had. I think some of that did indeed go to our deal size. And that dilution factor is that because in theory we're a smaller SPAC, and I don't view it as smaller, I view it as, again, better opportunity for a target company as opposed to smaller. Again, we can flex up really, really quickly and really big as we need to.
Awesome. And then the last question I have from you, and I just want to make sure that we're right on this. So someone asked in the chat, why 18 months over 24 months? Is that correct that this SPAC was launched with the 18-month horizon? And then if that is correct, which, judging by that head nod, it looks like it was, why 18 months over 24 months?
I wish there was a more complex answer for you other than we were really confident in our deal flow. We didn't think we were going to need the 24 months. We felt confident in it, and that's it.
Hey, that's a great answer. We'll take that. Confidence is key in this market. Again, guys in the chat, I know we had some other questions out there. Everyone wanted Rob to just, tell us which company he's bringing to market. If he could break that news to us on air, we would love it, someday down the road. But unfortunately, that's not the case today. So again, we want to give a big shout out to Rob Stryer, the CEO of Bullhorn Holdings. That's ticker BHSE. So thank you, Rob, for joining us on the show today.
I appreciate the time, and I appreciate the social media and all the audience that everyone's pulled through. And it's a really phenomenal community that I found in the social media side of SPACs. And I appreciate kind of being adopted by everybody into that. So thank you.
No, we appreciate you coming on. The SPACs Attack family has definitely been growing. We try to do this every single day to get that information out there to the retail investor and definitely get the information out there on SPACs that are needed. I did see that this company was based in Miami, and I grew up in South Florida, so definitely, hey, go ahead, go to maybe some Fat Tuesdays for me on the beach and enjoy the weekend. I'm sure you will, Robert. I appreciate you coming on, and we'll bring you back next time.
Thank you, guys. I appreciate it.
Thanks, Rob.
All right, guys. Hey, you guys heard it here, guys. One thing we've definitely been doing, guys, is reaching out to more and more executives to bring you guys the information that you guys need to learn about these SPACs. And the best way, really, at the end of the day is going to be, hearing it from the CEO. And that's what we really try, guys. We really try to get you guys those executive interviews so that you guys can be informed on these stocks. So what do you think, Chris?
Yeah, this interview was a little bit tougher to do, right? So we've been doing the interviews with, companies or the SPAC company that, have already announced deals. So there's a little bit more wiggle room on what they can and can't discuss. So, today was all about, just getting a sense of, what is BHSE targeting? What is the growth of the sports market? So I really like that management team that he has. They have ties to, the NFL, the NHL, and, lots of ties to soccer. I heard him mention one of the gambling associations, board also. So, maybe we see sports betting being a target area. But, lots of different areas to go with sports, whether it's sports team ownership, sports media, sports betting. I love all these sports SPACs. I'm excited to get some deals done because we haven't had as many deals done in the sports market, of late. And I really liked, I was interested in hearing, about this deal size. So again, this is on the smaller size for money raised, right? And, when Rob said, that could be a benefit, right? If you're a private company and you want to go public, maybe you don't want to go public with $1 billion SPAC because you don't want to give up, a bunch of control of your company, take on a bunch of new people on the board of directors. You want control. So maybe, one of these private sports companies, is looking at Bullhorn and saying, hey, we want you on board, as a small partner, to take us public. So I guess that's what I took away from the interview.
Yeah. So some of the things that I'd mentioned, we it's all definitely a difficult interview there for us to get some real information from you. But one thing that I did get, and I liked how he answered it, was some insight on the industry, right? So I asked about the discounted sports teams because I wanted to find out to see if, teams have really taken a hit in their evaluations because really, I mean, just think about it. You can't go to sports arenas like you used to. So definitely there's some revenue hit there. And how's that affecting the bottoming line and the evaluation process of these companies? And so that's why I asked that question. And he didn't give us too much insight on the American one. He said that, pretty much not too much of a discount there, but he did give us some insight on kind of that European look and maybe some of the soccer picks that are out there right now. Because at the end of the day, guys, the pandemic is definitely going to affect these evaluations. And so what I think could happen is maybe these SPACs are targeting these companies also because they're at that discounted price. Because if I can get a team at, let's say, a 30% discount than where it was valued pre-pandemic, then hey, it gives me great upside for the potential revenue once we get through the pandemic and seeing the kind of the audience comes back into the stance. So that's kind of the things that I'm paying attention to. I also mentioned Sports Radar, guys. You guys saw that smile. I don't know who's going to get Sports Radar, but I got a couple of these sports SPACs specifically with my idea that maybe Sports Radar gets purchased out. And I think that one's a big move. I think, if you look at DMYD, when they released the Genius Sports News and how they're reacting now, what's not to say that if this one gets Sports Radar, then it's just right back up there towards those levels where you see DMYD. And that's why I'm targeting these. So it's going to be interesting. BHSE right now is at 1003.
Mitch, I want to touch on that point you brought up. So excellent point on the discounted values of sports. So, we talk fundamentals on the show. We talk story, right? Story stocks, the story of the SPAC. And, I think Mitch is hitting it on. And again, maybe Rob didn't give the answer that we, wanted to hear about the discounts. But if you follow the storyline, right, all these sports teams, competed last year without fans in the stadium. And they also saw television, viewership down. So that means that their revenue, for the year was down. So how do they make up for that revenue? Some of these teams will be looking to sell a stake in the team, or they'll be looking to sell out completely, right? Because maybe these owners of these sports teams got hurt from their other businesses as well. Owners of sports teams don't just own sports. A lot of them own, other businesses, or they're fund managers, and all that. And then, we saw that trend with now sports betting, right? More states are legalizing sports betting to make up for that loss of revenue. So follow the story, follow the train, right? The missed revenue, the where they need to make it up. So, we talk about a lot of SPACs, right? Being, the market saying they're overvalued, right? I think you're going to see some sports deals done, as Mitch said, at a discount, right? And, that discount may not pay off immediately, but in a year or two, when that revenue returns to 100% occupancy in the stands, when, sports betting takes over and they get that additional revenue, I think sports is a great market to be in. And that's why I've been looking at so many of these sports SPACs. I know you have as well, Mitch. So, I just want to emphasize that point you said with the discount in sports teams. And again, Rob said, maybe not so much in the U.S. I tend to think maybe it is there with some of the smaller market teams maybe, but soccer, especially in these European teams, there are some discounts out there for companies looking to acquire.
Yeah, I was watching actually some SPAC content a little bit earlier in the week. And one thing I noticed, guys, is that they mentioned a lot of maybe NHL targets. You know, hockey is very adaptive, and you could see some of those companies be kind of worried about their revenue. And so with that, looking for a stake, looking for a minority stake to keep them around. You know, there's going to be a lot of, like, you know, you can look at the major sports, like let's say football or basketball, and you could think how those could be all right. But those lower sports, the ones that don't get that much revenue, are the ones that are really struggling here. And the biggest thing is also is they're not quick to adapt to, let's say, the safety procedures that the NFL or NBA can adapt to, just because the money isn't as much. You know, there isn't. They just can't be spending and spending and spending in the NHL. They actually have to be smart with their money and how they spent that revenue. So definitely, I'm going to keep an eye out. Some of the ones that I have, guys, I have SEAH, I have BHSE. I've even thought about getting a little bit of our, Red Ball acquisition, Redback, but I'm just kind of confused on that one, and I'm not sure where they're heading, and I don't think they know. And with that being said, I think that potentially with that one, you know, at least I think the Red Sox is out of the question now. The biggest thing to pay attention to now is going to be, where do they kind of readjust and start hearing another rumor, because I think these guys, I really thought that they were going to get, you know, the Red Sox, and I thought they were trying to work out particulars, but as you can see, it definitely changed. And, you know, this is Billy Beane, man, Moneyball. You know, what's not to say that he doesn't look for maybe a different baseball company or a different baseball team. So keep your eyes out there. I'm really excited because I personally, I would like to see kind of one of these SPACs actually get a team, because I think in the long run, we need one, and a successful one, to kind of get more into the SPACs. And we could potentially see these even into the next year if we could get one and it be successful.
Yeah, and you know, there just aren't a lot of publicly traded sports teams out there. And you know, as big as the fan base is for sports, that's, you know, I think something that's missing, right? People want to invest sometimes in brands they know, right? Companies they know, they love, right? It's why, you know, people, they invest in Apple, you buy Apple products, you know, you're loyal to some of the stocks that you own. And, you know, sports, we have a couple publicly traded ones out there, but, you know, not a lot. And, you know, Mitch, that NHL point, I think, was spot on. That the NBA and NFL and even college sports, right? They get so much of their revenue from TV deals. So when they didn't have the attendance, they still have these large TV contracts to make up for that. The NHL doesn't have a huge TV deal, and they actually, NBC Sports Network that they were airing games on, it sounds like Comcast is cutting that channel. So I don't even know what that means for NHL coverage and that rights deal. So maybe that ends up hurting, you know, NHL teams down the road even more. And then, you know, baseball has a decent size, you know, TV deal, but baseball's attendance too, right? Baseball plays 162 games a year. They have 81 home games. So when you don't have fans filling the stands for 81 games, that's a little bit different than an NFL team, you know, that has only 8 home games a season to put fans in the stands. So, you know, definite storylines to watch with the difference of sports here. So I know we're getting close to time. The one thing I want to say, you know, if you don't watch any of our other shows, you may have missed this news. But you hear us talk about Kathy Wood a lot on the show, right? Kathy Wood, and she's a fan of SPACs, right? And I give her a lot of credit for that. She's buying SPACs before they even complete deals, you know, which you don't see that with other ETFs, right? They're waiting till deals are, you know, completed, and they're not even really adding a ton of ETFs. Kathy Wood, one of the best fund managers out there, she loves SPACs. She's actively adding SPACs to a bunch of her ETFs. If you guys haven't heard, Kathy Wood is going to be interviewed tomorrow on Benzinga by our CEO, Jason Raznick. You do not want to miss this. So interview is going to be 2 p.m. Eastern time to 3 p.m. And for those of you watching this, you know, today, I want to let you know that you can actually possibly ask her a question. We have a contest going right now where 3 viewers are going to be able to ask questions from Kathy Wood. So, definitely keep an eye out on that, and, don't miss that interview tomorrow.
All right, guys. Like always, guys, we're going to be wrapping up and moving towards Zinger. Well, actually, just Power Hour now. I don't know why I keep saying Zinger Nation, but we are all Zinger Nation. We are all part of Zinger Nation, right, Chris?
That's right.
Yep. And like always, guys, definitely smash the like if you got some value out of this. I'm going to keep an eye out on the stock that I'm pretty big on now, Chris. I'm pretty big on RMO now. I've been sizing in. You guys know that I'll be keeping an eye out. I'm in the green and feeling good. So I'll keep an eye on that one, and we'll keep moving through here. Like always, guys, definitely smash the like button, smash the subscribe. Move on over to Zinger Nation, guys. Zinger Nation is going to be starting up right here. Let me get you the link so that you guys can move on over here. All right.
I put that link in for the Kathy Wood question.
Boom,
So,
boom.
again, make sure you sign up. That's a great contest, right? To be able to ask Kathy Wood a question. Who wouldn't want to ask Kathy Wood a question with all the success that she's had in the market? I know I've got tons of questions I'd love to ask her. So make sure you sign up for that, and, that great opportunity. And, make sure you watch this interview tomorrow. Kathy Wood's done so many interviews, but I've watched a bunch of them, and they're all different, right? She's asked a wide range of questions. She answers all of them. She's very transparent, right? It's an active ETF. I'm looking forward to that interview tomorrow with Jason Raznick.
All right, guys. We'll see you guys next time on the SPACs Attack, guys.
Peloton of 5%. What's up, disciplined investor? You got Benzinga CEO Jason Raznick here with us. The man, the myth, the legend, Tom Nash. Peter Schiff on the Power Hour with us live today. Interesting, different, unique, innovative companies. Mia, you are live with us on the Power Hour. What's up? Thank you so much for inviting me on. Jessica Billingsley, that is the CEO of Aperna. The best trade idea resource out there. All right. What's up, everybody? Happy Tuesday. You guys already know that Wednesday, hump day, is my favorite day of the week. I don't know. I'm just in my zone. We're cruising, and it's called hump day. I mean, what better is there to ask for? This week, it is absolutely going to be my favorite day of the week, and you know why? I already see an early question in the chat. How do we ask Kathy Wood a question? That's right, guys. We are delivering for you if we do one thing. You know, maybe it may not be trading well, which we think we actually do a decent job of. Maybe it's not telling funny jokes, which we also think we do a decent job of. But at the very least, we deliver for you guys. But by popular request, Kathy Wood, the most powerful person in finance in the stock market right now, maybe? You know, I guess not as powerful as like a J Power, something like that. But absolutely influential in moving stocks. Definitely. Kathy Wood is in there in the cut on this one. Tomorrow, hump day, Wednesday, 2 o'clock Eastern. She is going to be live on the channel. So if you guys want to hear her talk about hot stocks, how her investment strategy, how she picks things, subscribe to the channel. And also just like the stream, right? We're trying something different today. We've got the all-day live stream running. We're also running each of the shows individually. You know, we've been testing it out with the formats, okay? So there's the deal there. Somebody's saying, is the audio off? I don't think so. I would imagine that somebody would tell me if the audio is off. But again, Kathy Wood tomorrow, 2:00. And what's even more exciting about this one is that it's not us who's going to be interviewing her. It's you guys. 3 people. 3 lucky winners going to get Ask Kathy a Question live. That's right. Your question's answered. Either you can hop on the stream and ask it yourself, or we'll ask it for you, whatever you're comfortable with. But I'm dropping the link there in the chat, guys. Go ahead. Rohan, somebody say my microphone volume is crazy. Is it crazy loud microphone volume? Let me know. And somebody else is saying super choppy. Well, that's okay. I'm just sort of robotic today, guys. Choppy chop. All right. Well, if you want a non-choppy stream, and so again, we're running 2 streams. One of them is chop. One of them is not. Here, I just pasted in the link for the non-chop stream, which is for the individual show. But again, guys, I'm not done hyping this up. Again, we worked our asses off to be able to get Kathy Wood for you guys. We reached out so much. We did Twitter, email, LinkedIn, Facebook, trying to find like her long lost nephew who can get her to come on an interview with us. And we're doing it. Again, we would not have done that if it wasn't for you guys, for Zinger Nation, all you out there. Somebody's saying the mic's not loud. It just sounds like shit. Okay, that could be a me problem. Oh yeah, I know what the problem is. Producer Rohan.
Yep. All right, how's that? Is that better? Yeah, that's probably a lot better. Okay. All right. Well, okay. All right. I will take 70% of the fault in this because it's all you gotta be responsible for stuff. But producer Rohan was nowhere to be found. I had to set up everything on myself for today's show.
That was definitely my
fault. He was
fault.
just gone. Yeah, I mean, what the hell? We do this every single day. It's just gone. Nothing's on. I mean, half the shit still isn't on. I just figured out what I could in the 10 minutes before we go live. But all right. Again, dropping the link in here. Kathy Wood, register. And then check this out. If you guys want your question to be answered after you sign up, there's a next page that has like some social sharing links. The more that you share this and the more other people you get to register, the higher your odds are of being able to ask Kathy a question. So we're going to be picking at random, right? All right. It's going to be like a lucky drawing where we're picking out who is the lucky winner that gets to ask Kathy a question. And the more you share this, the more people that you get to register, the better odds, right? You have more entries. So let's say that there's 10,000 people who enter, but you get 8,000 of those people to register, right? You got 8,000 out of 10,000 entries. It's as simple as that. So I'm spamming in the link again. Register, check it out. Again, we're doing this for you guys. Personally, I wanted to get, like Kanye West or something on for the big interview. You guys said Kathy Wood is the answer. So it is going to be Kathy Wood. And there we go. And Jay Patel, lucky, interesting strategy, saying put GME in the title and you'll get more views. Yeah, I mean, let's open it up like that. So let's do 2 things to open. Let's do 3 things. First of all, I'm going to preview our show today. Second, let's start by taking some stocks out of the chat. I've got a big list to talk about, but let's take some stocks out of the chat, and then I'll tell you guys the guests. Again, the idea of this show, the reason why we're spending this time together is we want this to be the best trade idea resource out there, guys. I just spent 6 minutes rambling on about Kathy Wood, but I do that because she's bringing the ideas. But again, that's what this show's about. If we're not delivering ideas, let us know. Stocks on my list already to talk about today. We got Clover Health, Ford, Hims, Inseego, Rocket, Torch, Vislink, NIO, Voyager. That's already a pretty exhaustive list. But let's throw it out to Zinger Nation, guys. And again, I've got to watch two chats at the same time. So let me know if I'm missing your question. Just put it in there again. But again, drop in the stocks you want us to talk about. So we'll do that. Coming up on our show, we're gonna have Robert Roy. We're gonna have Steve Kalajian, Options Mike. So we're gonna be doing two options guests, two options trading guests. If you want some options ideas, you want to get some swingers going, we're gonna have two there. We're also gonna be doing some swing trading. So boom, delivering on the guest front. So again, guys, drop me in the tickers you want us to look at today. I'm gonna start pulling those up, and let's just kick it off with a couple of user calls. Let's get some Zinger Nation out there on the phone. If you guys don't have any good tickers, any interesting tickers, then I'll just start hammering down my list. All righty. So let's get that phone number up there, producer Rohan. Let's get some zingers on the line. Let's hammer this thing out. We got 2 hours of ideas to talk through. In the first one, I'm going to start off with this ticker out of the chat because it was on my list and it was the first ticker mentioned. Who gave us this one? Christian Gallagher, our good friend. Inseego is a stock that he says to talk about. All right. Sort of a bloodbath. And when I say sort of a bloodbath, I mean like totally a bloodbath. I mean a freaking disaster of a stock. So let's talk about this one. This is a stock that I pitched. It's a long-term holding of mine, guys. You are not going to see it in my brokerage account that we share every day, because I actually hold it in my IRA, as I've mentioned in previous episodes, right? This, again, is a very long-term holding of a stock of mine. The reason why I like this stock is because I think that 5G is going to replace the lines that are dug through the ground to power internet into every home in America, in the world, etc. Right? It's a super labor intensive, expensive process to dig lines literally into every dwelling to provide people internet. What Inseego does is it pulls down the 5G signal, rebroadcasts it at Wi-Fi as Wi-Fi, so that way you can be in your home. You have Wi-Fi going out throughout the house without having to have lines dug in, right? I mean, you move somewhere, all you need to do is just plug the thing in. You don't need to call Comcast and wait 3 days for them to have somebody come out and set it up. So there's the deal. That's why I like Inseego. Again, long-term holding of mine. The report wasn't great. I haven't gone through the full press release. If somebody has, I mean, let's look at it together real quick. And this is, maybe we can even turn this into one of our educational segments where we talk about why or what to look for in these press releases. Let's do some of that due diligence. So here it is on the screen. I know it's small. I'll zoom it in here in a second. So, alrighty. All right, there's the zoom on Inseego. Again, I just looked at the top line numbers so far and they looked fine. And the reason why I don't hop onto one like this is because, I mean, this is a super long-term holding. It's in the IRA. It's not in the brokerage account for a reason. All right. Let's find this bad news in here. Okay. 4-line growth, that's all fine.
Luke, I guess we don't have people wanting to call today. I had one guy call and he just didn't say anything when he picked up. But oh, here we go.
All right, there we go. All right, I'm going to keep looking at this press release. All right, what's up? Patch him through.
He's here. He's on the line. Who's this? You're on the Zinger Nation Power Hour. We just hear ourselves. You gotta mute your stream. Oh, someone's on the line.
Hello?
Barely hear them.
Nope. All right, next one, Rohan.
Hello?
Oh,
there we go. All right, what's up?
Hello?
Hello? Can you hear us? You're live.
Yes. Oh, I didn't realize. Sorry, I had the stream playing at the same time, so I didn't realize. How you guys doing?
Good, man. How you doing?
Not bad, not bad.
What stocks are you looking at today? What's on your mind? What do you want to talk about, etc.?
So NIO. I'm long NIO. I know the report was a little bit underwhelming, but I just wanted to know, like, what do you think is going to go on in the future?
All right, so we're going to come back to Inseego. Let me put it on the paper. Let's go look at NIO for a second here. That was one that was definitely on the list. And not just NIO, guys, right? NIO reported earnings last night. The stock's getting hammered a little bit, down 10% after that. Here's a 2-day chart up. All the other Chinese EV stocks are getting taken down with this thing, like your XPengs and those sorts of stocks. Here's my take on it. The numbers weren't horrible. Right, the quarterly results. Let's show them on the screen here. I'm in my Benzinga Pro, so let's show these numbers on the screen here. So they reported EPS -14 versus -7. Sales right in line. They reported 1.2 billion of revenue versus a 1.01 billion estimate. So the numbers weren't horrible. But if we zoom out and look at how the stock has moved over the past several months, I mean, here's a 6-month chart, right? The thing has been explosive. Whenever I see charts like this, it makes me nervous that the market wants to see a hell of a beat to support the price, right? You see, I mean, the stock went from in this is 6 months. It gets more dramatic if we zoom further out, but over 6 months, stock went from $8 to $44. Okay, that's what 550% return right there. Whenever I see charts like this again with all that momentum and all this optimism built into the name and that sort of thing, it makes me nervous that the company really needs to be earnings or really needs to provide some positive news to support the stock price. If you're a long-term believer in the company, I don't think that there's anything in that NIO report that should change your thesis. Right? If you're a valuation person and you thought that they were going to have a blowout quarter to support their higher valuation, they didn't do that. In terms of the price action right now, I mean, the thing is still a falling knife. Here I'm zoomed into a 2-day chart. We need to catch some support on this thing, right? Whenever stocks are in this downtrend and they keep going down, especially when there is some sort of news catalyst there, I don't buy them, right? I sort of wait. I wait to see some of that confirmation that, okay, a bottom is in and there is upward buying pressure, especially in the last 15, 30 minutes of the day. So that's my take on NIO. I wouldn't be looking to buy the dip just yet. Maybe if you want to average in, sure, that's something that you could go ahead and do. I'm not in the stock right now, but if I were to get into it, I would want to see some sort of confirmation that the bottom is in. Because who knows? I mean, it could be 3 days of selling, right? But before a bottom is put in. So there's my take on NIO. What's your thought on it?
No, I kind of agree with you. I was just kind of expecting a little bit more. But as far as the deliveries go, but I think they had a pretty solid report. They're still a relatively new company, so I couldn't really expect too much.
Yep, I hear you. All right, man. And what's your name?
Raheem.
All right, Ryan. Thanks for calling in.
All right, appreciate it, Luke.
All right, appreciate it. All right, so let's go back to this Inseego. Let's throw the number up again, Rohan. I like doing at least 2 a day. So let's get another zinger on the line here. But we were talking about Inseego, why the stock is getting hammered so badly off this report. There's nothing that jumps out right away as bad. I want to look at the financials and see if they had margin issues, because that's something that's been a concern in the past. And just hold on one sec, Rohan. Let's close out the Inseego, because we got a lot of other stocks
I'll let
to
you
talk
finish
about.
that one.
There we go. Okay, so revenue, cost of revenue. So what's the margins here? So you have 54 over 86. All right, so their gross margin here is what is that? 37%. Here we have 31 divided by 52. So yeah, margins got worse. That could be it. But I don't know. All right, Inseego's going on the homework list, guys. I owe you this one again. I still like the name long term a lot. Again, it's in the IRA, not in the brokerage, not in the trading account. I am very friendly with the top analyst who covers the stock. I tried to call him before the show. He didn't answer my call. So I'll make some more dials tonight, and then we'll get some more insight on that Inseego trade. All right, Rohan, we have somebody else on the line.
We have someone on the line. Do you want to hop on?
Yes, buddy. Yes.
What's up, man? How's it going? You're live.
Hey, buddy. Hey, how are you guys? I've been listening to you, and you guys been amazing with the job you guys do. I need your thoughts on the USO, on the oil, and the Quest Diagnostic, DGX. The
All right,
oil has gone up, so I want to see how you guys see for the summer, or what you're thinking.
Yeah, let's zoom out oil. So again, the first ticker asked about was ticker USO. That's oil. I'm gonna read that out. It's Ukulele Sandy Oscar. USO is an ETF that tracks the price of oil futures. So generally speaking, when oil futures increase, the price of USO increases, and vice versa. You know, speculating on the price of oil. I'm gonna throw this one out to Zinger Nation. If you guys like oil here, right? Again, USO is at 41. I don't have the futures handy, but if you guys like oils here, throw me in the one in the chat. If you don't like oil, throw me the two. I'm sort of curious where everybody is at. A long-term thesis on this thing. I personally am still an oil bull. I've been an oil bull for quite a while now. I think that it is a reopening play. I think it's sort of a secret reopening play, right? There is going to be more fuel consumption. That's a fact. OPEC already hinted to us that in April they're going to be reducing supply. You know, you've got the Biden administration in the U.S. who may make some changes to some of our own energy production policy versus the Trump administration. And then, of course, the elephant in the room. Are we going to be moving off of oil, right? Is that something that we're going to be moving away from as a world? The answer is probably yes, but I think we're a hell of a ways away before it's a super notable impact. Do electric cars have a big impact on that? Yes, they do. But think of all the stuff that oil's using, from like plastics and you know, that sort of thing. I mean, plastics, jet fuel. I mean, we're launching more rockets today than ever, right? Are rockets going to replace cars in terms of energy consumption? No, nowhere near. But again, I still think that oil has more going for it that it doesn't. In the chat, the question, the challenge, first thing that we threw out to Zinger Nation, opinions on oil. 1, if you're bullish. 2, if you're bearish. We definitely got way more oil bulls in the chat. So there's that one. Quest Diagnostics, that's the second ticker that was talked about. I don't know a ton about this one. I don't have as much of an opinion on Quest Diagnostics. That's ticker DGX, Delta Golf X-Ray. That's the stock that we're talking about there. And we do have an important comment in the chat saying USO does not make the same moves as oil futures. Stay away from USO. There are probably better ETFs out there. If somebody knows what those better ETFs are, drop them in the chat, because I'm curious there. But again, Quest Diagnostics, I don't know a ton about this company or exactly how they make money. I know they did make money from COVID testing. I would imagine that COVID testing is only going to decrease from this point forward. So that can't be good for the stock. But again, I don't know a whole ton about this one. How's that?
That sounds good. The only reason I thought of DGX, so for example, I'm from New Jersey, and what I hear, there's 3 major players in the hospital industries, and they are merging left and right with all the small hospitals, and I hear like they're going after the labs for their work. So that's what I wanted to see with the DGX. But what you told me makes more sense, and you've been helpful, buddy.
All right. Awesome, man. And what's your name?
D.
All right. Shout out, D. Give D a like the stream for D. Thanks for calling in, man.
Thank you. Thanks, buddy.
All righty. All right. I'm going to pull some more tickers out of the chat here. I got to scroll way back to when I first dropped that for some chat tickers, and then we'll start buzzing through my list. You know, we got to move quick today. We got a lot of stocks moving today. S&P is down a little bit. All right. Let's see. All right. Next one. All right. KMPH. Let's do that one. Clove, CCIV, SOS, KMPH. All right. That's the list that we're going to grab right now. All right. KMPH. I said we do that one first. Chem Farm. That's a Vivi stock, a Vivi BioQueen stock. I believe that there's news here. Let's look at it. Okay. Let's see it all. All right, so the stock was halted on what, though? I thought that they had a PDUFA date. All right, somebody help me out. I'm going to look around for this one. If anybody knows what the news was on this stock, KMPH, again, that's Kilo Mike Papa Hotel. That's the name that we're looking at right now. Pulling this one out of the chat. The stock, I believe, I'm not positive, I believe, had a PDUFA date today that is an FDA decision date. Let's see. There it is. Okay. All right, let's check it out. All right, so Food and Drug Administration is scheduled to issue its verdict on ChemPharm Inc.'s NDA for KP415. So that's what we're waiting on today, right? They've got a big FDA decision for KMPH. The thing that I'm going to say about this is that there's going to be volatility. This is a binary event. The drug is either going to be approved by the FDA or it's not going to be approved by the FDA. Anybody who's watched the show for a while knows that I do not invest in these stocks. And the reason being is I don't think that I have any sort of competitive advantage on these, right? I can look at a stock like New York Times and I can analyze the traffic that's coming to Benzinga.com and make some sort of an educated thesis on New York Times. When it comes to will a drug be approved by the FDA or not, I mean, I have no idea. No better idea than the market, at least. I don't think I have an edge. And I don't like that everything is binary, right? The stocks that are going to be way up or way down at the end of the day today, whenever this PDUFA date, whenever this FDA decision comes out. If the news is going to come out intraday, which it could, they are going to halt the stock in it. So if you're in it now, you could get stuck in that halt and just have to sit on it until the news comes out. The news could also come out after hours. That's what I would expect is probably more likely. But again, it's if you're in this name now, it's going one way or another. If you're trying to find a bet to make, it's going one way or another. I stay away from these names because of that binary nature of them. But that's what's going on with this name. And you can see pre-market. Here, this is a way back. This is a 1-year chart. Let's go to a 2-day chart. All right. So you can see, or I guess this was after the market opened. We got some crazy volatility, right? The stock dropped from $10 all the way down to $8 and then right back. So it was halted already. There is going to be news on this thing. So stay tuned. The decision is expected today. It's either going to go way up or way down. So there's that one. Let's keep hammering through some of these names in the chat. CCIV, Churchill Capital, Lucid Motors. The bleeding has not stopped. You see this stock moving lower today with the NIO news, right? We covered NIO already today. I said I wouldn't catch the falling knife on NIO yet. I'd want to see some sort of confirmation that a bottom is in. And look at that. When we were talking about it, I saw somebody in the chat notice this. We had these 2 green candles here, and somebody in the chat said, hey, it looks like the bottom's in. No, it's not. Look at we just crossed below those previous lows. That's why I don't try to buy these dips, right, or try to time them. Will I ease in sometimes? Sure. But again, I want to see some sort of confirmation that the bottom is in. It's not yet. So we're seeing some action today out of CCIV. It's trading down on that NIO news. And I'm going to say the same thing about CCIV that I said about NIO, which is, hey, look, we've got these 3 red days in the stock. Do I want to be the one to pick the bottom and think I can time it exactly? No. Somebody's saying in the chat, how do you identify the bottom? Let's see some green candles, and especially into the close, right? 3:45, 4 o'clock. We have the high volatility time that the stock is moving higher, right? That's how I identify that the bottom is in there. I want to see a nice uptrend. We're making higher highs, we're making higher lows rather than we're making lower lows and lower highs as we can see on the chart right here. In terms of an opinion on valuation, we didn't do this last week. I wanted to, but we ran out of time. I did do some valuation work on Lucid Motors, and the price target that I came up with was right around the $30 mark. If it would be helpful to walk through that, it's going to be another Excel tutorial. If you guys want to walk through how I came to somewhere right around that $30 price target on Lucid, hit the 1 in the chat, and we'll make some time for it this week. If not, hit the 2. But that's where I'm at with Lucid. I wouldn't want to pick a bottom right now. I did do some valuation stuff on it. And again, if you want us to run through those numbers, whip out the Excel book, talk about the forecasts, talk about the multiples as compared to other stocks, hit the 1 in the chat. If not, hit the 2. And we'll see if it makes sense to make some time for that later today or not, or later this week or not. Next one out of the chat, ticker SOS. We're hammering them today, guys. Ticker SOS, holding up a little bit. I don't know a ton about the stock in particular, but I am going to use this as a chance to plug my crypto stock. Let's get the group. So Riot and Mara, I saw are both down this morning. which means it's telling me that the price of Bitcoin is down. Let's do a quick little checkaroo. Over the past 1 day, it's down, what, 4% in Bitcoin? Okay, so yeah, it's down a little bit. It's not a crazy Bitcoin move. But all right, the SOS. I don't know a ton about this stock, guys, but actually, we're bringing on an expert in the stock, ticker SOS, at 4 o'clock Eastern today. So what is that? That's 3.5 hours from now. Subscribe to the channel, set the reminder, put it in your calendar. We're actually going to be talking SOS at 4 o'clock today. I'll probably be back on with the expert who's talking about this one. He knows the stock inside and out. So I don't have much to tell you now about SOS. We will be doing this one. I will take a chance to plug my Voyager. Still going up on Voyager. I don't know if we can find this one in the portfolio really quick, but it's moving. Again, if we only gave you one stock and this was it, yeah, I mean, look at this. We're up 3,400% in this stock since we bought it live on this show. We interviewed the CEO on the show. Look at that. We're only down $340 on a day where SPY's getting hammered a little bit. I'll take that all day. So Voyager, again, they reported earnings yesterday. The numbers were great. We actually walked through all the estimates of the earnings on this show. And the numbers came in almost exactly where we estimated it. Again, guys, twitter.com/Luke Jacoby. That's where I dropped some of my research there. So if you don't follow, throw me the follow. I'm trying to get this thing back up. But again, Voyager, that's my crypto stock. That's the one that I'm looking at. All right, and now let's start hammering down. What time is it? Let's see, 12:31. It's just about time for our guest. I'll do one more ticker that was on my list. On my list still for us to talk about today, we've got Clover, Ford, HIMS, Rocket, Torchlight, Vislink. So I still have a ton of tickers on my list that I want to go through, and let's look at some charts. But Ford having its day again, baby. Let's go on Ford. 2021 stock of the year. Oh, we don't have the air horns today. Bummer. But Ford, another not all-time high, but I think this thing's at nearing a 5-year high. It's at least at a 3-year high. You know, the next place, if it gets over this 1350 mark, so it's still got a little ways to go. But Ford is still running, baby. We picked this one as the 2021 stock of the year, and it has been hot for us. I own both the common and I own the $12 calls. The 2021 calls, I bought them when the stock was $8. So we are now in the money on Ford. We're cooking there. Again, the thesis on this one is that the valuation was in line with other automakers, so you're not going to lose your ass on the stock. And then the positive thing that we have going for Ford is that they signaled to us that they're going to be launching out EV vehicles this year. EV products are coming out. We've seen that EV energy just fly into these names. Plus, they signaled to us that they're going to spend a shit ton of money. Yes, that's the technical term, shit ton of money on marketing their EV platform and branding themselves as an EV company. So I want to get some of that EV energy into Ford. That's why we like this name. Stock's at $12.50 right now. So it's having another day. But all right, guys, without further ado, I see somebody saying, do you still own TIGR? Yes, I still own TIGR. I'm going to hold that one into earnings. We can talk more about that thesis. I'm going to write TIGR down, guys. Tomorrow we'll do TIGR, TIGR, along with Schwab and Interactive Brokers. I own the whole basket of the brokerages, so we'll do those ones tomorrow. But all right, guys, time to bring our first guest on, and then we'll get into Rocket a little bit and how we're playing Rocket today. But all right. Robert Roy joining the Power Hour, back for another week. He's not sick of us yet. What's up, man?
Hey, Luke. How you doing, man?
Good. How are you doing?
I'm good. You know, I'm listening to the conversation. It sounds like you're trying to give Reddit a run for its money there with running up those numbers, huh?
I don't know, man. We got some decent ones today.
You do. I love Ford.
Ford is my stock of the year. I don't know how much you can see in my background, but if you can see far enough back, which I don't think you can actually see some Ford buildings here in Detroit, Michigan. So it is one that's near and dear to the heart. I see their autonomous vehicles actually literally every day drive around Detroit, which is sort of cool.
I bet, yeah.
There's still a driver in them, but they're not touching the wheel. I can attest to that. I've looked very closely. But what's on your radar today, Robert?
So a couple of things. I mean, with the market being up as much as it was yesterday, it's more of a retest or relaxed day. It's kind of, we just ran 100 miles yesterday, marathon, and now it's just pull back a little bit. We got a lot of great stocks that are setting up. If I can go ahead and share my screen with you.
All right, let's do it. Always like to get those charts up there.
Yep. I learned this the hard way with Jason. I shared my screen and had this page on it, and it did not work well. So let me do it from here. All right, there we go.
All right, and while we're doing that, I'm going to put a call to action out to the chat, guys. We just ran through so many tickers that I'm out of breath. Smash the like on the stream. Share the stream. We're trying something different today where we've got 2 streams running at once. If you're on the choppy stream, I'm going to drop the link to the non-choppy stream in there. That's with each show broken up versus the continuous all day, so you have that. But again, hit those. And all right, we have your screen up now.
All right, perfect. So just switching over to Zillow as the first stock today. So if I zoom in on a little bit, Luke, you see with Zillow, we had this great run up on our fibs, right? Good V bottom here, good V top there. Nice pullback to the hesitation point, the 0.236. We had this pullback in here into the 618, which this is an inverted H. If you look at it, some will say it's ugly, right? There's the upside down H. You may call it ugly. I call it the prettiest letter in the alphabet because it is one of the greatest trade setups you could ever take. But right now we're resting. Yesterday we had a good pop back above the 50 percentile pullback. And today we test. If we get above that 168.68 tomorrow, get a little bit of a bounce, there's an opportunity up to that 176 half. So that's on my radar for tomorrow as one of them. Another one is Booking.
Okay.
Big fan of
all right,
Booking.
yeah, let's look at Booking.
Right, great run up.
You've got a nice reopening stock there. Okay.
Yep, exactly. With everything that's going on with COVID, my oldest took her first trip this week. She's in Florida. She's a nurse here on Long Island, all vaccinated, all that good stuff. But she went down to Florida. Plane was full. Plane was packed flying down there. So
all right, wait. I got to stop you for a second. I got to tell you what my first COVID trip was.
Okay.
I went, this would have been, when was this? This was maybe last May or no, it was later than that. Maybe September, August. I don't know. So somewhere in there. Right. And I actually got to go to the White House. I'm technically a White House press correspondent.
Oh,
it's not like I'm very active, but I'm on the list. And so I got to go to some events at the White House, and it was actually the day of the super spreader event. If you remember when Trump got COVID, and who's the guy out of New Jersey? Spencer Israel's mayor. What's his name? Spencer. Chris Christie, that's the dude that Spencer Israel always loves. He has got Chris Christie stickers all over the office, but it's where Chris Christie got COVID. It's that was the event that I was at, where there's the White House super spreader where at least 20 people got COVID. I didn't, but that was my first COVID trip. It was a hell of a post-COVID travel experience.
Well, I mean, it's getting close with Johnson & Johnson and the announcement on Merck today coming out to produce. We're talking about a lot of doses available pretty quickly. So, but if we can get this balance, see, we're down. The 236 is the key, Luke. This is a hesitation area. That's what 236 represents. Those of you that don't know that, write it down. 236 is hesitation. We ran up, we pulled back. Yeah, we broke through, but it's the area, it's the zone. It's not a definitive dollar amount. It's the zone. Today we're back testing it, and the most important thing is we've got a confluence here of the 8 moving average.
Wait, so let me slow you down for a second. So
sure.
You have the Fibonacci's up, right?
Yep.
I'm with you there. And you're saying that we're retesting it, and I assume that's that first red line there. It looks to me like we're below it. So tell me a little bit more what you mean by we're testing it.
Absolutely, we are below it. So we closed below 4 days ago, right? We popped back up, right? A little hangman type candle in there, if you would.
Yep.
We pulled back, and yesterday we were right at that support level. We came, just above it, but we're in that area, in that zone. Today we're down below, right? If we stay where we are right now, Luke, by the end of the day, a little bit lower, a little bit higher, even just up above that 2311, I would be very happy. And then look what happens tomorrow. What I'm really looking for, if we close here tomorrow, get above the 2311, maybe 2312, 15, somewhere around there. Get up about that high, pull back to the 2311 and bounce. And that bounce is the entry, not just a move above. That could be a head fake. It's a here kitty kitty.
Yep.
Right? It is a pure head fake in many cases when you get the pop above. If we can get the bounce, I'm in. If not, then and it continues down, I'll pass on it and just keep my alarm set until it does get back up to about that 23, 14, 15-ish level.
Okay, and so guys, let me recap that for you. So we're looking at Booking as a stock, ticker BKNG, Bravo Kilo November Golf. Some people hate when I read the letters like that, but some people it helps. Okay, and so the move is we're not in the stock now, but if it gets up above that, what's the level there?
23.11.13.
All right, 23.11.13. That would be sort of the action, the cue to get long the stock. Is that right?
Correct. We're going to go long on an option or do a bull put spread, but yes, that is the place to take a potentially long position.
Okay, and then I'm guessing that the next point of resistance, so you're long the stock and you're watching it up until that blue line at the top of the chart there.
The 24.50.26, correct.
All right, so 23.11, need to get above that. If so, room to run to the 24.60, I think is what you said.
50.
24.50. All right, there's the move. All right, awesome.
My Brooklynese that's hard to get around sometimes.
All right. Well, I'm the guy who slows everybody down. Everybody's just running, and I do the same thing when I'm talking by myself, but I'm the slow guy. Okay. All right, I get it now.
All right. There is one we took today, and it was Adobe. And I actually put this one up on our one of our Facebook pages, our private Facebook groups.
And what time horizon are these candles?
Say that one more time, Luke.
What candles do you have up on the chart here?
Got it. They're dailies.
Daily candles. So each candle, guys, is one day. All right, keep going, Robert.
So we had this very nice wide channel in there, and we've bottomed out on this 456 level, which is in Fibonacci speak, it's the 0.764. So basically, for those that don't know it, that's the retracement level. We started out here and ran all the way up to here. We pulled back to this red line. That's 76.4% of this initial move. That's what that represents, right? Yesterday, we closed right at a confluence. We had the 471.81 level, which is the purple line, the 618 fib, and the 8 moving average. It's exponential, ADMA. Today, we got a little pop above, and once we got our fail of that 471.81, we looked for the trade. And I threw it up on one of our Facebook pages, and we had 463.97 as our target. And we've had a low today from this chart anyway of 463. Oops, I missed it. Let's see. 463.46 was our low so far today. All right, so we pulled in and hit that level about a buck and a half above there, and we were out of the first half of the trade, which I think we're about 33%, 34.5% on the first half of the trade. We tightened up our stops. We've got the second half of our trade down to a target of 456.44. If we get there, awesome. If we don't, we took in a nice premium on the first position, a couple of points on the options without ever buying the stock. You're talking about entering a trade for $6.5, $7, right? Per share, 100 shares, $600-$700. So nice little setup on Adobe today. But everything we do is based off of fibs, Luke. It's all based off of this. Nothing, for the most part, every single trade setup I look at has something to do with this. Whether I'm sharing it or not with my team or my staff or my students, this is the key for me for the success of the trade is learning how to read the Fibonacci.
Okay, and last week you gave us a lesson on how you set up the fibs on your chart. Could we do it again? We got a lot of comments, a lot of questions. We didn't get to them all last week, so I think it would be helpful.
Sure.
If we could go through the how exactly you set them up. Say it again.
You want to do it on a particular stock? Don't give me the big ones because they've got fibs drawn on them already.
Okay. I mean, can we do Ford? I like
look at it.
I mean, it's at like a 3-year high, so I don't know how much that gives you.
Oh no, it gives me plenty.
All right. Let's do Ford then.
Gives me plenty.
Tick her off, baby.
Here we go. Here's Ford. Right. What am I looking for? Here's the rule. You're looking for the largest directional move closest to the right side of the chart. I'm not looking for a stair step. I'm looking for a thrust move, just a pure directional move wherever possible. In other words, we have this very nice V bottom in here. Good strong move up, sideways, nice strong move up. Good fail, that's our V top. So we're going to draw the fibs off of that swing low there, Luke. We're going to come up to that swing high right there. And we're going to pull them out. All right, so what are we looking at here? Regardless of being all-time highs, right? This gives us an understanding of where the stock heads to next. And notice what happened on the zero line. We drew the fibs, we broke out, and we failed almost immediately. That is a very common occurrence with trading when it comes to breakouts. Instead, if we can close where we are today, retest the 1215 and bounce, I've got a better chance of being right. Will I miss out on trades? Absolutely. We missed booking trades that would have been tens of thousands of dollars had we taken them. But we have a high probability of being right. Over 77% of our trades work because we use this methodology.
Yeah,
right?
Okay.
So the fibs are drawn. We're now looking for the bounce and the move up to that 1316 level.
Okay.
Right? That's the standard Fibonacci.
Okay. All right. So per this setup, then we're above that blue line. So I'm guessing that tells us it's bullish for forward. And then that next line to watch is that red line on the top there. And can you read me that price? It's just a little small to see.
Sure, Luke. It's 1316.
Okay.
I don't know how close I can get in on that for you. Let's see. 1316 is the price point.
All right.
On there.
Here we go. I would like that.
You want me to put an advanced indicator on top of it?
Yes.
Okay.
It might be too advanced for me, but I'm sure our users at least will appreciate it.
Well, I can at least share it and let you know there's other things out there to be looking at. How about that?
All right. There we go.
All right. Let me give it as big a picture as I possibly can to be getting started. Okay. So let's see. All right. So we're going to come down. It's real simple. Luke, you ready? It's three steps you need. You're coming down to the lowest low where you started the Fibonacci. We're going to click on there, on that low. We're going to come up, and it's going to force us to a high. You can't go anywhere inside of here. It has to go to the high. We go up to the very highest high of where the Fibonacci ended. So that one line on the bottom where it says 843, that black down here, and up here at 1215. That's two. Then we're going to go ahead and find the lowest low that it has made before it bounced. Okay. That's three right there. Once we do that, we now have another series of lines. And what I'm looking for is confluence. I want to see if these lines overlap other lines that we had on our fibs. This $12.66 black line is not overlapping anything. So that line itself is of no use to me. This one right here is in the middle. Again, it's of no use to me. So the indicator is not helping us much on this setup. But you get many occasions, Luke, when these pop up right on the existing fib lines that are here. And if we can get them there, the strength is so much more powerful. It's kind of like you take a trader, Luke, that's watching moving averages. You take another trader that watches MACD. That trader watching moving averages is going to make a trade off of that moving average signal, and entry or exit. The same with the trader watching the MACD. But if you've got a trader watching both of them and they happen at the same point, or they give a signal at the same point, it adds strength. If we can add this extra level to it and get it to give us a confluence, it gives us more strength, and the potential of us hitting that target is much greater.
Okay. All right. Not
so
too
did I blow you
advanced for
away
me.
with
You
it?
said it was
Okay?
no, you said it was advanced. I was worried, right? And we actually have a guy on the Benzinga team, Neil, who's learning technicals now, and it might not even have been too advanced for him. So
Okay.
so that's good. We're getting more advanced, but not over the top yet.
We pulled it back.
All right. Awesome. All right. So I threw out that ticker. You have any final tickers for us to look at today?
Yeah, there's tons, guys. GMC, I picked up that naked put last week at a quarter, and it's down to about 2 cents right now on the $21 strike. I'm looking at play again this week. I'm already in one for this Friday, but
all right, can we look at play? Dave and Buster's, guys. That's the company ticker play, PLAY, Papa Lima Alpha Yankee.
All right, so here's the setup. Beautiful setup on our moving averages. This thing just rocks. There's no slowing down on this, it seems, right? Earnings far enough away. So I did this on Friday, which was the 26th, right? So right here on this day, we closed near that moving average. We got our bounce, right? Waited for the intraday move. We took the trade, 48 cents. Where were we? 37 half puts on Friday. We got 48 cents. And right now, I think it's got a wide spread on the bid ask, but I think it was about 15 cents. I think was the last trade I saw a couple hours ago on it. So watch for the pullbacks to the moving averages and the bounce, and there's another entry opportunity. And short puts on these are working extremely well on this one. Yep, tons of them, guys.
Right.
It's understanding.
And when you say short puts, you're selling puts.
I am selling a naked put, correct?
Yep.
Yes.
And let me just explain that mechanism. I sell a lot of puts. I haven't in these past couple of weeks with some of this market volatility, but everybody likes it when I talk through it. So I'm going to do that real quick. But basically, guys, when you're selling a put against a stock, you're getting synthetically long it. The second that you sell the put, you get cash into your account. You take a payday. Great. You're happy about that. The risk that you're taking on is that you'll have to buy that stock at some point in the future at some predetermined price, right? So you know, if the price of the stock you sold puts at $100, the stock drops to 50, you got to buy it at 100. So I do this in stocks that I'm okay owning. And I especially do it on stocks that I would love to own, but just think the valuation is high and want to own it at a cheaper price.
And they pay you to do it. I mean, how much better of a deal than getting paid to trade?
Exactly. Like we did this on Bill.com, right? I did my nice full pitch on Bill.com. We went through the product, etc. But I said the multiples in this thing are crazy. I'm going to sell some puts against it. So if the stock continues to go up, great. I'll take the cash. If it drops 30%, I'm buying the stock at a 30% discount. That's in line with where I want the valuation to be. Great.
Phenomenal. Yep. It's a good setup. And everything to do with the options. I mean, you're talking Ford, right? Covered calls on it. What did I just figure out when you were doing this when you first started? It's 6.5% a month to write a covered call.
Yep.
Where someone's going to pay you to buy it at a higher price than it is right now.
Yep. And when you do covered calls, and then what you're doing there, guys, is you're selling calls against stock that you own. How do you pick your strike prices?
Delta of 40.
Delta. Okay, we did that last week. All right. Delta.
Yep. I'm looking for a delta of 40 on my short legs.
Yep. Awesome.
Yeah.
All
so,
right.
I mean, hey, don't get me wrong. I could talk for 2 hours on the candidates on my list, but I know you got others coming on too. So.
All right. Well, Robert, I appreciate you hopping on with us, giving us the ideas, spitting them out as always, and giving us a nice little lesson.
Yeah, it's been fun. It's been fun, guys. You can get in touch with us. You see there's a link in the chat there. There's a lesson on how to draw what I just showed you on Fibs. So it's actually a 3-part series. Go ahead and check it out, guys. It's free. Just go click on it, and you'll get a copy of that sent to you. It's easy to take, and you'll get a good understanding of how Fibs work.
All right. And Christian Gallagher in the chat is saying this guy needs to be on more. Don't worry. He'll be back next week, every week.
Cool. Hey, I appreciate it, Luke. Thanks.
All right. Thanks, Robert.
All right. Take care.
All right, guys. I was sort of teasing you with some stocks that we have to run through. Something I'll throw up before we do that. We turned nicely green on the day. Let's go. Started the show. We were down $400, up 800 now. I'll take that all day. This is the live account. Again, you can see these nice, pretty $12 forward calls that we have just hanging out, have been running for us. But all right, let's run through one more ticker. And then I want to do our chat challenge, to do an update on it. I'm going to ask producer Aaron to drop the link for the chat challenge in the YouTube chat. Producer AB, drop that link in there. I actually don't have it handy right now, so I need it. And everybody else can see it too. But the question of the chat challenge that we ask, guys, is what is the price of SPY going to be at the end of the week? That was the question. Oh, shit. First air horns of the day. Let's go. All right, we might need to do a second air horns in a second here when I show you this next ticker. Let's go. RKT Rocket. As you guys know, that one has been somebody saying too, can you drop a link of the fib in there? Yeah, let's throw it in there. Producer AB can get that one in there too, but also we need to get that chat challenge link. Okay, he's got it for me. Thank you. But all right, rocket companies, guys. RKT. This is a stock that Jason, who's gonna be hopping on in a few minutes with me, has been long forever. I've been long this one forever. And when I say forever, I mean literally since their IPO. So it hasn't been that long, 6-12 months, somewhere in that range. The stock is having its day today, guys. I mean, you see this up on the screen. 30% move higher today. 2-day move over 50%.
What are you talking about? What are you talking about? Rocket? $31.38. Okay, so all you haters, all you catchies, or all you people saying, Jason, your stock's not doing what it's supposed to be doing. Well, today's the day that you eat a cheesecake. Okay?
All right, and in addition to the stock being up 30%, you get a $1 special dividend.
Yeah,
So you
one,
get
that's
cheesecake,
not correct, Luke.
special dividend,
$1.11.
$1.11.
3 ones, not $1, but 3 ones. Okay.
Is that how they got to that number? Do you think they were like, all right, we could do $1 flat, but we like the 111.
Yeah,
It's a strong number.
It's a strong one. It's a strong thing. There's actually, I can't tell. Yeah, okay. But let me just go back to this. You guys have been talking about, my RKT, and I said to you, I bought it in the IPO at $18, and I bought a decent amount of shares. I bought as many shares that almost cost for my house.
So at 2 million, so you're getting that $2 million special dividend.
I didn't buy 2 million shares because that'd be $2 million dividend. No, I bought. This is one of my biggest positions I've ever purchased. And guess what? Brian Schlechter said he doesn't believe in me, but I don't know, whatever. And so the whole thing is, it went down, it went up. So did Upwork, so did Express Spa, so did so many stocks, guys, that have gone 10x. Tesla, 100x. I don't know what to say. And so I said, I buy this for the long term. I buy this for the long term. I buy this for the long term. I had Rocket options, guy. Luke, you're gonna freak out. So I have Rocket call options expiring at the end of March. They were down until a week and a half ago. They were down 90%. Okay. So before earnings, I was down 9%. So I bought them for say $4,000. I was down to $300 on it. So I said you know what, for shits and giggles, I'm just gonna buy more of this because I've already lost 90%.
Yep.
So I doubled or not tripled the position, and today that position is up 70%. So if I was wrong, I didn't care. Whatever. So that's what I say. And wow, for a grandpa, Jason looks really young. Okay, thanks. And so that's the story. And now there's other mortgage stocks moving up today. You got to remember that. Now, Rocket's not just a mortgage company. That's a different. Rocket's not just a mortgage company. It's a fintech company. So we'll see. Yeah, Rocket is paying $1.11 dividend. Rocket is paying $1.11 dividend. But I'm always gonna have haters that go against my picks. Like Neil Hamilton. Yeah, Neil Hamilton short. No, the biggest short of my picks is Spencer Israel. When I was doing
Chris
Tesla.
Christie lover Spencer Israel. So if 1, he doesn't believe in vaccinating children. 2, he loves Chris Christie. 3, he was short Rocket.
Yeah, so that's what happens. So I own my Rocket now. Luke's showing me at 31, 32, baby. Let's go. Let's go. Let's go 34. Let's go. Let's go. Let's go. I'm biased. I'm long the stock. Let's go. Let's go 34. Okay.
All right. Look at that. Another one crossed off the list. TIGR RKT Rocket. Guys, somebody was asking what's the okay.
I feel bad. This Brian Schleter is being very nice, and I'm just giving him a hard time. Raz, I do believe in you. I said I was holding because of you and never gave up for it. You are the man. I'm gonna send you a check. All right, Brian. My address is 4564-4444. Send me a check. Take $1,000 checks every week. Thank you. Appreciate it. Boop.
All right, there it is. And somebody's asking. Oh, there we go. We got 33 coming on this one, baby. Hitting the cash register there. All right. Opinions on this one. What you do with it now? Here's the 2-day chart, guys. I'll say one thing is I never short stocks that move like this. If you're thinking about taking a crack at it, maybe you want, there's 33 handle. Maybe if you want to take a crack with some action or with some options, trend is your friend, baby. If you're not in it now, I don't know. Is it too late? I don't know. I'm still in this. I'm not touching a share because again, I am getting that $1.11 special dividend. That's a very, very nice payout, right? You get 3% on the dot plus the regular dividend. So you're gonna get more yield from that out of your bank.
You have your chat wrong. You just have top chat. It should say live chat.
Live chat. Okay. So we got the 33 handle right here on Rocket. The other, somebody's asking, why is it moving? Why did it jump? I mean, keep in mind that this is a stock, right? That had 40% of the float sold short. I mean, that's a massive percent. Anything more than 10% short is huge. If you want to look at Apple as a comparison, right? It's maybe not a great comparison. It's the biggest stock in the world. I mean, Apple probably has what 1 to 2% of it sold short, right? Apple is a huge chunk of the S&P 500. So they announced this dividend. They put out amazing numbers. We looked at those numbers on this show.
All right. Rocket's $1.11 is an annual dividend. And yes, a special dividend. A Lane or SR. Yes, I got a hot hand. If you want to see how hot my hand is, go to my Instagram. Go to my Instagram and look in Raznick and look what we just won, the national championship flag football game. And I've never coached it before, first time. So Luke is getting mad that I'm pushing him over, but I got 2 other things to tell you guys about Rocket. So, I put in the work. Jim Cramer, he listens to conference calls. I do too. I put in the work. I listened to that conference call. the Q&A session. An analyst asked a question about what are you guys going to get into, Rocket? How are you going to, whatever, diversify or whatever? So the CEO, named by Jay Farner, says, think about this. We help people with transactions they don't look forward to. We take cumbersome paperwork and we assemble it. We make it simple. And we make an app. We make an app. Okay. That's what this is about. So he said that's what we do. So you wouldn't be surprised to see other things they're going to come out with that are cumbersome processes, and they're going to automate financial technology wise. So there's Rocket Home. So you're going to buy a house, use Rocket Home. Now, I don't know what else is next, but could you see a Rocket Life Insurance? My opinion is why not? That's a thing you don't do often, and you use technology to automate it. Doing a mortgage, guys, you have to have licenses in every state. It's a very hard process. They have 13,000 employees. There's a reason. So they can scale to many different things. So think about things that are hard to get done, that you don't do that often and you dread it. Expect Rocket in the next 36 months to get into that. Rocket started a thing called Rocket Labs. Rocket Labs is a new initiative. They're going to create new businesses to help solve these other problems. Now, I am biased as I say this because I own the stock and we're here in Detroit and we're right here. So there's some biasness. So I'm not saying go buy the stock or go do this. You guys do what you want to do. I've owned it since 18. You guys asked if I sold, and Dennis said, so I don't sell. I just keep it. You'll ask me in 6 years. Yeah, I'll still have it. So I don't know what else to say about that. And if we want to pull up the screenshots and chats, I can do that. But you guys know what I've said, and most of you guys ended up shorting it. And I just, I see it differently. Now, if it goes to, hit 36, Luke just asked me on the message bot, would I take any off? At 36, it may be prudent to trim a little bit. I've owned it for, I own a lot of it. So maybe I would at that point, but I haven't trimmed yet. So maybe I would. I just have to look and see how I see the volume. I'm a volume guy.
Maybe you unload the options, right?
Yeah. The options.
Don't sell the common because you have the dividend. So if you have the stock and options, maybe you unload the options.
Luke is right. I have the dividend coming. I always, okay. You're right. Because if it goes to, okay. I get what he's saying. All right, guys. So I hope you downloaded our iPhone app. Yeah, Benzinga. We have new apps coming out. Benzinga Pro is taking off. And guys, Kathy Wood, I'm spending an hour with tomorrow. Are you guys going to go out there and spread the word? We have Kathy Wood for an hour for Benzinga. And the only reason we have it is because of you. You guys want it. That's Kathy Wood right there. Follow us on Twitter. Go on Benzinga Pro. Luke Jacoby, Jason Raznick. Follow me on Instagram, RAZNICK. Look at what we just won, the Super Bowl of flag football. And that was my first year coaching. I misspoke. He does not advise. All information. Yeah. Wait, Joel, what are you talking about? I don't advise. I'm not telling you guys to go buy a stock. What is Joel Alvarez talking about? You guys make up your own mind. I only inform my facts. You guys do your thing. There you go.
The only thing that we know for certain is that Kathy Wood is going to be on with us tomorrow. Probably the biggest name in the market. Put the link in the chat. I smash it in there. Hit it. And not only register, but again, if you share the link, it increases your odds to be able to ask Kathy a question live, right? If you have some random penny stock that you're dying for Kathy to add to her portfolio, you can ask. No, we probably wouldn't let you ask that question. But any reasonable question, we will let you ask live. The more you share this, the more people you get to register, the higher your odds are to be picked to ask Kathy a question, or we'll ask it for you, whatever you're comfortable with.
And you must spell Kathy's name right, not wrong. Watermelon slice. Thank you.
Yep, exactly. Neil Hamilton spelt it wrong originally. Not strongest in English or technical analysis. He is strong on his Chris Christie facts. So there's the deal there, guys. And all right, but before we get to our chat challenge, I'm going to bring our next.
Can you find out if Spencer Israel is going to cover his rocket short today or no?
Yeah, I'll ask him. So Spencer, are you going to cover your rocket short today? Are you going to continue to donate to the Chris Christie 2024 presidential campaign? Yep. All right. He did cover already, and yes, he is going to donate to that campaign. All right. So there's some facts for on Spencer Israel right there. All right, guys.
Because the way Neil spells his name is kind of weird. Okay, but Luke, aren't you excited? You have a big guest coming on.
Woo! Exactly. I was just gonna say.
Yeah.
I teased the chat challenge. We'll get to it. Again. The question of the week
was, how many likes
was,
do we got?
We have so we've got 2 streams going today. So on one stream, we've got 91 likes, 366 watching. So that number could use some work. On the second stream, we've got 322 watching, 357 likes.
Okay, let's do the survey again. Do you guys like one long stream or do you guys like it broken up? What do you want? Please tell us. 1 for one long stream, 2 for broken up. Okay, and I'll just tell you nothing else.
Rocket and Jason. All right. We're so distracted. Look at Ford.
Holy
1260. Shit. Let's go.
And guys, I'll be honest. I trimmed some Ford last week at 1181 because I was trying to reduce margin. So I'm the lowest margin I've been in a while because I'm going to load up on something very soon. It's very ripe for a buy, and I'm liking it right now, but I'm not allowed to say it. I don't know. We'll see.
All right.
So I didn't do all the research yet. I don't want to be challenged. There's a lot of ones, Luke.
A lot of ones.
A lot of ones.
There we go. What was another good? We asked another good question today. I don't remember what it was. We got a lot of CCIV. We should do some deep dive due diligence on CCIV later this week. The answer was yes. So we're going to pull out Excel and we're going to do a CCIV deep dive. But all right, it's time for our next guest. We still have some stocks on the list to talk about today, guys. We got Clover, Torchlight, Vizlink, and HIMS.
Take me to the thing.
What do you want to go to?
Take me to the
StreamYard is right there.
Take it to me. Okay, where's your
thing.
mouse? Where's your mouse?
Mouse is right here.
Okay, well, you got to do the thing. You got to play the next guest thing. You did? All right, hold on. Producer Rohan woke up. He's going to play it. So you can pick, Todd Lale, you got it right. That's what we're doing.
All right, there we go. Stephen Kalajian here live with us. What's up, man?
Hey, Luke. Hey, Jay. What's up, brother?
Oh, wait, he can't hear you. He said, what's up?
What up, Stephen Kalajian from Chicago, Illinois. He probably moved to Florida because he likes the warm weather. He likes to play in the sun and
that's it, brother.
Go out with the buns. Yeah, there you go. And have fun.
Soon, brother. Soon.
I wish I could rap.
Soon.
That's the one thing, Steve, that I missed out on. Like I need that rapping ability, the rhyming. I don't have it, you know? The only rhyme I know, whoever said the rhyme did the crime. That's the only rap I know.
Okay, all right, that's a good one. It's a good rap.
It's good to know. Right?
Next time I see you, Jay, we'll work on it, Jake.
All right, he says that next time you guys hang out, you'll work on it together. It sounds like Steven is an aspiring rapper as well.
Oh, really?
And so it could be a duo, a rap duo.
Really?
Yeah.
We'll make a
Does
video.
he know about
Jay.
my flag football championship?
I'm sure he doesn't.
Okay. Steven,
Oh,
I won.
man.
I didn't win. The kids won the flag football championship. I decided to coach a flag football team for the first time in my life, and we played in the championship. The CEO of UWMC. It was the largest SPAC to date so far. We played his team. They haven't lost in 10 seasons.
Wow.
It was my first time coaching a flag football team, and I went headfirst into it. I got video, I got software, and we won the thing in the last 3 minutes, and it was great. And yes, I had a son on the team. I didn't just randomly coach some team to beat him, but yeah, we won.
Awesome.
So woo!
Awesome.
All right, and Steven, you probably have the coolest background of any guest that we bring on. All right, how many monitors is it?
40.
40? 40 on the dot. All right.
Yeah.
If anybody in the
41.
chat has more than 40 monitors, that would be impressive. But all right. I mean, what do you use all 40 monitors for? Like are you just have all the major markets up on it? I mean, what's the deal with them all?
So, hey, great seeing everybody. So basically in my 30, I built predictive analytics. So I spent 8 years of my life building predictive analytics. I leave the charts up dynamically because even though I get automated signals, I have another computer where I can get automated signals. I like looking at the same symbols and every single day. So I look at obviously the NASDAQ and S&P futures, and I look at 30-year bonds, gold, silver, and oil. And then on the equities, I look at the obviously the big ETFs and the biggest names in the S&P. And basically I'm educating on predictive analytics and teaching patterns and identifying trends, reversals, and divergence patterns. And we're just really excited about the opportunity and getting involved and teaching everybody and teaching exactly what I have behind me. And it's really has opened up the world to many traders. So again, the number one thing is you want to be on the right side of the market, and we're able to identify these trends, reversals, and divergence patterns during the day. And again, I've been day trading for over practically 38 years of my life. I couldn't do really anything else. It's what I've done. Trading nearly 2 billion shares of my life, and
Well,
so
I'm sure we could find something else if you wanted to
yeah,
get out of it.
exactly. Wouldn't mind. Yeah. So again, it's really something that I'm able to see and move left to right quickly, and I can see things happen dynamically, and then convey the content and information right out there to all my subscribers. And it's again about moving the needle every single day and just constantly being consistent.
All right, and so let's talk about today in particular.
Mhm.
Anything on your radar? Anything that's especially interesting? Your predictive analytics pointing you towards anything? I mean, what's on your mind right now?
So we saw well, I do this. I do what's called correlation studies, and so we had a big sell around 10:15 early in the morning, and we saw the S&Ps bounce a couple times, and we got short into that on the Qs, the Nasdaq, the Russell. The Russell really was acting the weakest. The TNAs, and we saw some really good drops in the S&P and all the indices that we talked about. Microsoft dropped about 2 on that pattern. So we're able to see that now. I think pretty much that I think the lows are in for the day, even though we did push up about 20 points on the S&P off the lows. Again, the market is just really resilient here at this level, and I think that day trading gives the ability to identify these reversals and these trends and these intraday patterns. But if we do get any big push up, I mean, there's still an outside chance for a double top on the S&P and maybe even a print above 4,000. And that may be just the catalyst to have some type of a pullback after that. But then I think ultimately we go higher.
Okay, so you're, let me try to summarize it and tell me if I do it wrong, but basically you foresee some sort of short-term pullback, and this is the S&Ps that we're talking about here, guys. SPY if you're trading the ETF, but some sort of short-term pullback, but longer-term bullishness.
Yeah, so I'm looking probably for maybe one more push up here, maybe to a double top about the 39.50, 39.60, maybe even a push through the 4,000. They say they had 4,000 on the S&P. Maybe for the 4,020, but again, that's parabolic to me. And this pattern right here that you're seeing is pretty much of a bear flag. And again, I'm seeing this on the daily charts as well. And even if we do get to push up to new highs here, I think it'll be short-lived for a pullback, a pretty decent pullback that would last for a couple months, and then probably get a pickup again sometime in August. Early September for another move up.
Oh, okay. So I had it wrong. So you think we might push higher?
Yes.
But medium term, you're bearish.
Yeah. Intermediate term, I'm bearish. Short term, I'm bullish, and then longer term, I'm bullish. Once you get that pullback.
The thing that concerns me about the general market a little bit is we have all this stimulus money that's about to come out, and is it going to be a buy the rumor, sell the news type deal? I mean that's yet to be seen. But it's something that I'm definitely nervous about.
Yeah, I think the news is already built in, and if you got $1.9 trillion, which is really astronomical amount of money, 1.1 trillion is not even going towards really COVID. It's not going to help restaurants. I mean, $1,400 per person. I mean, doesn't really go far. And so I think that it's just smoke screen, per se. I think it's built in. I think the markets, really has that already tallied in.
Yep. And are you primarily trading the indexes, or do you do the individual stocks as well? Give us some sort of an idea of that.
Yeah. So, one of my favorites is the UVXYs. I know they, there's no volatility, and I think that we probably can get a push between the 7s down to the 7.5, maybe in that area. And I think those would be a screaming buy, because I do think that once we do push up to the new highs that I'm anticipating, in the next couple 1 to 5 days, if we do get that push above 4,000, the volatility index will really get hit here. And then I think once we do that, I think then you'll see volatility really pick up. And I think that's what's really right now. The market just seems very complacent, and that's why we had a run from $8 up to 10.50 on them in the last couple of days. And then they dropped about 2 after that, because obviously the market rallied and there's no fear there's no fear. And I think that once the market does hit that if we do get lucky enough to hit that print above 4,000, I do think then these would be a really good purchase between the $7.5 range if we
All right.
get down that low.
That's interesting. So, and the reason why I like that is generally speaking, when the market's going up, people don't like, this is the ETF for the VIX that we're talking about here.
Right.
VIX is generally lower. And I like the way that you're thinking about it as, okay, if we do get up to 4,000 in the S&P 500, that is a move higher, but that's actually a catalyst for the VIX to kick off. I think is definitely interesting.
Yeah. Yeah, I mean, to me, I think it's risky. Again, looking at the patterns on all four ETFs and the indexes like the Russell, the Spiders, Qs, and the Diamond, the Dow. I mean, they're all identical, same pattern. So, and there really are sell divergences on those time frames. And the higher you go, I think the harder you're going to fall.
Okay. Yep. I mean, that seems fair enough. And again, it's sort of, if we do get that correction, but somebody's asking in the chat for those months that you threw out, it's until that August, September time frame when you think the market starts to reverse and we get some bullishness in here again.
When do we see bullishness again, or how much?
Yeah. I think it was August or September that you said where we have some pullback until then, and then later in the year is when the market turns bullish again. Yeah,
again, seasonality factors always play into it. I'm not really a fan of these things, but the market does have a tendency to rally in the fourth quarter. So I do think that the pullback could be rather sharp. It could be, potentially up to 15 to 18% from if we do hit that print high on the S&Ps. So if you're looking, on a number like that, you're looking at, if we hit 32,000, like another 1,000 points higher from here, 10%, you're probably looking between 4,000 and 5,000 points down, back down to the 27.5 area. And I think that would be a good, there's a lot of support there as well. And market never goes to your number. So, 28,000 potentially or something like that. But it could be, again, I just think that the market is really right now just ahead of itself. Somebody talked about last night that GDP could be 7.5%. I don't see it. I still think there's a lot of problems here. A lot of people I know are still out of work. Commercial real estate has taken a complete trashing here. A lot of banks are owning all this debt, and again, the stimulus is great and will help people, but $1,400 doesn't go a long way, especially if now they're talking about it may be released in the next 2 to 3 weeks. So, what are people supposed to do? And a lot of restaurants are closing up. I mean, I drove through New York City, and I used to be in the city every single day after work. I used to drive from Connecticut into the city, and I will tell you, Luke, it is a nightmare. I have never seen more plywood on buildings. Restaurants, 5-star restaurants I used to go to are closed up, and it's scary. And I went in the city on Valentine's Day, and I just couldn't believe what I saw. And restaurants.
Is it just an absolute ghost town? Like how is the vibe from the people around?
I mean, there was not like the busy sidewalks where you're always like holding your wallet to make sure nobody's pickpocketing you, where you got to walk like this, and you're like in the old days, the streets were empty, and people moving out in droves,
That's what yes.
And I literally got to tell you, on a Sunday, I was parking my car. I saw 7 moving trucks moving vans being loaded up, people moving out of apartments, people moving on a Sunday on Valentine's Day. I mean, so I just think that the market is getting ahead of itself here. And again, any new highs should be met with significant resistance to look to the short, especially on the divergence patterns I'm seeing on the bigger time frames.
See, I wonder if there's, I'm sure there is a stock market way to short residential real estate in New York. I mean, we got to look at what some of those REITs
We'll create an ETF, I guess.
Yeah, we'll make an ETF for it. If there's not a REIT that exists, we'll go ahead and make the ETF for it. Because yeah, I mean, it makes sense too, right? If I was stuck in a small 400 square foot apartment and I'm working from home with a partner for 24 hours for a year, I mean, I would go crazy.
Yeah, I mean, I talk to people all the time. They're working from home. I mean, in big companies and UBS and Wells Fargo, and they're working from home. They're not going to the Jersey offices. They're not going to the Long Island offices. They're not going to the New York City offices. Who's going to pay all this rent? Who needs this now? I think we're in a new era here. People can work from home. I also heard that productivity was up significantly from people working from home. So that might be a good thing. But then what do you do with all this, commercial real estate in all these big cities? And, why hop on a train that costs you $400? Why work in New York City and pay New York City taxes when you don't need to? Now you can work from home on Long Island. You don't have to save that extra 4.75% extra tax on your
Wow, is it that high?
I think it's 4%, maybe 3.5%. I don't know, but who cares? Why pay the extra? Why pay the extra if you're not going in and out of the city? You're saving your money on city taxes. You're saving your money on commute, right?
And the time, right? If you're used to spending an hour each way commuting, I mean, that's a shit
2 hours. That's why productivity's been up on people working for corporations. So I think, I've been around a long time. Never in my life did I ever see -40 for oil. Never did I ever think in 2020 you would see a -3,000 Dow. And guess what? Now you're going to start seeing a new era of people working from home. I think it's smart, but somebody's got to pay the price, and commercial real estate is going to take it on the chin.
All right, so that's something that we'll do on this show later this week. We'll spend some time digging and see if there's REITs or ETFs that give you exposure to some of that, because that, I mean, if they haven't already moved, which I would imagine that they have, it's a play for sure. All right, all right. I just took you on a tangent. What else are you looking at? What else is interesting? I don't know if you look at individual stocks at all, and you have any of those names that are interesting right now. But curious what else is intriguing to you.
Well, they just reverse split. The TZAs on the Russell. It was trading like 419. Now it's trading, I think, where is it trading? 34, 35. So, those are, again, on any pop up, I think the Russell hit a high of 329. I think if you ever get these double tops up in these areas here, I think these are names like the SDAOs, the TZAs, the SQQ, even they ruined the SQs because SQQQs, because they reverse split it. But I think I bought some under 11 and they rallied up to 14. But these are names that, if you think the market is going down, you need some protection against your longs. These are great names to buy as a hedge.
Okay. And so you like some of these ETFs, some of these bearish ETFs as the way to hedge what's otherwise a very long portfolio?
Right. If you're net long, I mean, there's no reason why you can't.
Which I am. I'm long out the ass.
Yeah. So, I mean, if you do get prints to new highs, I mean, I've been around a long time and I love it. People just don't know how to sell. And people are like, oh, I don't want to sell. I got to pay taxes. Well, okay. So now if it drops 30%, you just wiped out your gain. Now you're hoping to go, oh, I can't wait for it to go back up. I mean, I've been around so long. I was there in 08. I saw so many guys. I was playing softball and guys are like pulling their hair out. Oh, I lost my whole retirement account. Oh my God, we're getting wiped out when the Dow hit below 7,000. I mean, I've seen it all. But people just don't know how to take profits. And, you know what? Why not sell half your position, sell calls against the other position to average, to lock in, even, if the market did drop, you get the premium and you can get the capture the call against do the synthetic against it on the option. Or the buy right, you just buy the call, buy the stock, sell the call. But, I just think that people need to know, and I've been doing this a long time, we're not bigger than the market. And if you are fortunate enough to have great gains in the market, I just think that there's always time to buy it back again. I trade the market, my own account, based upon extremes, right? And so when I see,
what do you mean by that? When you say you trade the market based on extremes?
Yeah, so when the Dow hit 18,000, I bought SSOs, UPROs. When the market rallied to a point, I shorted things against that. So I shorted the market. If the market rallies up here, I'm going to look to buy SDAOs. I'm going to look to buy UVXYs. I'm going to look to buy SPXUs, names like that, because I'm seeing. See, the other thing is, in my predictive analytics that I built, I know I have what's deviation bands, and I know calculations that if they get to this number, the odds are in my favor that's going to drop, especially or down, for example. So I teach all this using the analytics that I built, and whether you're day trading or intermediate term trading, whether you're trading commodities, indexes, futures, equities, ETFs, or foreign exchange, these patterns repeat. And using my predictive analytics, I can see things like that. And so it's very powerful to be able to identify these moves.
Okay, and Steven, how do people get access to predictive analytics? Where do they follow along with you? Getting some awesome comments out of the chat. So tell us how to stay in touch.
Or you can go to tickertalker.com and you can just look into my profile, Steven Kalajian. I offer a 1-week free trial, and people can just log in. I do an 8-hour live room every single day from 8 to 4, teaching, calling out the ideas, the moves in the market, live chat going. I do also trade ideas where you get push notifications on different trades, putting in, shorting Microsoft this morning at 235.70, 235.90, and then watching it drop. So you get push notifications on idea generation. And again, I just trade, the same names every single day. So I don't really care if GME is up $6 today or if, another stock is flying. You know what? I've trained all my subscribers and all the people that are in my room to trade the same names every single day, whether they're trading the name outright or trading the options. I mean, we called the monster buy this morning at 9:45 on Nugget. It ran about 290 off the low. So we're able to see this again, like I said, Luke, right because using predictive analytics.
Awesome. And guys, I dropped the link in the chat, and Steven, you mentioned GME a second ago. But my favorite comment of the day so far was somebody saying, Luke, just hedge your portfolio with GameStop shares. Yep, that's a funny one. That's a good one. Oh, come on, it's funny.
I was long it, okay, at what was that, 60, and I kicked it out, and I watched it trade down to 40, and I just said to myself, and it sat there for 40, 43 for like 3 days. I said, is this thing going to 18 or is this thing going to go back to 130? And I blinked the next day and it was up 90, and I just don't get it. It's just, look, I've been in the game for 38 years. And when you see a stock that goes from 10 to 500, you just want to just shoot yourself and say, like, now you've seen it all, now you've seen it all. And I was actually, I couldn't short it, but I would have been short. I swear to you, if I could short it, I said 350, and I don't really care if it goes to 700. I'll stay short and keep adding. And man, was I right. And granted, I understand a lot of people wouldn't stay short $150 against you, but I would have. That's how much I believed it was going to go down. Yeah. And but I wasn't able to borrow it and short it. And then this whole calamity with the small retail investors that couldn't trade it, and I don't know. There should be no regulations in the game. They should go back. Yeah, here we go. They should bring back 8-point markets to get the decimals. But I mean, I'm an old timer, so.
Awesome. All right, guys. Well, link is in the chat. Click it. Follow along. Again, tickertalker.com. Steven Kalajian, thanks for joining us, man.
Thanks, Luke. Great seeing you, brother. Stay warm in Michigan.
All right, I'll try.
Be good,
Take
brother.
Care. All right, guys. There we have it. Go ahead, smash that like for Steven. That was an awesome segment, right? We talk about a lot of individual names in the show. We don't talk about some of these ETFs and broader market movements. They are the most important thing, right? The individual stock names follow the broader market. So there we go. Ka-ching, ringing the cash register for Steven there. Maybe even a round of applause too. All right. But all right, guys, I've got another ticker to drop on you. This one wasn't on the list. We're still working through the list. On the list still, you got Clover, Hims, Torch, Vissel. So it's still a good handful of names, but this one we brought up yesterday. Let's get the screen on there. All right. Abercrombie and Fitch, ticker ANF, Alpha November Foxtrot. Stock reported earnings this morning, and it's basically flat. Reported EPS of $1.50 versus $1.22. Sales 1.1 billion, right in line. I'm curious how that compares to the previous year here. Let's go to my Benzinga Pro calendar now. Neil Hamilton's calling. I wish that we had a way to patch in the audio. Otherwise, let's see if we can. Hey, Neil, what's up? You're live on the Power Hour. All right. Neil's calling in to talk Abercrombie. There we go. All right, Mr. Neil, you better turn your camera on. We got like some picture-in-picture action here. Oh, it doesn't work. Abercrombie beat on EPS. So EPS, they reported $1.50 versus $1.22. Sales were in line. So 1.1 billion versus 1.1 billion. Here, there we go. I'm going to move Neil so you can read the line easily. Look at it. I'm going to stretch Neil out across this earnings number. So there it are. And this was a Mia pick. She said, basically she said there's energy going back into the brand. The brand is becoming cool and interesting again. So that's why, we need to throw the stock on the list and they report earnings. But what were you saying, Neil? You know what this means? I think so, but the stock hasn't moved. Look at this. I mean, they reported a big quarter. Yeah, so compared to so the quarter that they just reported was Q4, was actually down a little bit from the previous quarter, from the previous Q4. All right, we might have to bring Mia on here and get an Abercrombie update. Oh, they can't hear Neil. All right, sorry guys. I was having a conversation with Neil, and I didn't realize you guys couldn't hear him. All right, we've hung up on Neil. Okay, he just called in randomly. That's the deal. You could see him. Basically, Neil is saying he's long Abercrombie. He got in it when Mia made the pick. Stock is up $4 from them, so it's actually a better play, outperforming the market for sure. So there's the deal. I got that new one on the list. Clover Health, CLOV. Let's talk about that one for a second. And then we'll get moving over to our next guest. Jason Raznick will be joining us shortly, but check this out. Clover down 12% today on earnings. I'm going to give us a nice little scroll here. So let's go through the numbers. You see that a net loss of 81 million versus a 78 million loss last year in the same quarter. They did give us some guidance. The guidance was decent. I still like this name. And somebody asked me, am I still long it? Yes, I am still long the stock. If you guys recall, I pitched this stock. I like this stock because I want exposure to telemedicine. It's the same reason that I'm long HIMS, ticker HIMS, which I own the stock and then sold covered calls against to lower my cost basis. If you guys want a lesson on covered calls, go back to the Power Hour yesterday. We pulled out the spreadsheets. We did a whole thing on covered calls yesterday. Clover, of course, there are the investigation issues. I probably need to go through an updated thesis. Again, I like it because I want to have some exposure to telemedicine. I like Clover as a company that's bringing tech to the healthcare industry. I like HIMS because it's a sexy telemedicine brand. That's why I'm in that one. So there it is. Somebody saying, can you add a KOPN to the list? Maybe. We'll see if we get through it. But all right, guys, without further ado, I need to bring us our next guest. Gonna add him onto the stream now, Mr. Options Mike. He is back at it with us. What's up, man? Well, welcome back to the Power Hour. How are you doing? Uh-oh. I don't have audio. It could be our fault.
Do you have it now?
There we go. Okay. Wait, hold on.
Mute.
Before you go, check this out. I have this Who Wants to Be a Millionaire theme that we use when people have audio issues. And then we time it. It's a 2-minute clip, and we can sort of count down and see how quickly people get it resolved. But, I mean, you were so fast that I didn't even have time to press it. So
sorry about that. I put myself on mute whenever I come on somewhere behind stage just in case. Make some noise. I don't know if you come in live or not. So just in case.
Safer than sorrier. I was actually at a live event that we were hosting. Back when you could do live events. There's maybe 1,000 people there or so. And something was screwed up, and I had my mic on, and I went backstage, and I just said, like, what the fuck is going on? Or like something along those lines, right? Totally broadcast throughout the whole auditorium. Didn't realize. Somebody else was speaking. It went over their presentation. Yeah, classic.
Congratulations. That's great. I mean, cursing in front of a whole entire audience like that.
Yeah, on
that'll
accident.
get you done.
Yeah. And people are throwing Rocket in the chat. Rocket, $36. It's
Yeah,
still going.
Rocket. Oh my God. I mean, talk about a short squeeze that took place there today and yesterday.
know.
And
I mean,
you know,
it's
the worst part is
50% today. It's like a 70% 2-day move now.
well, it gapped up so much today. I didn't want anything to do with it, right? You looked at the overnight and the pre-market action this morning. I'm like, I don't want to touch this thing. And it was going sideways, doing perfect, saying, okay, maybe this will set up for after hours tonight, tomorrow. And then CNBC comes on and they talk about it. Then boom, it's up $4 since they talked, since $5, $6 now since they spoke about it, and volume coming in. It did have about a 40% short interest coming into today. So, we got to give these Wall Street Bets crew and guys a lot of credit. They've learned how to find weakness in the market. They learned that trying to push things during the day, they get circuit breakers and they get shut down. But after hours, they can push things wherever they want. They did a great job with this name, right? They waited till yesterday afternoon. The market closed. 10 minutes later, there it goes. It just starts to take off.
Yep, absolutely. And here, I thought I had the chart up. I didn't. Look at that chart, guys. This is a 2-day chart. Hell of a 2-day move. I mean, went from 23 to 36, 13 over 23. What is that?
19 to 37, basically, in 3 sessions.
Oh, okay. So, all right. There. See, I got a 2-day chart. I need the 3-day.
Yep.
All right. So you said 19 to 37. I mean, that's a double.
Yep.
That's a
basically
away from a double. Okay. All right. So Rocket, you don't have any action on Rocket. It doesn't sound like you're trading that one.
I didn't touch it today. It's interesting. I traded Square a couple times today. Made nice money on Square. And
all right, let's look at that one. What time horizon chart should I pull up? Or do you have charts you want to share with us?
Up to you. You can pull it up.
You do it. My charts are boring. I don't have like lines or indicators. It just, I just have
see what
prices.
Screen it's going to share.
All right. I mean, that's sort of always the question, right? Whenever I share my screen on the Zoom, I'm always a little nervous. Am I going to put up the right screen? Am I going to put up the one where I'm,
I don't know what screen I have.
Gossiping?
I have 6 screens. I don't know where this is going to go.
All right. Yeah, I mean, you never know. Wait. I've got sounds, man. I got the perfect sound for this one. Ready?
Let's see. Let's try this one. Can I do an application window? No. Let's just do it's going to be big. See, tell me if this is too big when it comes up.
All right. I'm adding it on now. I'm going to pull mine away. There it is. Let's see. I'm going to hide us. Yeah, I think that works okay. It's a little flashy.
Let me see if I can fix the flash. Hang tight.
Yeah, nice cup. Somebody's saying, there we go.
There we go.
Always important to stay hydrated. All right, there we go. No flashing. We've got the charts up.
Perfect.
All right, Square.
So on a 5-minute chart, Square last night got my attention when I looked at it again after hours, right? And if you look yesterday, they had news. You see this big spike up here coming up on around 6 o'clock last night. And that was on news that they're getting involved in giving out loans. So you saw this big spike up. Nice. So immediately went on my radar for today, just because, right, you have a big gap up and it held it well. You see, we opened up and we got weak. And if you look over on the top up here, you can see I call from my room flow. Square weekly 260 calls, 5,000 of them came in early. And that got my attention on Square once this market started to reverse. Does that make, once we started to get a little bit of cleanliness here, and you got this nice move off the lows from the 247 all the way up now to the 258 area. And when you look at Square, what made it so exciting today too is you had a couple gaps here that can fill on the daily chart. So we gapped up and we gapped into this gap that actually started right here around the 245 area. And we just filled it up into this area right here to the 257 area. And then you have a gap that starts again at 261, and that goes up towards the 266 area. So for me, I look at this name right now and I'm thinking to myself, okay, traded a bunch today. I'm out for now. Nice move. If we're going to continue, they're all over this on weeklies. I can look for a gap fill to 266 on any strength on this name at this point.
Okay, there we go.
All right. So nice move there. Other action today, GM. I mean, they were all over. This is a daily chart in GM.
Motors. All right. So we talked about Ford earlier on the show, because Ford is ripping, and we're all on that one. GM, it's another stock that I hold too. So I'm curious what you had to say about it.
I love GM. I've been talking about this one for a couple months now to my members. GM here is a EV play now. And that's what everybody has to realize, that they are going to be 100% electric vehicles by the year 2035. GM, Ford, they have something that Tesla's, pick any of these EV companies. What are they all missing? They don't have the ability to service or sell easily, right? They don't have the infrastructure for it. Well, GM and Ford, how many sales rooms do we have everywhere?
Just a shit ton.
Right. So, I mean, these guys are already built into, come in, buy your car. You don't have to go anywhere special. We could service it here. You could take it for a test drive easily here. So they're in great shape. And today, what I didn't get in on it today, I missed it, but the April 60 calls, last count about an hour ago, 32,000 of them had traded. I mean, that's massive amount of call buying. This one's looking to take out this all-time high here, 57, and it can just keep going. I love this name on dips. I wish this market would pull. Jake, Luke, I really do wish this market would yank and give us some better entrances, but this market just refuses to quit, refuses to come back in.
And let me ask you this one: Do you have any particular reason to like GMs for the EV story over Ford? Ford was the name that I picked for the exact same reason that you're saying.
I think GM is further along.
Okay.
I think their vision is more developed. They're putting more money into it. They've already announced big investments and already are putting money to work in it. They've already developed the Hummers coming out this year, and I think we're getting the Bolt. I think it's the Bolt coming out shortly after that. So they're a little further ahead of the game in Ford, and that's the reason I like GM better.
Okay. All right. I like it. The reason why I ended up picking Ford, and again, I wanted some of that, as I call it, EV energy into the stock. Was because they basically hinted to us a couple times that they're going to spend a shit ton of marketing dollars this year on it. But yeah, the same thesis. I love both names.
Yeah, and this is why everybody wants to play with the FSRs of the world, and I know FSRs had this massive couple-day run, right?
Yep.
What I keep reminding everybody is this company will not have any revenue until the fourth quarter of 2022. Right? They're not going into production until the fourth quarter of 2022. If you really like this name, wait, it'll come back, right? Because how long are our institutions going to sit in something that doesn't have revenue for a year and a half?
Yes, I'm with you. I don't touch any of those pre-revenue EV ones. I mean, I haven't been right all year, right? We've seen how much action they've gotten, but I'm with you in that those ones have been less exciting to me.
The one that didn't work today was Airbnb, or whatever it is. They came after it right on the open. They came after the weekly 200 and 210 calls. I mean, literally right on the open. And you can see this 200 area up here where I already have a notification set on it on the 5-minute chart. And it pushed up to there and it just can't break through. And I was watching on the L2 and you can just see an incredible amount of sellers sitting there on top of this at the 200 level.
Okay.
So if you like Airbnb, and I know if you go to the daily chart, I do like this story, Luke, because right now this market really wants the reopen plays, right?
Yep.
They're really looking at the reopen. They're not interested in the stay-at-home names anymore. Look at this nice reaction to earnings after it was down, right? Reverse, closed green. This is a great reopen play. So if it can get above 200 with volume, that's the place you want to take a shot on it. All-time highs at 219. That's an easy, quick move if you like that.
Okay. And can you tell us a little bit about the lines that you have on the chart there and how you use them essentially? What do you put on your chart? How do you use them to help you make decisions?
So this here is just a toss notification. I come in and I set an alert, right? Okay. Create an alert, right? And I put
toss, that's think or swim. So if you're wondering about the platform, TD Ameritrade's think or swim.
Right. So if I said 200 and I recognize that 200 is a big area, I can even put a note long here if I want. And then I come in, I just put a notification up on it. So not only is it visual, it'll also ping and hit my attention when it hits it. Mm-hmm. So now I know.
How did you decide on that level in the first place?
For me, if you just look at right here, what's happened at this level, 1 touch, 2 touch, 3 touch, 4, 5, 6, 7, 8, close enough for 9, 10. You got 10 candles that have ping-ponged off this area, either wicks, tails, opens or close. Make sense?
Yep.
So to me, that's a really important area. When I look at it, I can now recognize and say, hey, this is really, really important. I need to pay attention to this spot because this is the place where they're controlling the stock. So if it gets above that on volume, that's where I want to be in it at.
Yep. Okay. All
right. And then the other one was up here near the highs.
So you identify that point. The stock keeps getting stopped or tripped up there. It breaks above it. That's your signal to flip long on the name. Is that right?
Yeah, but it has to have volume, right?
Okay.
So like if you look at, what I do is I go to a 5-minute chart. If you look at the volume here and say, okay, it's at 95% average daily volume today. That's not bad, but it's going to need big volume to break this 200. You can see here the volume of the 5 early on. Right now it has no volume, right? Volume's gone from it. You need big volume like this for 20 minutes or so to push through this 200 area right now for whatever reason, whatever's going on there today.
Okay.
But you know,
Alright,
I
I
like
like it. And so are you looking at volume for the whole day, or for when it's breaking above that level, or both?
both. So,
Okay.
you know, what I like to do is look at average daily volume. When I see a name that's, 95% or, moving early, already has a high percentage of daily volume, I know that name's in play, right? That tells me that name's in play. This is a name I should be watching today.
Okay. All right. I like it. It's interesting.
And just quickly to touch on it, Zoom was on my radar today. And, you want to talk about the stay-at-home trade being over. Nothing says it more than Zoom today.
Okay.
Right? I mean, this thing, look at this sell-off today on fabulous earnings and great guidance range.
Yeah, I was just about to say. So they reported earnings yesterday, right?
Huge beat EPS, huge beat revenue.
And holy crap, the guidance. So check out this guidance, guys. So they said in Q1 they expect to earn 95 cents a share versus 72-cent estimate. And for 2021 they expect to earn at least 3.59 a share versus a 2.91 estimate. Beautiful, beautiful guidance there.
And what's it doing?
And the stock is down 4.5%.
Right, given everything back, and it was actually up more. If you look pre-market last night, right, it hit 358.
Yep.
So, that's why when everybody talks to me about Zoom or Peloton or all these stay-at-home names, for me right now, I'm rather focused on the Airbnbs, the Disneys, the casinos are in play, right? This market has rotated. The energy names are in play. But these stay-at-home names, they don't want them right now.
Yeah, absolutely. And I mean, it's probably on the vaccine optimism, I would imagine. Or do you think it's just broader market sentiment? I mean, what do you chalk that up to? Or do you not chalk it up to anything because you don't care? You just are looking more so at the price action.
Well, I follow the price action, but I definitely think it's on vaccine sentiment. There's also the amount of the way cases have been dropping over the last month or so in the country, right after that big peak coming back down. We're heading into summer where people will be outdoors more. And honestly, Luke, I think some of it's just plain old exhaustion. People are just tired of staying in, and they're going to get out one way or the other soon.
Yep. Okay. All right. I think that's. What about the reopening stocks? I'm curious if you have a beat on some of these like the airlines or the cruise lines, or some of those types of names. I mean, they're not horribly far off of their pre-COVID highs.
I mean, and that's part of the problem, right? They've run a lot already into this. Like United Airlines, for example, here, all the way up in the 55 area. This time last year, before we started dump, it was right at 63, maybe just a little higher. And, I don't know. I don't love the airlines yet because I think there's still some more pain there. I don't think people are I think you're going to get a bump, but you don't think business travel is coming back, right?
That's my problem with them too. Exactly.
Yeah.
Exactly my point.
So people like you and me are going to be dying to get out, right? Well, I'm going to Disneyland. I'm going to pick a place, right? I'm going on vacation. But the bread and butter airlines and where they make their money, their biggest rates are on business travel. I don't see that coming back anytime this year.
Exactly. And like I used to travel about twice a month for work in 2019, right? It's a decent volume.
Yeah.
And it was nothing to pay $500 for a ticket when I'm not paying for it. But when I'm traveling for pleasure, I'm looking for some I want to pay under $200, right?
Yeah.
And it's going to be so long, I think, before I'm traveling for work again. Because I mean, for it to make sense for me, they have to fill up the office buildings in Manhattan again. And when is that going to happen, if ever? Right.
Well, it's I have friends that are still, I do this full time, but I have friends that work for companies like Salesforce and other companies out there, and they haven't taken a hit from sales doing everything virtually.
Yep.
Right.
Yes.
So why are they going to send people out when they don't have to?
Yeah, it's not cheap.
Yeah. And I think the other thing that's going to hurt are conferences. Who's going to send people to conferences to get together in mass quantities?
Yeah, I mean, plays on that one. Eventbrite is one that comes to mind. Ticker EB. I don't know if you have other stocks that come to mind on that one.
Yeah, I'm not big on those, but what I do like though is what I'm starting to see in the casinos, like MGM. Big move up here, holding in very strong here. Nice move.
You said you like these ones.
Yeah, I like the casinos as they start to reopen again, because people in Southern California, they're going to want to get away, get out. And where do people from Southern California go when they want to get away for a weekend?
Vegas,
baby.
Or so, Tijuana, depending on. No, never mind.
Tijuana.
But the other thing for these casinos is the online, we just got online gambling in Michigan maybe like a month ago or so. And like I opened an account. I was playing around with it. I was literally all right, might be disgusting, but I was literally in the bathroom playing blackjack, right, to try it out. I lost like $20 sitting on the toilet in less than 2 minutes because you're the only one at the table when you do online blackjack too.
Right.
And I was like, I closed it. I pulled the money out of my account, closed the account right over. I'm like, okay, that was scary. That was a little dangerous. So yeah.
So yeah, I like these names. I like these as they reopen, as they get back to normal. And let's just talk Disney since we have a couple minutes left.
Yeah, let's do it.
Think about what this name can do. And I've been talking about this for a while. They put an all-time high in on the strength of Disney Plus, right? Which has been phenomenal. But what happens when they get their theme parks fully open, they get movies back in the theaters, and they get their cruise lines going again? Because that's their profit centers.
Yep. Yeah. Okay.
So, I mean, this name, while it seems expensive, I think this can go a lot higher at some point. So, love the way this one's working. I'd keep an eye on it.
And but you trade pretty actively. You're somebody in the chat goes, depends on your goal, Vegas versus Tijuana. That's funny. That's sort of what I was implying. But Walt Disney, right? You're talking about it from like a longer term or like a longer time horizon perspective. But you trade very actively. So how do you sort of balance those two?
I have two accounts. I have my day trading account, which I tend to clear to cash most nights. And then I have my long-term investing account, which I generally put stuff in that I'm not going to actively manage. I'll glance at it once a week or so.
Yep.
And, so I try to treat those very differently. Does that make sense?
Yep, absolutely. And that's something that we've talked about on this show before too, is that it's very difficult to both to have your long-term investments in your trading account and vice versa. That's like I separate it personally with my IRA and then I've got like a brokerage account that I manage more actively. But yeah, I think it's so tough to do that.
Well, because if you're getting hit, like a day like last week, let's just pick a day in the SPY last week where the market was falling apart right? And your account's going down hard, you're tempted to sell everything, even though you don't feel like you made bad trades that day, your account's getting ravished, right?
Yep.
So, if you keep them separate, you say, okay, I feel okay. By the way, talking SPY here, I was on the investing channel this morning. You got to watch this downtrend. We got to break above this to get clear here. You can see all the touches here on this trend. We came right into it this morning. You got a series of lower highs, and you have to take this out now for us to get any kind of upward momentum.
Okay. And can we do another look at Rocket too? Rocket, while we were talking, it cleared 37. It's pulled back a little bit. I'm curious from your perspective what we need to see. I would imagine, and I'm bringing this one up, is we're getting the call outs in the chat. I'm long Rocket out the ass, guys. Okay, we've said that every day for like 6 months since the IPO. But it's the highs I would imagine you want us to see us clear for this thing to keep pushing higher.
So, sometimes you got to look from where you came from today, right? And you look at Rocket and, just open up a 5-minute chart, go to yesterday's close, right? Yesterday's close was roughly 24.40, let's call it. And now we're at 37. So realize that if you're trading Rocket at this point and you're buying it here, the risk reward is not in your favor now, is it? Right? You're chasing something that is just way up, and up. So for me at this point, I have no interest in Rocket. I try to take it off my radar at this point. I'm not going to touch it here. It could go to 100, and I'll look at it and go, yeah, another GME. I missed out on this one too. Oh, well. But the risk reward now after this run is what happens when everybody starts hitting the sell button. And that's the thing you always have to be aware of. You watch these things go up like this, but eventually they hit the sell button. And let me show you, just to show the example of this. Let's go to Turley. And, Turley, I had everybody saying it's going back to 300, it's going to 100. People who did not get out on this day at 67, gapped down to 55, you're trapped, closed down at 31. That's just not fun, guys. I've sat through one of those before. I've been there. Raise your hand if you've done it. We've all done that. It's learned to make me not chase these things and sit in them. And so if you're looking at Rocket today, can it keep going? Yes.
Can you pull up the weekly candles on this one?
On Turley?
Yes.
Yeah, this one's just incredible. The 300 day? I remember the 300 day.
Yes. All right.
By the way,
here's a lesson learned.
From 150 to 300 and back was round trip in a day.
Yeah. So somebody on this broadcast was short a small position in that one on that day. with the way up. We won't say who, either myself or Mike, to teach you a lesson there. But I have not touched the name since then.
I've traded it on and off. Recently, I traded into some of these little spikes, but honestly, I've talked about this with pot all the time. This name to me is the most dangerous of the pot names because it does stuff like this, right?
Yep.
You can make a lot of money. If you really want to own a pot name, to me, I keep saying this, it's CGC, and that's because this name has the Constellation brand $4 billion+ investment. They have the ability to buy more of the company if it gets legalized here in the country. And that to me is the name you want to be in because you have a large company with a big chunk in it already who's looking to either buy them out completely or own an even larger chunk of it.
Yep. But all right, Mike. Unfortunately, I've got to keep us moving. I actually have to close down the stream, pass it off to my colleagues who are running the crypto show, or I'm going to get yelled at. And actually, what I'm about to go do in 4 minutes from now is I'm going on to a sales meeting, a big sales meeting where they're going to have like 20 people on the call that would have been in person.
Nice.
18 months ago, it would have been in person. I would have spent $500 to fly there. I would have spent $300 in the hotel. I would have expensed the hell out of some meals, right? So it's $1,000 right there. And I'm about to take it, on the call in just a minute here. So,
well, have fun with that. Enjoy it.
All right, thanks. But all right, Mike, awesome having you on as always. Appreciate you dropping all the ideas and even doing the screen share for us.
Luke, thanks for having me on. Great to see you guys again.
Great to see you too. All right, guys, our time is coming to an end, but it does not mean our video is, right? We're going all day, baby. That's what we do here at Benzinga. We're for the people. We're going all day. We're letting the ideas fly. I mean, we talked through 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 16, 15, 16, 17. We did 17 TIGRs today. I said we were going to bring the ideas. If 17 TIGRs isn't enough for you guys to smash the like, to tweet at Jason Raznick that Luke Jacoby's show is the best one out here, then I don't know what more I can do, but we got to pass it to crypto.
Air horn, man.
That deserves an air horn. Let's go. There it is, guys. All right, I'm going to get the link for you here now. If you're watching on the individual show stream, here it is. It's pinned up at the top of the chat. I'm going to span it in here. No love for the chat. Oh, I pasted the wrong thing. No love for the chat challenge. I'm sorry. I ran out of time. You heard me say I've got to go to a sales call where they're going to have literally 20 people there. It starts in 3 minutes. We don't have time for the chat challenge, but stay tuned, Christian. We never want to disappoint Christian, longtime listener. We'll do the chat challenge tomorrow. We'll give an update. We'll figure out which zinger is picking the right stocks. Again, question this week, what is the price of SPY going to be? And the last thing that I'll pump, guys, we're doing the interview tomorrow. Kathy Wood, most influential woman in the markets, person in the markets. It's right there, guys. I'm spamming in the link. You click it, register. She might talk some stocks that move. I mean, that's a realistic thing that could happen, guys. And so I'm going to leave you with that. Again, go check out the crypto link. Watch the crypto show, my good friend Captain Ross. And I will see you guys tomorrow. We'll talk some more stocks. We'll get some more ideas flowing, maybe even make some trades. And again, throw me the follow on Twitter. I drop ideas, thoughts there all day. Something that's sort of unique is I put in some of the analytics from Benzinga to give a sense as to what are the stocks that people are watching, what are the stocks that people care about. So go ahead, throw that follow. But all right, guys, peace. I'm out.
What up, everybody? Welcome to the BZ Crypto Show. Spencer Israel here with Catherine Ross, our Benzinga editor. Catherine, how you doing? We missed you on Thursday. We got preempted. We got bumped. by the Cannabis Capital Conference, but we're back now. How you doing?
Hi, hello. I'm so happy to be back. Thank you. Yes, it's been a while. It's been a week. Can you believe that? A week.
Been a week. I know. It's not fair. It's not fair. So we've got a half hour. We've got a half hour. We got a lot to get to. We're going to run through the top movers of the day in crypto land, and we're going to go over some headlines. And at the end, we will take questions from our chat. So that being said, let's go into coins on the move. I'm going to bring up my screen here. Catherine, welcome. This is a heat map we got a heat map. What's going on here today?
Wow, it's pretty colorful, I would say, even though it has only 2 colors, but it's pretty colorful. So I think it looks a little bit better than what we saw last week. I think I can agree because it was red all the way. We do see some green light, which I think is a pretty great indicator. What I do have to say is that we actually seem to still be in a bull run right now. As you can see, BTC, it's still below 50K. Ethereum has not been going up further. His all-time high, $1,800. But we do see some indicators that the crypto space is trying to get back on its feet. What's interesting for me is that we have been we're in a bear run. I'm sorry, I was wrong. So we have been in a bull run since December, right? And what we saw on Twitter and comments coming from different places was like, we're gonna hit 100, we're gonna hit 500, we're gonna do it, we're gonna get rich, the crypto is gonna be adopted everywhere. But right now, what we see, and we do have a couple of tweets there, is that some people, including Elon Musk, has been saying a little bit of a negative stuff about the crypto space. I'm not sure why, even though we do have indicators from different research, including the Block, including Glassnode. These are all like data analytics platforms saying that it's just a little bit of a dip in the market, and we're still gonna go back way above 50K. So Spencer, can you show the tweets that we have prepared? So Peter Brand, he is an options trader, and just stocks trader, and he has been very prominent, guy in the trading space. But the tweet that we see at the screen, whether it be from $50,000 to $100 or 1 million, the greed of cryptomaniacs will eventually be their demise. It's like, it's not fair. Actually, I'm offended. Why? And then the next tweet from Elon Musk, it's just a little bit upsetting. Scammers and crypto should get a room. So I
don't understand that, because he's long. How can you be long crypto? I guess you can be long crypto and also think it's a scam.
I think I have an idea.
I guess. You have an idea? What's your idea?
My idea is that everybody just trying to bring the price down to buy. But it's okay. This is a disclaimer. This is my personal opinion. I think this is what's happening. It's much easier to buy cryptocurrency lower. And if Luke is watching, this is exactly what he's planning to do. The hot stocks Luke. So I think this is what we're seeing right now. Everybody's just after this crazy bull run. Everybody just trying to buy in before the next great surge in prices. So as you can see, there are a little bit of negative comments in the space, but we are looking much better than a week before, even though we can actually say that about Bitcoin, the leading cryptocurrency. So
so you think that Elon is just throwing stuff out there to bring the price down to buy more Bitcoin?
Yes. This is not only Bitcoin, but any other cryptocurrency that you might be interested into. And it's just, as you might have noticed, Elon Musk has a great influence over all of his followers and almost everybody in the world who knows who Elon Musk is and what he does. And he has been tweeting about different products, including Messenger like Signal, right? And including different applications and platforms and cryptocurrencies. And what we have seen and we have observed is that these products have gained momentum, popularity, users, right? Like Signal gained, I think, I'm not sure about the exact number, but it's just got so popular, and people even bought stock of Signal, the company that has nothing to do with the messenger that Elon Musk was talking about. So he understands his influence, right? And when he talks good about cryptocurrency, everybody is buying in, right? And how could you buy something if everybody's buying in and the price is going high? So I think this is the obvious observation, but again, it's my personal opinion. This is what I think is happening. I think he's not the only one who's doing that. There are definitely whales in the market that are interested in the market to have a little bit of a dip and just to buy in, because as we're gonna talk later, like Goldman Sachs is introducing a cryptocurrency desk for their clients, which, you know, the indicators are there, and it's still like it's getting momentum from even, you know, places like Goldman Sachs, but you know, people just need the price to go a little bit lower to buy. Spencer, are you going to buy if the prices go lower?
In Bitcoin, I'll be honest, Catherine. I'll probably buy regardless. I've got a very small position. I bought some in December. It's meant to be a store of value for me, a diversifier, if you will. I'm very big on portfolio allocation and diversification in that way. So I own a teeny sliver of Bitcoin. I'll probably buy. I don't know when. I would much rather. Like, my own personal style is to do things on a time basis and not a price basis, right? So I don't have a price where I'll buy more Bitcoin. But and I don't quite have a plan yet either. But what I would like to do is make a plan where I say, okay, every X number of months, I'm buying Y dollar amount of more Bitcoin. Like I said, I've only made one purchase. It was back in December, so I guess I'm due. But I don't know yet how I want to go about doing that. But that's my plan, right? Is to say, okay, Spencer, every X number of months, buy Y amount of Bitcoin, and just do that indefinitely, and use it as a diversifier in my overall portfolio. But that's so in that way, price does not matter to me.
So if you're not looking at prices, aren't you afraid that you're losing money buying in? Like if you bought in December, the price
sure. Well, the idea is not to look, right? The idea is it's not a trade. I'm not trying to make a quick buck. If I was, it'd be a different story. I'm trying to diversify and get exposure to an asset class that is emerging. Bitcoin is the first mover in crypto, and the only one on my radar, really. I know there are many others, but it's the only one that has shown to have the kind of network effect that would give it staying power, or at least one of the only ones. So no, price going down doesn't scare me, again, because I know why I'm owning it, and that's what the thing. You have to know why you own something. I know why I'm owning Bitcoin. I'm owning Bitcoin as a long-term position to get exposure to cryptocurrencies. And it's going to be a small piece. I'm not going to have 20% of my assets in Bitcoin. I'm just not. Like I said, I bought $500 worth of Bitcoin in December. Very, very small piece. But I need that piece to get a little bit bigger. So.
Can I ask you why not Ethereum? I mean, I hear you. I respect that, and it makes a lot of sense. But judging by what you've just said, you know, Ethereum is also an ecosystem that a lot of other cryptocurrencies are built on. So it has a lot more value to the ecosystem, and the buy-in price is much lower. So why not Ethereum then? It's just because like Bitcoin is the biggest one, the one that has been around the longest. Is that something that makes you trust it more, or makes you more interested in that?
Why not Ethereum? Why not anything else? Why only Bitcoin? I mean, why not Bitcoin Cash? Why not
Binance?
Why not Litecoin? I don't have an answer for you. I really don't. Bitcoin is the largest by a mile, and that's what I'm going to stick with. I'm not trying to make a call on which crypto is going to be the winner. I don't know. I don't know anything. That's your job. You're supposed to know those things. I'm just the guy. I'm just the investor, right? So, yeah, I'm not trying to make a call. I'm just trying to get exposure to crypto, and the easiest way to do that is to just say let's go with the winner, and the winner so far has been Bitcoin, just in terms of market cap and all that jazz. So that's what I go with. That's
well,
it.
yeah, thank you for answering. Yeah, the reason I'm asking is that I'm very interested in how people make decisions. What are they based? What are the indicators that they're looking for to sort of make this show a little bit more valuable, right? To bring more info, and it's just interesting the emotions and the philosophy that is going beyond the trading portfolio. So yeah, let's just look at the prices. I'd say.
Let's pull up my screen here, and I can show you guys. Okay, so coin market cap, BTC. Yeah. You want a 7-day?
Yeah. So
again,
the biggest price so far of Bitcoin has been $58,000. We're not there. Obviously, we're not there. It's 47K, almost 48. And then I know that's a little bit frustrating, but not for you, Spencer. If you bought in December, you're still good. You're still good.
I'm always good. I'm always good. I'm always good.
Yeah. So I just sort of wanted to show you the 7-day performance and then the 24 hours performance. So as you can see, it's still going a little bit lower. Not a very good look, I think. But again, it is happening for a reason. As we mentioned on our previous show, a lot of researchers and analysts believe that this is the time where market is getting rid of all this like FOMO buyers. So everybody's just cashing in and going somewhere else, and the market is going to be cleaner and much healthier this way. So yeah, the overall performance is still down, and hopefully it's gonna go up. I wanted to sort of mention that despite all of that, the cryptocurrency, the entire cryptocurrency market capitalization is $1.4 trillion, which is pretty big. And then Ethereum, right? Can you put Ethereum on the screen?
ETH, where we got 7-day.
Spencer did not buy.
No, I did not buy.
Yeah,
because I am some fancy crypto investor. I'm just a guy.
Okay. Maybe you are a fancy investor if you only hold or hodl, as we say in the crypto space.
I just want you to show me the money, Catherine. Okay.
Show me the money.
That's it. That's all I want.
Okay. Okay, yes, the sounds, I love it. So Ethereum is down. It has been down by 5.9% over the past week, and down 2.43% over the last 24 hours. Not a very good look. But again, personally, I think that this is just the correction that we have, that the market needed, because it was super bummed. It's just something that we need. And again, on our last episode, we mentioned that we might be entering a period what a lot of people in the crypto industry call crypto spring, or the tax season. And our previous guest, the Wolf of Wall Street's trader, Scott, mentioned that he believes is just, again, a natural correction for the market that we see in March for some reason, which I think is a very interesting, by the way, phenomenon that it happens every March. Yeah. Top 3 cryptocurrency top 3 is Cardano. We have mentioned this before. It's a cryptocurrency network and an open source project, which main goal is to run a public blockchain platform for smart contracts. And it is, I think, it's one of the cryptocurrency that has the biggest community. Everybody's talking about it. Cardano has been invented by Charles Hoskinson, who's also a co-founder of Ethereum, top 2 cryptocurrency. So it actually looks good, even though even though it's a little bit down over the last 24 hours, 7.93%. It is up by 24%. Over the last week, so it is looking good. And Cardano has never been number 3 before, so it looks pretty good for the Cardano coin. Again, it's not investment advice, just the market overview. Binance Coin, which Spencer once said he has no idea what it is. He might be interested into buying it. He might be interested.
Wait, I said that? I don't remember saying that.
Yeah, you did. I have a great memory.
Okay.
So, Binance Coin, again, is actually looking pretty good. It has been at all-time high, and it's a cryptocurrency that you can use. If you hold it, you can use it to trade and pay fees on the Binance exchange, because obviously it is Binance Coin. So yeah, this is the use case that you have asked before. So Binance Coin does look pretty good overall. It's $235. It is down by 6.59%. I mean, I'm saying that it looks pretty good, but it's still down. But it up by 0.43% over the last 7 days. And again, if you're looking at the screen and if you're looking at the top 5 cryptocurrencies overall, this is new. You know, what we have seen before, it's totally different set of coins. Despite obviously Bitcoin and Ethereum, they have been number 1 and number 2 for a while, but number 3, number 4, 5, and etc. has not been the same. So what we're looking at right now is the industry is showing us actually what kind of value it's looking at, what kind of value it has, and what coins are better and projects might be better, or not better, but more valuable at this time. So as we've been talking with Spencer before the show, and I mentioned that Litecoin, right? Let us just look at Litecoin. If you can search it, Litecoin has been top 3 for such a LITE coin. So
I've heard of Litecoin. Come on.
Yes, I'm not trying to offend you. I'm just like trying to make sure that everybody knows what I'm talking about. Okay. So Litecoin has been number 3 for such a long time. When I joined the space in 2017, it has been top 3, and it has been top 3, if I'm not mistaken, until 2019. So for 2 years, at least for 2 years, while I was in the industry, right, it was top 3, and currently it is. Let me just double check what kind of number it is on the. 9. It's number 9. Can you believe that? So it is changing actually, and yeah, it has been taken over by Cardano, and then at some point Ripple and other cryptocurrencies, but it's not anymore. So again, and top 5. Tether. Tether is a very interesting case of a cryptocurrency because it's not actually a cryptocurrency; it's a stable coin. Do you know the difference, Spencer?
Explain.
Okay, stablecoins are cryptocurrencies that attempt to peg their market value to some external reference, right? To make them more stable, to make them not so volatile to the cryptocurrency market. And in case of Tether, it's a blockchain-based cryptocurrency, which coins are backed by an equivalent amount of traditional fiat currencies like the dollar, Japanese yen, which are held in a designated bank account. So Tether has been for a very long time at the price that you see right now, $1, which sort of makes sense because, you know, in this case, it's backed by dollar, so it makes sense. It's $1. But it has been, you know, fluctuating a little bit, but, you know, it is what it is, as they say. So Tether is at $1, not surprisingly, but yeah. And a funny thing is that it is down by 0.08% in the last 24 hours, but it's up by 0.08% in the last 7 days.
All right, let's move on to some headlines here, Catherine. We've got a lot of headlines. I don't know if we're going to get to all of them, guys, because I do want to leave a few minutes for questions from the chat. So let's just go here. What's our first headline?
So the first headline, the one that I have mentioned before, is the Goldman Sachs is restarting crypto desk after abandoning the idea back in 2018. So in 2018, the year after 2017, obviously. Hey, Catherine, that was very helpful. But I mean, 2017 was sorry. You're gonna understand what I'm saying. So 2017, also known as the ICO boom year in the crypto space. So this is the time in December 2017 we saw Bitcoin, ever going as high as almost $20,000. I think it was 19 something hundred, right? So it was almost 20K at the time. And it was so, it was so optimistic. The space was, very promising, even though it was still early. And the ICO craze, by ICO, I mean initial coin offering, it was a way for projects to raise money. So everybody could buy in. it's sort of the same as going public, but instead of stocks, you're issuing coins, which everybody can buy despite your location, your any other like KYC sort of qualifications that you have to go through to become an investor and trader. But in the crypto space, it means that everybody can buy in. So after that, it did look promising, and Goldman Sachs announced in 2018 that it's going to start a cryptocurrency desk offering Bitcoin futures to their clients, but then quietly just dropped this idea. It never happened. But yesterday they did announce that it's going to start offering Bitcoin futures and non-deliverable forwards again in March, in the middle of the month. So again, I think it is also exploring an option of launching a Bitcoin Bitcoin exchange traded fund. That's at the end of the day for me, 10 p.m. And it's also interested in developing blockchain for their clients, but not public blockchain, but private blockchain. And it's the Goldman Sachs is also looking at central digital currencies projects. So I think it's a good indicator. Again, despite.
Doesn't that defeat the purpose? Private blockchain? Doesn't that defeat the purpose of the blockchain?
Absolutely. It's actually a very heated debate, but it's just something, it's one of the applications of blockchain. And if it can be used, I mean, it does sort of contradicts the entire idea and the entire philosophy, but I personally see it that way. If there is some aspect of this amazing technology that can be used, why not? Right, but it does defeat the purpose. I mean, I'm saying that because it was a heated debate back in 2018. It was crazy. Crypto Twitter was going insane over this. But yeah, it's not 2018 anymore.
All right, let's do a couple more, and then we'll go to the chat here. No headline, numero dos. NFTs. NFTs. I do not understand this NFT business. What is this? What does this mean?
Okay, you want me to tell you what NFT means?
No, the headline. Explain the headline to me.
Okay, so the headline. I would put like Elon Musk partner if I wanted more clicks.
Oh yeah. Are they married? Isn't she like the mother of his child?
She is, but I think the perfect definition for that is partner. This is what they're going with.
Okay. Whatever.
Elon Musk's partner, Grimes, which is also a musician and visual artist, has sold a collection of NFTs for over $6 million. Somebody got richer, and I saw pretty encouraging tweets like partner, like Elon Musk is into cryptocurrency, and then Grimes is going in and selling her art for $6 million. Again, NFTs are non-fungible tokens, cryptographically secured collectibles that can be anything, but it actually has gained a lot of momentum with art, with visual art specifically. And I think Spencer is going to show you what kind of art Grimes sold. So you can buy them using Ethereum on marketplaces such as Zora, Foundation, Nifty Getaway. Grimes has used Nifty Getaway, and what you're looking at is a collection that is called War Nymph. She sold different pictures, as Spencer is showing you right now. So some of them went for like $50,000, but overall she earned $6 million on this. If Spencer is kind enough to show Nifty Getaway, I just wanted.
What is Nifty Gateway?
Yeah, I think you lost me there for a second. Am I back?
Yeah, we're back. Yeah, you're back.
Yeah, thank you. Sorry, I'm so sorry about the connection. So yeah, you're looking at a marketplace called Nifty Getaways that is backed by the exchange Gemini. And this is where you can put your art on NFTs and, sell it and earn money. And a very interesting observation, the one that I've just explained about ICOs, the Litecoin creator, Charlie Lee has noticed that NFTs boom, right? I once sort of mentioned that over $100 million in NFTs was sold just in the matter of 30 days. So it's getting bigger. Everybody wants to, produce some sort of art to sell it and to earn money. So it does look a little bit of boomish. And Spencer, can you put up the tweet? So just a couple of observations from the Litecoin founder, right? So he sees a lot of parallels between this NFTs boom and the ICO boom back in 2017 and altcoins boom in 2013. So easy to create, simple to understand and explain. I'm not sure about this one, simple to understand and explain, because we have got tons of questions about this. Brings tons of new people into crypto, high prices, pumps, great. So as you can see, he sees a lot of indicators that it is a boom of some sort.
Catherine, have you heard of Top Shot? You know what that is?
I know. Are you talking about NBA Top Shot?
Yeah, and that's what I'm talking. NBA Top Shot. These things are selling. I guess the Grimes art is another example. These things sell for like thousands of dollars. I guess if the market deems it as value, but this is crazy, right?
It is crazy. I would personally not buy it, because even though like I'm a basketball fan, and I would definitely not buy it. Would you buy it?
I don't think so.
Would you like to hold some of a Grimes art?
No, I don't want to own any of this. I mean, but I say that now, it's easy for me to talk. But if my friends start saying, "Hey, I sold this highlight, this Top Shot for $1,000," then yeah, I'm going to want to get in on the party, right? So I don't. It just seems kind of crazy to me. Like someone in chat just said, imagine. Here, Jonas, great comment. Can you imagine what would happen if all those worthless online Pokemon cards that people gave away start getting NFTs? Yeah, I've still got my Pokemon cards. I think like they may have some value. What about all the collector's items from yesterday? Like Beanie Babies, Pokemon cards, Cabbage Patch Kids. Are those going to get on the blockchain and then increase the value? I don't know.
Obviously, to answer your question, they can. And if somebody's going to put them on platforms like, Zora Foundation and Nifty Getaway that we've just shown you guys, it is possible. But I have an idea of, I'm the worst, painter artist that I can sing, but I cannot draw and paint. It's just not mine. But I am eager to put Luke's picture on NFT and earn money. Spencer, what do you think?
You know what, Catherine? That's not a bad idea. But we're not going to tell anybody about that. We're just going to do it. They always, you know what they say here at Benzinga: ask for forgiveness, not permission. We're just gonna do it. We're going to see what happens. We're going to see how much money we can make, and then we'll go from there.
This is what I'm going to do tonight. I'm going to try to draw Luke and then stocks, and then it's gonna look awful. I promise it's gonna look awful, but we need to do it.
All right, Catherine, I want to table the rest of our headlines for Thursday, because we've got a few minutes left, and I want to do some questions from chat. We've got a few questions here. This one, we may have been asked before. I don't remember, but maybe this is a longer discussion. If you deem it, we don't have to do it right now. But crypto exchanges. Do you have I know Benzinga's got articles about this, but do you have a favorite crypto exchange or one that you tell people about?
I'm not the best person to ask, because I'm currently not in the U.S., so not every exchange based can be accessible to me right now. But the biggest one, again, should I just tell the biggest one, the trusted ones?
Tell people who the biggest players are.
The biggest players are obviously Binance. It's the biggest exchange in the world, and there is Binance US entity that allows US-based customers to trade. Gemini, BlockFi. Who else? It's in my head. AgTech, absolutely. Who else? It's just in my head all the time. I write about it all the time.
Coinbase, right? That's the one that I use.
Oh yeah. Oh my God, Coinbase. Coinbase is the one that is going public right now and is valued $1 billion for sure. Yeah, it's the biggest U.S. exchange. Binance is the biggest world exchange, but Coinbase is the biggest U.S. exchange, and it's going public, so it's pretty trustworthy, I'd say.
Let's do. Somebody asked if you have an opinion on AMP.
What is AMP? Let me double check. Is this AMP?
Yeah. Sorry. Is that how is it AMP? I thought it was AMP.
So it's number 224 on CoinMarketCap, which does not look good. And it's currently trading at 0.023 for, oh my God, $0.023. It's just no. I honestly don't have an opinion because I've never heard about this project.
Okay.
Yeah.
That's fine. You're allowed to not know. You're allowed to not know.
224 is, yeah.
Let's do one more. Let me see.
Are you gonna bring the toughest one?
I don't. To me, Catherine, they're all tough. To me.
Oh, okay.
What do you mean? The toughest one? They're all hard. I don't know anything. What is your opinion? Oh my goodness. What is this? ENJIN. You know that engine? No.
No. Let
Oh
me
my
double.
goodness.
You know what? So the only thing that I know what you're talking about. So you have to be careful. I've been in this space for a while, and there are like communities that have built around different coins. I'm not saying that this is where we're having right now, but if you put a crypto article on Benzinga, and if you see comments from, try ADA, try this and try this, I'm gonna buy this and this and this, it is most likely bots or people who are doing this for money. Like we have seen from Ton, this is a cryptocurrency for Tron blockchain project that is managed and created by Justin Sun, who has bought a dinner with Warren Buffett for $4 million.
I remember that.
Yes. So, and I'm saying that because, sometimes people ask this just in order to boost the activity around the community. So be careful. If people are talking about this in the comments section, it does not necessarily mean that it's getting momentum. It might be just, a marketing campaign going on. So be careful. I have to warn you guys because we have experienced a lot of that. Engine, no, it's too far away. It's too far away.
It's too small for your radar. Is
yeah, because it's even worse than the previous one. It's 2,933rd token.
Guys, how do you find these cryptos, guys?
Yeah, someone on Twitter just
stop trying to pump random crypto. Jeez.
Yeah.
Guys. Okay. Someone did ask if you have an opinion on a Ripple. I don't know if they're referring to the lawsuit,
yeah.
or the actual whatever you want to call it. If it's I guess that's what the lawsuit is in calling question, right? Is Ripple a currency or is it a store of value? I guess that's the question.
That's a good question because Ripple, despite the fact that it has been number 3 for a while, a lot of people are claiming that it's not a cryptocurrency, it's just an ecosystem, right? And it is being sued by the SEC for illegal securities sale. I think what we're seeing right now is they're a little bit in a jam or in a pickle, as they say in Great Britain. But I think that this is a healthy reaction. Everybody was expecting that it's going to happen at some point with one cryptocurrency or another. Ripple is just an SEC radar right now, but I personally don't have an opinion on that. I think it's going to be. I just said I don't have an opinion on them, giving my opinion. So I'm so useful today. So okay, personally, I think that they're gonna be fine. They're gonna get back on their feet, and they're gonna provide payment system as they have been. But I think this is just a showcase from the SEC about what's coming, right? So all of those ICOs that I've mentioned before in 2017, it just looks like the SEC is sending message, we're coming for you. So just be careful, right? I think that it's pretty difficult for the Ripple company right now, but I think they're gonna, go back stronger and clearer on what they stand with the systems and payment systems that they have been providing. I hope this.
Okay, so we're supposed to have Biotech Buzz at 2:30, but I don't know where VV is. So, Catherine, let's just keep on rolling. And then eventually I do have to hop off, though, because I got to prep for my show, the ETF show, which starts at 3 o'clock. And we're going to go over what's happening in ETF land, and then I'll replay a segment from our cannabis conference last week. But until then, let's just do some chat questions, right? Because we were supposed to have a new show, and I don't really know what's going on with that. So let's just keep on going with crypto land, and I'll eventually hop off. I might let Mitch hop on and do some Q&A with you, Catherine. But let's just do some more questions from our chat. What else do we have? What about Stellar Lumens? Do you know that?
Yeah.
Yeah.
Did you say Stellar? My connection is Stellar, right?
Yep, that's what I said. Stellar Lumens.
Okay.
Yeah.
Wait. Once again, Stellar, the cryptocurrency.
Here.
Is this the name?
Stella, like STLLA, Stella.
Okay, Stella.
Like Stella Lumen. I'm just reading what it says. It says, and again, I don't know because I'm not. You're the crypto expert, not me. I'm just here to facilitate your expertise.
Mm-hmm.
Where'd I? Oh, they're saying biotech is live. Is that what they're saying? Hold on one second, Catherine. I don't know what's happening here. I don't know what's going on with our own channel. They're saying biotech is live.
Just started up. Right
Just started. All right. Well, in that case.
drug and tweak it to make it more potent and with less side effects. So unless there's manufacturing issues, I feel very confident we're gonna have approval coming up. But I warn my viewers and my Twitter people when I talk about KMPH was at like a 595, and I said, don't you guys blame me if we don't get approval, because you guys had the chance. You still have the chance at 9/11 to pull out, so it's not my fault. But I'm really nervous. Everybody's kind of biting their nails right now. The whole Twitter's been very busy with the KMPH. And then also wanted to talk to you. I also want to talk to you about what was that? I lost my train of thought. Oh yeah, you guys, I promised I would just check for you guys CLBS. So can you pull? I'll pull out because I have some windows here that I did a little research.
You're gonna share your screen then?
Yeah, I'll pull my screen. So let's share screen, application window. Here you go. Okay.
Do you want to play the intro? We forgot to do that while you pull it up.
Okay, we can do
Let's
that.
do that.
Okay. Hello. Can you guys see this? Can you guys see well?
I can see it.
Yeah, because everybody see it. So CLBS. Well, one thing, they just had an offering, so they raised some money. So there's enough money right now, 116 million. I don't know. Can you guys still see it? I completely lost it. Where is it? You guys see? You can still see it, and I cannot see it at all. Let me see. I completely lost my view. Let me see. How is that possible if I'm sharing with you guys?
You probably just lost the tab because you did a tab share, right?
Yeah, I did a chat. Yeah, but I can't find my tab, guys. I'm so sorry. Let me see here. Do I need it to reshare with you guys? Okay, so maybe I can just see about it. Okay, but I can't open the tab. I don't have anything available here. Let me just see. I'm gonna close everything, you guys. I'm sorry.
Why don't you just stop the screen share and then pull it back up again?
Oh yeah, here I found it.
Oh, great, awesome.
Okay, so $1.93. They have estimated. It says here 124, but I heard that they have estimated 116 million of money left, so they're gonna have enough for their studies. But again, guys, I know that they are in talks with the FDA for a phase 3. that FDA is not accepting that study. For me, is short term. There's not a lot of the only news you probably would have is the phase 1/2 IND to be filled by Q2. But when you guys look here in terms of catalyst, catalyst date, you have phase 2 data due in Q1 of 2022, phase 2B data due 3Q of 2022. In my opinion, I would have set my money someplace else and then come back to the stock later on. Like I told you guys, it's unless we get some press releases, we're not gonna see a lot of movement at all on that stock for a while. So that would be my, it looks good. They have some good products. I know that they're gonna be able to initiate the studies in Japan as well. But I feel like, I don't play or buy anything that doesn't have at least 6 months out of either an FDA approval or has already an approved commercialized drug, because my money is just going to be sitting there and waiting. I'd rather make my money work someplace else. But, this is completely different opinion. Some people just like to, hold it and leave in their account forever. But the good thing is, I don't think they're going to go in any dilution, because there's 116 million in cash. So that would be my concern too. Holding long term is how many dilutions offerings they're going to do, or if the stock is really below $1, how many reverse splits are going to go through before we actually have a product. So that would be my personal opinion on it. It looks good, but I think that's still very far out. Another thing I wanted to share with you guys, let me share with you guys here, because I think you guys gonna like. Let me get you guys.
We have lots of good questions in the chat. We'll come back to them later, or if you want to take some right now.
Yeah, we can take some right now too.
Sure.
I'm just trying to find another thing from BCRX for you guys. You guys would like it if I share with you guys, but go ahead. I'm trying to find it.
We have Yogev who says, I would love you to talk about Trevina going into this month.
Okay. I am long on Trevina. I feel like with, when you're looking at the COVID and access to the hospitals, everybody, it's putting patients respirators and trying to save lives. So there's not a lot of elective surgeries, but I think now that everyone's getting vaccinated and things are getting back to normal, I believe that reps are going to have better access. It hasn't been, as a farm rep, a lot of my colleagues haven't had any access in those hospitals because they're strictly only leaving access to, to doctors, physicians, nurses, and patients. So there was an overwhelming population coming in because of a COVID. So I feel like once we stabilize, I think that we're going to get her a little bit in terms of speed up the process of launching Trevina. Like I say to you guys, my money is there for a while, but I put on my IRA so I don't have to look at as much. So my Trevina is there. All my really, really long-term positions I usually leave on my IRA, so I don't have to get the press and not seeing any movement. So yeah, so I feel like as we get the vaccination going, we're gonna start seeing better numbers in the hospital levels, because if you guys Google morphine shortage, there's a lot of shortage of morphine in hospitals. And then we're talking about patients complying with the medication and having, not complying, but the side effects. There's a lot of patients that cannot tolerate morphine at all. And they have, they throw up, they have a lot of nausea. And Ollie does, have a better side effect profile. So I'm very positive with Trevina. I feel like in coming months, we're going to see a much better sales results from them. So that would be my opinion. But I'm holding long for sure.
All right.
Yes.
Someone else was asking about, so we have a couple questions about KMPH. I know we talked about that right at the start, and we'll probably have to talk about it a little bit more.
Yeah, sure.
Okay, yeah, we can hop into that. So here we have Shaquille. He says KMPH earnings is on Friday. Is that a risky hold through the weekend? If this tanks after hours, could there be a redemption by Friday? And someone else was also asking about a potential price target on approval.
Okay. So what was the first question again in regards to about Friday? Today is only
Today's
what
Tuesday.
yeah. So what are they talking about? What are they talking about in regards to approval on Friday? Today is the day of the approval.
Well, they potentially are wrong, so I'm not sure. But yeah, they are saying earnings is on Friday. Is that a risky hold through the weekend?
Earnings on Friday. I'm holding regardless. If we earnings on Friday and when you're waiting for an FDA approval, I don't think that's gonna matter. So I'm gonna play by ear and just see how the stock is gonna move, and if we get an approval or not today. So I couldn't tell you. They have one approved product, right? So I don't know how they're gonna do in terms of earnings, but in terms of price targets, because it's a low float stock, I can see the stock reaching 20 upon approval for sure.
Okay,
because
he just corrected himself. He said earnings was last week. Sorry, guys. So
earnings was last week, so then you don't have to worry about that.
Yeah, exactly.
No, yeah. So what else?
All right, let's see. There was one question about Ocugen. Said I'm assuming they said Covaxin. Is that COVID vaccine? I'm assuming. Has no need for temperature control, single dose, but is it too late for them? Their phase 3 trials concluded and seem to be no worries about approval.
Yeah, I think they're late. Vaccine, yeah, I think they're late. Unless they're offering some kind of, I know the Johnson & Johnson had only one dose vaccine. So unless they offer a completely, totally different advantage, I know that ALT is going to have a nasal spray. The vaccine is going to be nasal administration. So I feel like that's an advantage. But if it's just a vaccine, I feel like they're late in the game. Yeah, I would say so. For sure. And then what is the, I want to go ahead and share the screen with you guys. Let me see if I can find you. I feel like such a dumbass over here trying to find my tabs. I'm like, where is my tabs?
It's a relatable problem. Sometimes you just got too many open, right?
No, I have like 2 screens, bunch of charts up, and then trying to find my tabs with it, and I don't know where you guys are. It's just bizarre. Yeah, I can't find you, Rohan. Let me see.
Anything I can pull up for you?
No, I was gonna show you. Okay, I see you
There
guys.
you go.
Okay, share. So share screen. I want to show you guys this. Okay. Share.
There we go.
Okay. Can you guys see? I'll turn off this tab here. So I want to talk to you guys about why I'm still very bullish with the BCRX. So looking at here, BCRX Orladeyo launches additional validation for the 9930. So BCRX is a commercial stage biotech company with marketed Orladeyo as a prophylactic treatment in hereditary angioedema. So prophylactic means that it's for prevention. So it's to prevent having the HAE. In 2021, we will look for more color on the uptake dynamics in the early launch of Orladeyo in the US. It will be important to understand the compliance and discontinuation as Orladeyo entered the HAE market as the first oral prophylactic therapy in HAE. Like I told you guys, it's only injection. We also expect approval decision in EU in 2Q, with launches in Japan and Germany pending EU approval. I also expect in 2Q. From this pipeline, completed data from the dose range study of oral factor D inhibitor BCX 9930 and PNH is expected later at its R&D day on March 22nd, you guys, which results will provide validation of its mechanism and pave the path to expanding to other complement-mediated diseases. So this molecule has 8 potential rare diseases that comes with it. BCRX recently indicated its plan to start pivotal studies in PNH and proof of concept studies in renal complement-mediated diseases in the second half of the year. We also look for updates on the next steps for the oral ALK2 inhibitor in fibrodysplasia, which is FOP, and to the second half of 2021 as well. Orladeyo is the primary driver in our valuation, contributing for $8 a share to our PO with a risk-adjusted $670 million peak sales by 2027. So they maintain a buy within 13 PO as we await updates on the early Orladeyo launch. So that is their first assessment in regards to BCRX. But I wanted to show you guys this as well. So when you look at it here, you know, the price target at Cohen at $16, you know, so I told you guys Alexion got bought out because of the Factor D pipeline. 90% of Exelion sales comes from the Factor D pipeline. If we can prove a concept, which they say that we're going to have some data released in March 22nd, guys, this can be another Alexion. This can be another company that's going to get bought out for $32 billion. So I still reiterate that at this price range right now at $12, what is the price range today, Rohan, for BCRX?
Let me pull it up.
Yes.
All right, let me just add that to the stream here.
Yes.
Oh, and this is the 1 minute chart. You want to see the 1 day chart?
It doesn't matter. What's the price right now? What are the
price
prices
right
at?
now is 1186.
Okay, so we still have what, 16 to 1186. We still have a nice 30% upside potential. But if we can have a proof of concept of a Factor D pipeline, guys, this can be huge. So I am still holding long. And then if you guys, you unshared the screen, right? Can you put back my screen there?
Yep.
Okay, so they also expect that sales is going to be around $550 million for their sales. So I still will reiterate that a $16 price for short term is still a very good price in my opinion. So I went ahead on my Twitter and posted that so you guys can actually read with the detail. So any other questions that we have there in the chat?
It looks like we have a couple people who want us to talk about INFI.
INFI. Okay. I'm still holding long. I told you guys there's some data. So let me pull here Biopharma Catalyst because I know there's data coming up and I have the subscription so I can see a little bit more than you guys that don't have it can. So let me just go here, Biopharma. I hope we don't get the denial approval of KMPH while I'm talking to you guys. So, okay. Okay, so here's what we have. We have the phase 2 progression-free survival and updated overall response rate data will be presented in the first half and second half of 2021. So that would be the first catalyst for that. So you had the phase 2 was announced February 11th. Overall response rate was 30% in a combo versus 25 in a nivolumab monotherapy arm. And then in PDL negative subgroup, overall response was 26 versus 14. And so now we are just awaiting for the next one, which is we have a first half and the second half of 2021 as an updated on the data for the frontline triple negative breast cancer. So I am holding anything that there's a catalyst this year, I'm holding, because I know that we're gonna have a bump on a share price once we get news. Also, they have a plenty of cash. They went to an offering. My major institution bought it at a 380, I think was the offering. So we're still below the offering price. I bought it at like a 390, so I'm losing a lot of money here on this one, but I'm just holding long. Anybody else?
Yeah, so looks like someone wants to talk about, can you talk about MREO's new patent?
MREO new patent. Let me just pull here MREO because I remember trading this when we had news a couple of months ago. I like that they have a lot of cash left, but let me just see here what they have in store. Okay. Okay, they say they're phase 3 ready. So the problem with the MREO, I don't know much about the patent, but my problem is we still have a lot of time left. We have a phase 2 and 3 that commenced in 2021, and then we have phase 1B trial to commence in Q4. And then we have the phase 3 trial that's going to take a couple of years before we have a PDUFA. So my problem here is we still have a long ways to go in this company. So that would be my thought process. But I don't know much about the patent. I'll take a look. But they also went through an offering February 2021. So they have plenty of a cash, which is good. So if you guys want to hold long, we don't have any problem with dilution further out, so which is nice. Anybody else?
All right. So let's see. We have a couple questions.
Mm-hmm.
We have someone asking for news on SRNE. And let's see, anything else?
Okay, let me just pull. I'm a complete long here. I feel like there's so many good things coming up for SRNE. Okay, so we are waiting for. So I went to a meeting in Sorrento with with investor relations because I had a friend that had a company that owned over 1 million shares of Sorrento, and he showed me a video of a dog getting the molecule that they're currently studying and being completely pain-free. So Q2, guys, we have a phase 3 top line of data. So that is coming up. So I would have just hold. I would have not sell it. So I feel very, very confident we're gonna have some good news. And then we still, we have the rapid test too for COVID. What else?
All right. Let's see. So we have a couple people who want to hear about. I've seen INDRA, or sorry, not INDRA, IDRA.
Oh, IDERA. Oh my God, you guys. I love that company because they had this GS technology and it completely went south. And I lost a lot of money here. My whole problem right now with IDERA is they don't have that much cash left. They only have a 20 million cash and their phase 3 data is due on this quarter. And then we have a phase 2 data due on quarter 3. So I feel very confident with the melanoma drug. It might be a good time now to buy it back. I think I want to buy back some IDERA, but my only concern right now is that if they want to continue the trials, they don't have enough cash. So I would just be, I want to go all in if you guys are just buying it because they might have to raise money.
All right. And so we just have a couple minutes left here. So
yes.
I want to let's take 2 more questions really quick.
Sure.
So we have someone asking, what about Alnylam Pharmaceuticals Inc. I don't know what the ticker is for that.
How you
ALNYLAM. Let me look it up.
ALNY?
Yeah.
Alnylam?
Yeah, Alnylam Pharmaceuticals.
Alnylam Pharmaceutical. I like this company, believe it or not. I bought it at $32 and sold it at $117. I thought I was like a winner. And now look at that at $151. No, it's a good company. I mean, like it's not your little startup. Look at the price. So I like the company for sure. I kind of regret selling it. So you guys don't have access. So they are, if I want to update you guys, what's going on is they have a phase 3 top line data due in mid 2021 for their impaired renal function. And then they have also an NDA filing that's due around 2021. And then we have a phase 2 initial data for Hep B. A lot of happy be here. To phase 3 top line data due in second half of 2021 for the hemophilia drug, and then they had a CRL, and then they're going to refile an NDA for Q2 or 3 of this year. So there's a lot going on. Company looks very good.
All right. And let's do the last question here. Oh, that is not what I was meant to click. So let's see. Someone was asking, do you have time to talk about PRFX?
PRFX. You know what? You guys mentioned that yesterday. I don't, but how about I'll fill you guys in on Thursday? PRFX.
Sounds good. We can start with that one.
Yeah, then. I can start with that one. I'll give it to you guys on Thursday.
All right.
So whoever it's, I just want to wish everyone good luck. Don't hate me on Twitter if we don't get approval. I'm telling everybody, you guys can sell today. But hopefully I can celebrate with all you at Twitter later on.
Absolutely. Keep your eyes on KMPH. That was a great show, everyone. One quick note before we go. So coming up on March 25th, we do have Benzinga's Small Cap Investor Conference. So this is an incredible event. You know, we have a bunch of companies coming here and presenting, and you can really get the information ahead of everyone else. You know, they're basically presenting on their companies and why you should invest in them. So I'm going to drop a link here. You can register, but you definitely
that looks exciting, Rohan, you know, because that's what we all talk. Everybody on the show love the small cap, you know.
Exactly. Small, I mean, you know, they say, I'm not sure the exact amount, but the amount of people investing in small cap has gone up like crazy this year, right? So it's definitely a topic of interest. I'm trying to post a link in here. It's not letting me.
It's all about value investing for me, you know. I bought BCRX at 380, you know, it's a 12. If we do have a bear market, I know that kind of my investment, it's safer than buying, you know, Tesla at the high at $700, you know. So it's all about value investing, finding companies that have the potential to become, you know, that blockbuster, you know, company. So
exactly. And you know what? I can even share my screen here just to show that real quick. All right, here we go. Just gonna select this. All right. So there we go. March 25th, we have the Benzinga Biotech Small Cap Conference.
Oh, so, it's a biotech?
Yes,
is it even
exactly.
better?
Even better.
Yeah.
So you guys got to sign up for this one. Got to keep your eyes out. And there's going to be a bunch of amazing information, a bunch of amazing networking to be done, connections to be made. And so if you're interested in investing in biotech and small cap, then you got to be there. So make sure you hit the link in the chat and register.
I will be there with you guys.
All right. Well, that is going to cover it for today. Vivi, thank you so much for joining us.
Thank you, you guys. Good to see you, Rohan.
Thank you guys for putting up with me.
Tell him I said hello. You did great pulling the charts.
Thank you.
I'll see you guys on Tuesday.
All right. Bye, everyone.
On Tuesday, on Thursday.
There we go. And make sure to hop over to the next broadcast. All right.
Her ETFs they issue their daily buys and sales every single day, so you can see what you own if you own one of her funds. So that's why ETFs are the best. That's why we're going to talk about them for the next half hour. Here's a point of the show. We're going to talk about what I'm buying, what I'm selling, what you're buying, what you're selling, and winners of the last week as far as returns, losers as far as returns, ETFs with the greatest fund flows. And we'll try to cover one theme for every show. And then if we have time, we'll do some questions from the chat. So the theme of today's show is actually going to be cannabis. For those of you who missed the Cannabis Capital Conference on Thursday, there was a presentation that was given by Advisor Shares. And what I'm going to do in a few minutes here is I'm going to replay that presentation. It's about 15 minutes long. I'm going to replay that. It's all about the MSOS and the YOLO ETFs. Those are Advisor Shares as two cannabis ETFs. And they go into great detail about how these funds are structured, how they work. I'm a big fan. I don't own either of these funds. Excuse me. I probably would. Do I have any water here? I don't have any coffee here. I probably would own MSOS if it was around when I was buying cannabis stocks last year, but it wasn't. I do own the 4 largest holdings in the fund. I may end up just buying the fund too. I don't really know yet. But I'm a big fan of what the fund is holding as far as U.S. multi-state operators. So I want to in like 5 or so minutes, just replay the entire presentation from Thursday's Cannabis Capital Conference. That's with Dan Aarons. He's managing director at Advisor Shares. So that's going to be the structure of today's show. Let's just start by going over some winners and losers of the last week. Mitch is telling people to bring me water. I'm fine. You don't need to bring me water. I'm fine. I'm not dying here yet. All right. Let's go and let's share my screen here. And let's show y'all what I'm looking at as far as winners and losers of the last week. Here we go. This is, of course, ETFDB.com. That's the tool that I use for almost all of my ETF research. Look at this, guys. The story of the week is energy, right? Energy. I think like of the top 40 highest returning funds in the last week, I think like half of them ballpark are energy related, right? OIH right there, Vanek Oil Services. You've got iShares Oil Equipment. You've got State Street Oil. You've got Invesco Oil. You've got an MLP in there. What energy from Invesco? You've got it's just all oil, guys. It's all energy. It's been the theme of the week. It's just going up the oil. So you see some other names on here that are of interest. MLP. You see the S&P Retail ETF. I skipped right over the China Real Estate Fund from Global X. But the real theme of the week is, for me at least, was the strength in energy and the strength in oil ETFs as a result. As far as your biggest losers of the week, you got Romo, your strategy. That's a new one. Jeez, they call it Romo? All right, I'm gonna have to get them on the show for their ticker. That's a fun ticker. The bond ETFs, bond and silver, bond and metals, or your losers of the last. Look at this, guys. It's all gold. It's all silver. It's all miners. These are your biggest losers of the last week. It seems like every asset is going up in price except for metals, more specifically gold and silver. Copper is diverged completely. I don't know what's going on there. So there you have it. Winner of the last week, energy. Losers of the last week, gold, metal, silver. Let's look at fund flows here. Let's look at funds that had the largest flows in the last 7 days. No real surprise. Again, what the point of this here is not necessarily to say, oh, this fund had the most flows, because generally speaking, it's going to be the same group of funds at the top and the bottom. The point of this is just keep an eye on overall themes, right? So it's not a surprise to see. Actually, it is a surprise to see the IWM so high. It's $2.1 billion have flowed into the IWM in the last week. What does that tell you? That tells you that people are chasing, right? We know that the Russell has been the strongest performer of the major U.S. indices in the last, call it 6 months. IWM is up the most this year of the three, of the Russell, the NASDAQ, and the SPY. IWM is your leader. So look at those inflows, guys. $2.1 billion of inflows into IWM last week. That's very interesting. No real surprise to see like VTI or QQQ or VOO or even TLT so high on this list. These are your largest funds, so of course they're going to have the most inflows. They're really sort of in a league of their own. But if you scroll down a little bit, get a little bit more deeper into the inflow list, and you can sort of get a sense okay, what type of funds are people running into? And you're seeing a lot of value, right? There, Russell Value, Russell, the IWN right there. That's the Russell 2000 Value ETF. Same theme, value small caps, right? Value small caps. There's the iShares Core Small Cap Fund right there. Seeing some bond ETFs. Look at that. The Invesco Buyback Achievers ETF. $323 million of inflows last week. That's very interesting. As far as outflows, let's take a look at outflows. Again, no real surprise to see SPY up at the top of this list. SPY is so big, it's going to be at the top of inflows or outflows every week. GOD, as I said, I mean, metals are getting crushed, so not a real surprise there. Look at that, though. Look at that. ARKK, the ARK Innovation ETF, one of Cathie Wood's fund, $690 million of outflows in the last week. That's not a real surprise, right? Because we know that what leads us up will often lead us down. And Cathie Wood's funds have been such a beast that when you get a week like we just got last week, when they underperform, it's no real surprise to see a massive amount of outflows, right? You get the chasers, people who were trying to get in for a quick buck and get out, and they're running for the hills, right? So this isn't really saying that Cathie Wood, that the story with Cathie Wood is over. It's not. It's just saying that what's hot was not last week. And you can see that ARKG, same story, $600 million of outflows last week. If we scroll down, I'm sure there's ARKW, $252 million of outflows. It just means that the people who were chasing were running away from Cathie last week, as they're wont to do when tech sort of turns over and when we get the week that we had. So on the Cathie Wood note, I want to make a quick public service announcement. If you have not heard it by now, if you've been watching our content, you haven't heard it by now, I find that hard to believe. But tomorrow, Benzinga is interviewing Cathie Wood. And when I say Benzinga, I mean Jason Raznick, who is, of course, our founder and CEO. Tomorrow, 2:00 p.m. Eastern Standard. Where's the Eastern Daylight? Does anyone know? Is it Standard or Daylight? Do we know? Eastern Time. Standard or Daylight. I don't know what time zone, what daylight savings time is what. Eastern Time. We're going to have Cathie Wood on for anywhere between a half hour and an hour. And the link I just put in chat, I just put the link in chat. I'll put it in the Facebook chat too, so y'all can see that. Go to that link, and you can submit a question to Cathie Wood. I'm not saying we're going to answer. We're going to ask your question, or even if we ask it, if she's going to answer it. But submit your question as long as if it's not off the wall crazy. We're going to do a random drawing, and we could draw your question. And whatever we draw, we're going to ask. So check out the link in chat to ask Cathie Wood, or potentially ask Cathie Wood your question. Okay, it is 3:11. I do want to get to my replay. The reason why I wanted to highlight cannabis stocks today is they've just been on fire. Let me share my screen here. These are all the cannabis stocks in the U.S. Okay. Yeah, let's go to returns. Look at these returns, guys. Year to date. Look at this. Year to date. The worst performing ETF is the one I like, is up 34%. That's your worst performer. 34% gain in 2 months. Flows. Look at these flows, guys. This is madness. Year to date, $707 million into MSOS. Actually, they announced last week that the MSOS fund now has $1 billion in AUM, which is a critical threshold. That basically means that you've made it. If your ETF got $2 billion in assets, you made it. Congratulations. You're in the big leagues. That makes MSOS just the second cannabis ETF to cross that $1 billion threshold. The other one is MJ, which is, of course, the oldest ETF, cannabis ETF by a mile, by like a couple of years, I think, or at least a year. So MJ, MSOS are your largest ETFs in terms of assets. And you can see they got the most inflows last week. So MSOS, this fund is like 6 months old, guys. It debuted in September. They had $2.5 million in assets in September. They've gotten from 2.5 million to over $1 billion in, what's that, 5 months? It's ridiculous. You don't see growth like that very often in ETF land. So that is why I wanted to highlight sorry, guys, I just hopped off the screen there. That's why I wanted to highlight the MSOS ETF, because the growth has been tremendous. And okay, so let's play. Thank you for the water. Somebody brought me water. I appreciate that. I don't know who it was. I didn't see. I'm going to queue up our video right now, and I'm going to make sure I'm sharing my screen. I'm going to make sure I am doing it correctly. And all right. So here now, again, as I mentioned, is a presentation from Thursday with Dan Aarons, who is from Advisor Shares. He talks through how the YOLO and the MSOS ETFs are structured. After that, I'll do some quick Q&A. And here is that presentation. If you can't hear, let me know. One in chat if you can hear, two if you can't. Or I guess if you can't hear, then. No sound. Okay. No sound. Thank you very much. 1 second. I know how to fix. I am sorry, guys. Jesus. It was because my tab is so small. I keep kicking myself out. Okay. 1 second. I know how to fix the audio issue. Look at that. There we go. All right. I'm going to rewind it and get us back to. There we go.
Great. I will quickly say, oh, let me go back one. There we are. Advisor Shares, cannabis investing. I hope most people listening know that Advisor Shares is in the ETF, exchange traded fund business. We do specialize in actively managed ETFs. That's all we do. And over time, we've grown a small suite of ETFs. I'm going to start on the right side here. Pure Cannabis ETF, ticker symbol YOLO. It's been around since April of 19. And it is what we call a global mandate. It owns US exposure. And I know there's a lot of talk in the conference today and tomorrow about US operators versus Canadian operators. Where should we be invested? Well, our fund YOLO, it bridges that gap. We have US exposure. There are companies I like on the Canadian side of the border. I can count them on one hand, just a few fingers. But we own a lot of them. We decide what to overweight and underweight. Going to the left side, pure US cannabis ETF, ticker symbol MSOs, MSOS. I think people get an idea of what this fund invests in. It doesn't invest only in MSOs. It is a US focused, the only US focused ETF in the cannabis space in the United States. It owns an awful lot of MSOs and some of those other ancillary companies that people know. And of course, we have a Vice ETF. It's a little bit tongue-in-cheek. People think about, the term Vice. Do I like that? Do I not like that description? Well, it does own alcohol and tobacco. It owns a cycle of tobacco companies. One investing. Neither is Constellation Brands. alcohol. One thing I want to re-point out to people though, whether you're starting in 2014 on the left side of this graph or going up to the projections to 2025, look at the blue. That is the United States. The orange, Canada. And then we have the rest of the world. There are opportunities there, but I'm going to say tap the brakes on those a little bit. The entire market of South America, Europe, everything else is smaller than the Canadian market. The Canadian market is smaller than the California market, and California is just one state in the United States. Never lose focus on that. All cannabis investing is not the same. In particular, in my business, all cannabis exchange traded funds are not the same. Now, there's a lot of talk if somebody's going to be an ETF or mutual fund investor. Do you believe in active management? Active management simply means stock picking. Or do you believe in a passive investment? In a large cap growth fund, I think passive investing and index can make a lot of sense. You get lower fees. In what's called in our business a thematic fund, a thematic is focused on a particular industry or particular theme like cannabis. I don't think it makes sense. You do not want to own every stock in the cannabis area. You want someone who knows the industry, picking which stocks to overweight, which stocks to underweight, which to avoid. And you don't want to be locked into only doing a fixed rebalance that a computer does basically on a monthly or quarterly basis. In an actively managed fund, we can make choices anytime we want or need. We manage the fund every day. We don't overmanage it. We're not necessarily trading every day by a long shot. It's a long-term strategy, but we want to have our hands on the steering wheel of these funds. I talked quickly about the names of our funds. YOLO, the pure US the pure cannabis fund, YOLO, not to be confused with MSOs. YOLO was the top performing cannabis fund of all in 2020. At the beginning of 2020, I started predicting there's going to be a big separation between the companies with balance sheets and those companies that don't have balance sheets, those companies with earnings and maybe profitability, or at least a strong path to profitability, and those that don't, and a choice between the US and Canada. We saw that in 2020. YOLO became a top performing cannabis fund through the calendar year 2020 by a pretty wide margin. The difference was active management, active stock selection, and US exposure. Both of our funds, YOLO and MSOs, are the only funds available in the United States that do have direct exposure to the multi-state operators. I know that's going to be talked about throughout this conference. We're talking about Green Thumb Industries. We're talking about Curaleaf. We're talking about Trulieve. We're talking about Cresco Labs, TerraSend, Air Strategies. These holdings are inside of our fund MSOs. A little less exposure in our fund YOLO, but they're there also. The US opportunity. You know what? I've seen a map like this on one of our competitors' front page of their website. In the fine print, it says they can't invest in those companies. The US opportunity is growing rapidly, state by state. There's a lot of talk about legalization, but for the foreseeable future, the talk is about decriminalization. It's about 280E reform. It's about safe banking. And it's about some form of states' rights approved at the federal level, but leaving it up to the states. That's why we get this map, and this map is always changing. So here again are the funds. On the left hand, we have MSOs, pure US cannabis ETF. This fund launched September 2nd of 2020. It is now over $1 billion in assets. It started with 2.5 million. It's growing rapidly, and it is mostly deployed in MSOs, multi-state operators that we get exposure to. I say the word exposure because we don't hold their stocks directly. A lot of people know that we're doing it through a a tri-party agreement. We have a counterparty that's giving us total return swap exposure to those companies. We did that with a lot of communication with our outside counsel, with our custody bank, with the New York Stock Exchange, and the SEC even reviewed it and asked us to get a legal opinion on it, which we provided to them, and they accepted.
I just want to talk about that for a second. So yeah, MSOS, due to the legality of cannabis, or the illegality, I should say, they don't actually own the companies in the basket. They use total return swaps, which are basically just contracts with a third party or with a bank. What that means is, for now, probably because those total return swaps have fees associated with them, MSOS will probably lag the stocks in its basket for now. But when the legal status of cannabis changes on the federal level, then they're going to ditch the total return swaps. They're going to go out and they're going to buy shares in the open market like a normal ETF would do. But for now, if you're owning MSOS, you need to know that this ETF doesn't actually own the shares in the stocks in its basket. It owns total return swaps that are a reflection of those companies, but not the stocks themselves. It's a technicality, but it's worth knowing, and I would expect that to change with the legal nature of cannabis. All right, back to the presentation.
A lot of communication to do this thing correctly until the federal law changes and those companies are allowed to uplist, which we think is coming. We're holding those companies via total return swap. We expect to hold them directly in the future. On the right-hand side, YOLO, the pure cannabis ETF. Our top holding is Village Farms International. We're a big believer in it. I like Canadian LPs if they have a good balance sheet, if they have a profits or a path to profitability. Village Farms is one of those very few cannabis companies in Canada that does have direct inroads to the United States market. Village Farms has operations in the United States. It's hemp and other vegetables. It's not yet marijuana, but they are already operating in the United States. They operate all over North America. They're going to have great inroads to the US when things change. We also hold a great deal of GW Pharmaceuticals, made out very well on that recent buyout. You can probably assume we're going to be decreasing that position, but I'm not taking my time with that. I can do it anytime I want to. ETFs are very tax efficient vehicles. I can do that without realizing capital gains to our shareholders if I do it right. So both of these funds, it says at the bottom, offer exposure to multi-state operators. Other ETFs, and a lot of these people on this call are not ETF investors per se, you're individual investors, but you might want to look at the ETFs more. We're the only ones that have the multi-state operators in here. Another really important fact about this, the multi-state operators, some investors aren't able to trade them. They're not on Robinhood, for instance, because they're traded in the US and they're OTC. Our fund MSOs and YOLO available on Robinhood, generally available through virtually all broker dealers. You can trade options on our fund MSOs. Can't do that on the individual multi-state operators. That's why we have these vehicles, and that's why people like these vehicles. Even if you're typically an individual stock investor, we're listed on Robinhood. We're listed on the New York. Both these funds are listed on the New York Stock Exchange, and they do have options listed on both of these funds. Of course, we invest in small and mid caps. We can get in IPOs as well anytime we want to. And we can add new positions anytime we need to. We do expect there's additional companies that are going to be coming online in the coming months. The investment process. I'm not going to spend much time here. We do look at US and foreign companies, in YOLO's case, that are involved in the cannabis industry. We want pure cannabis exposure again. Again, not the Constellation brands, not the Scott's Miracle Grow. We're looking for companies, for the most part, that are pure cannabis, making the bulk of their revenues or having the bulk of their assets tied to the cannabis business. We are using fundamental process to pick these stocks for the most part. Yes, I look at balance sheets and we look at earnings and profitability. And the active management also says a lot about risk management. We can nibble at stocks that are dipping in a particular day. We can buy dips. We can decrease winners. We try to look at the portfolio on a regular basis and add and trim. A very important screen here, the top holdings. This is as of a couple days ago. Take a look there. On the right, on the left-hand side, you see the real multi-state operators. You see some of those same operators in different holdings in YOLO. Hi, Patrick. You look like you want to cut me off.
Hello, my friend. Well, we're at time, but I have one question, and I just want to highlight something. And if you wouldn't mind leaving.
All right, you guys, that was basically it. There was a couple random questions in there from Patrick Land, but that was the extent of the presentation. So again, I just wanted to show you guys that because I thought I mentioned this the day that the ETF launched. I mean, on pre-market prep, I said I would totally buy this thing if I didn't already own like 40% of the fund via individual stocks. So that's just my opinion. I'm not an advisor. I'm not an expert. It's just my opinion. But for now, at least, the market agrees, right? $1 billion in assets in a couple months is astounding growth. Astounding. So okay, we're out of time for questions. But what I'm going to do, I'm still trying to figure out if I want to do the show 1 day a week or 2 days a week. For now, it's just the one that may change going forward. But I like this show. You know, it's more of a holistic, portfolio show. We're not talking, and we can talk YOLO trades. Like you can YOLO. I was telling Austin in the chat, you can YOLO an ETF. I've got a YOLO trade on in UFO right now. But ETFs can also be a core part of your portfolio. Somebody asked in the last show about covered call ETFs. Let me do some more research and get back to you about that. I'll do that on our next show. We'll talk about covered call ETFs, how those work, and I'll give you my opinion for that. But that is, I think, going to be a wrap. Let me see if there's going to be a couple more. Can I do a couple more questions? Let me see here. What is the process for getting OTC tickers to get on the NASDAQ? And I see. Okay, so that's not necessarily an ETF question, but I can answer it real quick. They have to apply, basically. The exchanges, NYSE and NASDAQ, have standards, have legal standards, and they have fees. You have to decide as a company that if you trade on OTC, that you can abide by those standards and you want to uplist, right, to an exchange. Cannabis companies want to uplist, but they can't because, again, cannabis is not legal in the U.S. on the federal level, so they are not allowed from uplisting right now. So they're trading on the OTC markets because that's pretty much that's the only place they can trade in the U.S. That will change as the laws change. Okay, I'm being told to wrap it. I got to wrap. Guys, it's been fun. Hit the like button. Again, link to Kathy Wood. I put it in chat. I'm putting it in there again. There's one link. And there's two links. Kathy Wood tomorrow, 2 p.m. Eastern Time. It's going to be a wrap for the ETF show. Pre-market prep at the close is up next. I'll see you guys over in that stream.
Three consecutive highs, opened, matched yesterday's low, and then once it took out there, that's all the breakout momentum traders needed.
Joel, how we doing? What's going on?
You know that music wants me to show off my dance moves, man.
No,
you know that.
Please don't.
You know I can groove, Spencer. You saw me. You saw me at Dana's wedding.
That's
you
true.
know I can groove.
I've seen you cut up a rug. I've seen it.
Amongst all my talents, yeah. What a day, man. Let me strap down here and rocky session here for the S&P 500 futures. We gave a look at the pre-market high. We snuck, but just like we tried to stay in that 3,900 handle, and boom, we lost that early in the session. Almost matched the pre-market low. Didn't quite get there. And then, man, we've been bouncing around 80, 90, 95, even back down to 80, down to 76. So rocky trading here this afternoon, heading into the final 26 minutes of the session. Crude loses $60. Oh, last week's low is right there, 58.50. That'd be a big number. That's down a $1.06 at 59.58. Gold makes a new low for the move, but won't roll over under 1,700, up $12.10 at 1735.10. Silver, that's in the green by 15 cents at 26.83, trying to get over 27. And Bitcoin, sellers at 50K again, folks. That's the high in the futures, just over 50,500. The low, 47,220. I am still keeping a very, very close eye on 45,000 in the Bitcoin futures. That's all I care about. I'm not looking at the cash. Spencer, what's on your radar today?
Oh, just Rocket.
Rocket, I'm not going to make any comments on today.
Okay, someone in chat asked, Wade, did Raz sell his Rocket? No, Raz would sell his children before he sold his Rocket. Okay? No. He did not sell. If he did, I'd be stunned. Alan's laughing, but he knows it's true. All right. Anyway, so Rocket, you're not going to comment. It's up 68%. Today.
I probably will not be commenting on Rocket for the remainder.
Because
on the remainder, your guys and stuff.
Baby.
This is above my pay grade, man. This is above my pay grade.
Oh, not because you're getting down and dirty? All right.
Well, first of all, full disclosure, I have no positions, and I will be taking no positions. I am flat, as they would say, flat, dumb, and happy, and I'm staying that way.
You know what? Considering your luck, because you did own a piece of GameStop before the craziness happened, I would have thought maybe you bought some Rocket like 4 days ago, just like on a lark. Considering your luck, but no, I guess that didn't happen.
No, I considered it. I we always talked about the undercut and rally, and I never got it. So flat, dumb, and happy in Rocket, and the full disclosure, and that'll be my full disclosure moving forward.
All right, couple more things, and then we'll get Rob Friesen on from Bright Trading here in a few minutes. But did you see Inseego today? They had earnings. I guess it was the last night or this morning. I don't remember when. They had earnings at some point in the overnight session there, and it's getting cracked.
Yeah, back down to $10. 2-for-1 stock split here. Boy, I hope Kolb's out of this thing. It's just the street heading the right way into the report. Oh, boy. I don't know if you want to catch the falling knife on the first day. 10 was some support back in December before it made its magical run to 22. So see what happens. Settles down at 10, but doesn't look like they're done selling this thing yet. And $10, a couple lows here, just under 10, and we'll take it from there. That's real. Like I said, this is from the point of origin, so it won't be like that the second time up, but coming into a support level.
I was on mute there. Really, what I'm looking at, what jumped out to me besides Rocket today was just the follow through on these earnings, right? So I mentioned Inseego, but did you see Zoom? Tell me you saw Zoom today.
I did see Zoom. It gave it back, huh?
It gave all of it back, not just some. It gave more back.
Yeah, just too many people giving my money back. Give me my money back.
Jeez Louise.
Bag holders since middle of December. They got overdone in the look at that. I don't think this had in the regular session, this has had one 15-minute up bar, and it's working on its second. So fluid, man. And what was the open? The open in this
440
was
on the 440 on the nose. I'm making that up.
Yeah, I bet you it's pretty darn close to it. The open was.
Oh wait, it was.
I got 439.60.
Oh, okay.
If you went long off the open and it came back down through 439.60, shame on you, because that was an open and then it lost that open right away. But boy, oh boy, now we're back down. Whew, what a reversal. 2-day close is 73.61. Recent low of the move is after the 71.82. You don't have much down to 56.17. Don't know if we're going to get there today.
And then what was the last one that? Oh yeah, NIO. You see NIO?
Yeah, NIO.
And it's dragging down all of them with it. It's dragging down LI. It's dragging down XPEV. It's dragging them all down.
It just did it here, and I'll bring this up for you folks looking at home. And when Triple D and I agree on something, it's probably a pretty good trade, because it just didn't look perky in the pre-market. Let me go to the 24-hour session to better illustrate this. I mean, we were talking about it in here, and it just looked heavy. Now, it did get a pop off the open. It tried to get it. I was talking about getting in the bottom of yesterday's range. It couldn't do that. Then the wheels came off the wagon. We took out that 43 low. Next low way down, there's a pair of lows at 42. So that's the last bastion of support for this issue. If not, you got some work to do. I believe I never saw another low at 38. So, I mean, they sold what, eight? They doubled their cars. They sold.
Sequentially, year over year was a lot more, but
man, 20,000 cars. Come on, give me a break.
If I could rewind for a second, Not Yoda says he's trying to cast the falling knife in Zoom as we speak. Good luck, Not Yoda. Don't kill yourself doing that, or maybe get stopped out. And also about Zoom's dividend. Zoom doesn't have a dividend, guys. So zero would be the dividend on Zoom. $0.00. Okay. Supposed to have Rob Friesen on from Bread Trading on in a couple of minutes, right, Joel?
Yeah, I told him 3:40, so he should be.
He'll be here momentarily, and correct me if I'm wrong. Is he Dennis's boss?
Besides me, yeah.
Besides you, obviously besides you. That's what I meant.
I mean, Dennis kind of beats to his own drummer.
No kidding.
But he's the president of Bright Trading.
Okay.
If someone needs to give Dennis a talking to, which isn't very often, and that falls on Rob.
It's Rob.
Rob has a tough job.
In the meantime, let's just do a couple of tickers from chat. If you have anything on your radar, drop them in chat. We'll take a look, and then we'll head into the close with Rob Friesen from Bright Trading.
Can I ask you one question? He has some stuff he wants me to bring it up. If I just bring it over my chart, then it will show up, right? Or do I have to share? Or do I have to reshare?
Are you sharing your whole screen? Or
I'm just sharing the chart screen right now.
Then you're going to have to stop the reshare and share whatever screen it's on. That's the answer to that.
Well, I'm going to put it over this.
That won't work. I don't.
That won't work. Okay, that's what I thought.
That won't work. Yeah. Okay. Let's go. Chad's asking. All right. XL fleet.
Do you see Rob yet or not?
I don't see him in here yet.
Okay.
I'll keep an eye out. I'll text him if I don't.
Can he do it on his phone?
She'll be able to. Yeah, she'll be able to.
Oh, XL Fleet. This is SPAC, right?
Not anymore.
Not anymore. It looks like it's turned the corner. $13. You found a buyer there at over a couple sessions. Actually, the low of the move was 13.31, but I think someone was really targeting the whole $14 area, because I see a 14.31 low, 14.20 low, 13.81. So there's some institutional support. You got off the mat here. So don't know how high this is going to go, but you do know where you're wrong on this. So keeping an eye on that actual low of the move and a nice retracement. I mean, you got some air in here. First things first, you need to fill the gap up to 1611, which you already did. So I'll go to the high. Next target for this, 1757. That's your February 22nd high. That's not a real big target here. And if you really think this thing's got some legs, boom, just get back half of this move. I'm sure a lot of people like to see 24 and change, but got some stuck. I mean, because you had this long consolidation. Everyone thought it was a bottom at 20. No, it's not a bottom at 20. Now everyone's thinking it's a bottom at 13.5, 14. We'll see if that's the case, but it's going to struggle when it gets back to 20.
All right, Sebastian's asking about Work. Sebastian, Work is going to trade with Salesforce. So Salesforce has gotten punished since their earnings report last week. It's down. Work is down with it. Work is not going to trade on its own. Work will do whatever Salesforce does. So
yep, and let's see what CRM doing.
Getting punished again.
I got RM. Let me see CRM. I mean, it had a nice bounce off the acquisition. Got it back. Oh, danger, Real Robinson. Holy mackerel. Street leaning the right way into the report. The report is right. This is it. This is where you got to hold, folks. Right here. This low. I'm going to just move this low down here. Just as convenient as can be. Low 212.80 or 212.99 looks like the low. Let's call it 213 for those at home. Big old level. Where did we get to today? Today we got to 1394. So it looks like it's come this far, this fast. It looks like you're going to get a test of that 213 low. He says he's logged in on his cell phone camera. Is that going to work?
Yeah, but I don't see him here. So tell Rob I just emailed him. How about that?
Okay. All right, I'll tell him that.
Yeah, tell him I emailed him. In the meantime, who is this in chat? I want to get your name right. It's so many chats, and I want to say Patricia is watching Chevron right now. CVX. Oh my Lanta, guys! What is this? This is it is back to where it was pre-COVID. It's actually higher. It's actually higher.
It got a little bit higher. We talked about this. We talked about that June high. Just kind of out of nowhere, this thing went to 103.59. You went to 104.96 yesterday. 103.80 is the high today. Really not taking a hit with crude oil yet, but man, who's asking about this? Patricia?
Patricia wants to know.
Patricia, keep an eye on 101.50. Okay, Patricia. Yesterday's low. 101.40. Today's low 101.71. You are $1.50 above that. I just don't like the gap, and I just don't like the candle. He says he can't hear anything.
Well, he's not. Yeah, he's not even in the studio right now. So
okay,
he's wherever he is. He's in the wrong place.
Okay.
I emailed him the correct link.
Okay.
So don't know where Rob is.
Oh, he says some good stuff.
Here, let me make sure. Yeah, I sent him the right link. Well, I'm sure he'll be on in a second. I wouldn't worry about it.
S&P's battling back. We were at 38.76, 77 and change. Back up in the 38.80 handle. Man, this area has been chop suey today. So let's see if we can hold in the 80 handle here going into the close.
Turbo J wants to know, is the market correction here?
It's the market.
Man, you people get scared easily.
I'm just going to reiterate.
Wait, what percent are we off all-time highs? Like 1%?
Yeah, not much.
1% off
he said
the
there was
all-time
nothing. I'm trying to. You sure you put it in the email?
Yep, I emailed his Bright email address.
Okay.
So tell him to check that. But guys, we're like 1% or less off of all-time highs. Give me a break. Call me when we're like 5% off the all-time high. Okay.
Market
until then, no. Okay.
I'll give my market. My broad market thoughts is that I thought this was going to happen. I mean, I dreamed about this on the weekend. We're going to have a higher open on Monday, and then we were going to fade like a dog. And we just kept on going, ripped my face off. Today, I wasn't quite as aggressive on the short side. It did get the follow through today. So I think best thing for the market here is to cool off for Wednesday and Thursday, and then see if we can rally off the jobs.
So Turbojet says here she's got stocks that are down 40%, and that brings up an interesting point. For the last 5 or so years, whatever, the stocks that went up the most were the largest stocks, the FANG stocks, right? But that's not been the case for the past few months. So if you're investing in smaller stocks, in mid caps, in small caps, or even micro caps, or anything that's not a large cap or mega cap, then yeah, your stocks are not going to move the market. They may not move with the rest of the market, and they're going to have no bearing on what the broad-based indices do. So when you say,
I'm sorry, Spencer, what email did you send that to him?
The email, I don't want to say it publicly,
Okay.
but it's his Bright Trading. I have his Bright Trading email address.
Can you?
I'll find another one. You know what? Because he's got like 4 email addresses. That's
I know
why.
He's got a lot. Here, let me.
Here, I got it.
I'll put it into Slack here.
Yep, I got it.
Okay.
All right, I'm gonna email him again. Thanks, Joe.
Okay.
So yeah, when you're trading a lower price stock, it won't have any bearing on the overall market. So I'm sorry that you have stocks that are
off 40%.
40%. I hope that at the very least it's teaching you a lesson about stops and about how much risk you can and cannot take. But yeah. So okay, let's go to
stick with your original plan on that. That's what I would say. Whatever your original plan with, stick with it.
All right. Someone asked about Ford. I always forget that I'm long Ford. I really do.
Yeah, because it doesn't move.
I seriously forget that I'm long Ford.
Let me just type this into you to make sure, because Rob had some good stuff.
I got it, Joel. I got it.
Okay. Fords. Let's take a look at Ford. I would say a little bit of a down day of the market. If it's big old day. Holy mackerel. Man, this busted out. Look at that, 1262. That's a clean breakout. And what did I do? I told you when it came back down to 12, that's when I was going to re-enter my long. And I did it. And look at this. Busting out. Maybe start thinking, is it too early to start thinking about $13 here? Great move. Is there news on Ford today?
Oh, good question. Good question, Joel.
Yeah. No news, huh? Just getting some Detroit love. We are going to remove this line since it's really no longer relevant. We'll find out the move tomorrow, maybe. I think we got to go a little bit longer term here. Let's go to the monthlies to see if we can find some monthly resistance. And where was this monthly high? That's quite a bit above there. Oh, no, that was, boom. What is this high? Going back to January 2013, 35. I mean, why not? It's come this far, this fast. Big day for it. Maybe because they're selling off the other autos, the electrical, the EVs. Maybe shift back into the traditional automakers. How's GM doing today? See how GM is doing. Is it benefiting from the other ones selling off? Yep. GM, buy America. Buy non-electric or EVs.
That's what Buffett said. Buy America.
Exactly. Don't fade America. And this is in a bad tape. These stocks are showing some excellent relative strength. They've just been GM has been perky more as of late. Ford has been mounting a rally. Overall, a relative performance on Ford has been horrible.
Looking ahead to the earnings slate, guys, we are in the thick of the retail earnings season. Fubo reports tonight. FUBO, Fubo TV. I am going to, I shouldn't say this because I haven't confirmed it 100%, but I'm 98% sure that we'll have the CEO of Fubo on pre-market prep on Friday.
Right.
Let's mute Joel there. Yeah, let's mute Joel. So I'm 98%. Joel, I muted you. Are you?
The 50% retracement is holding right in that area. Good pop, just over 45. I see some highs. On the downside, man, it's kind of thin on the downside. Your 2-day low, wow, your 1-day low is 39.33. Your 2-day low is down at 36.26.
All right, like I was saying, 98% sure we're gonna have the CEO of Fubo on pre-market prep Friday at 9. I will let you all know when that's confirmed. Also tonight, Nordstrom is kind of the big one. Nordstrom and Big Five.
Rob says he's in. Can you see him?
What is he? No, I don't see him at all. I don't know how that's possible. This is the first time this has happened where oh wait a minute, someone just hopped in and then hopped out. This is the first where the guest says they're in and they're not. Let me see if I could track him down at a different location.
Because we did the switcheroo. Mitch did the switch, because we're running on 2 streams.
Let me see if he's in this stream. And okay, so anyway, while I do that, Fubo,
yeah,
Nordstrom, Big Five, Urban Outfitters, and that's Viva. That's pretty much it. So not much. And then tomorrow morning, Dollar Tree, and
that's a mover.
I don't know. Not much tomorrow morning, guys. I'm sorry. That's it. The big ones are going to be later Wednesday afternoon and Thursday. We got Costco on Thursday. We got Smile Direct Club. We've got Splunk. We got Snowflake. We got BJ's.
Ooh, Dollar Tree's sold off here. Street leaning bearish into the report. Costco had lobster tails that were like $1.50.
Yeah, I spent $250 at Costco over the weekend.
I beat you.
Ridiculous.
370. Those lobster tails definitely tacked it on there.
Dan P's got it right. Oh, that's not the one. He just said you should buy the hot dogs. You get out there for $1.50. That's what he's
yeah. Oh yeah, and the pizza slices for $1. S&P's tailing off here into the close. Man, I really wanted to get
all right.
Rob.
We got Rob. He's in the process. I see his avatar. Looks like his camera's off. But let's see if we can get his mic on.
Can
Rob,
you hear me?
We hear you.
Well, how come it's not working? I was logged in on the cell phone there for a long time.
I don't know. I know that StreamYard is. I've heard it has problems with mobile, but we've had some successes in the past. I don't know why it wasn't working for you. I'm sorry about that.
Oh, no worries. Okay, that's why I don't have a camera available, but I can rattle off this stuff here. You don't need to see me.
Yeah, okay. All right. Let me share the screen here.
Let's go full
you
screen
can
on
illustrate what you're talking about, Rob.
This is CCI, right?
Yeah.
Oh, you can see it?
Oh, yeah, I just could. Yeah. There we go. Joel, leave it, Joel.
Okay.
Just wanted to give you guys an example of how people often either buy something that's discounted or short something that's gone up a lot, but they're not taking into account what really happens next. And so through our database, we constantly mine information so that we're more informed. And so in this case here, even though CCI has gone down so much, it's gone down, this is now the 7th day in a row. The odds of it being an up day tomorrow for this particular stock is actually, 50-50. So what would be better is if you can scroll down a little bit there.
Can you explain what the CCI is?
It's just CCI is the stock Crown, whatever.
Crown Castle.
CCI here. Let's see.
Channel.
It's Crown.
We're not talking about an indicator. We're talking about Crown Castle National. It's NYSE traded stock. It's
sorry.
a REIT, right?
Okay. Go ahead.
So we're not talking about an indicator. We're talking about the actual stock has fallen for 6 days in a row. Now 7. Today is 7. So I'm looking at, okay, what if I search for this stock and see what it's done afterwards, the next day, open to close, it doesn't look too attractive for me. So even though it's at a discount, even though it's gone down so much, not quite interested. So what about if it goes down again another day? Scroll down to that one. So after 8 days in a row, wow, this is much better. We have positive odds, 66.7% chance of being up, open to close. And if that was to come to the corresponding area of support, if you go back to the chart, scroll back up to the chart there. Yeah, I mean, look at that support level. It would be great to have another down day in a row, kind of line up with that, with the expectation of an open to close being positive. That would be a trade that I would find attractive.
Okay. All right.
So let's look at a different angle. What if you wanted to do a pair trade? Let's say you're looking at Petrobras and Vale against maybe the Brazilian ETF, which is EW Zebra. What if you were doing that? You could look today at overnight returns. So you could see how the stocks are performing going into the close. And I can tell you right now that Vale is much higher in terms of overnight returns and the next day open to close returns than would be
what's the symbol
PBR.
on that one, Rob?
So VALE.
Okay, that's right. Okay.
So if you wanted to pair this with the Brazilian ETF EW Zebra, putting it on gives you a positive expectation for an overnight return and an open to close performance the following day as well. So if I had a choice, I go, okay, I've got PBR here, I've got EW Zebra, and I've got Vale. What should I do? I would construct a pair trade with going long VALE and going short EW Zebra. Again, that gives you not only a hedged position, but it also gives you a positive expectation for the trade.
Okay. All right.
Things like that we like to work off numbers, not just charts, not just opinions, not just news, but we like to look at it from a probability basis.
Hey, Rob, are you still active on Twitter or no?
Me, I've never really been on Twitter
because I noticed your pair trading is such a part of your personality that you made your handle as Pairco. Is that right?
Yeah, we used to have a company called Pairco.
Okay.
My handle's still Pair Trader on Skype and everything else. But
that's how much pairs are a part of your being. They're a part of a fiber of your being.
Well, the thing with pairs is that when you're looking at a long career and you want to be insulated from the market events that can happen. I mean, certainly we're in a really bullish phase of the market these days, and so people don't often think about hedging, or they don't think about the risk of a rare event occurring. They just think of the bull side right now. But if you want a long career, you want to preserve capital and you want to be adequately compensated for the risk that you're taking, right? So within pairs, it's not only scalable, but you can also do things like trade around core position. I'm going to be talking about that in the webinar that I'm doing tomorrow after the market. If anyone wants to join in, maybe you can post that
sure.
that link. But
we have a link.
We're going to talk about scale trading and trading around a core position and how to really get production. Hey, it's all great if you got some capital and you can afford to sit on it and you're just looking for that return on investment. But what if you're looking at earning money along the way while you're waiting? One of the things we've heard about before, and we like to do, is collect some dividends while you're in a position and you're waiting for it to do something. Same thing could be said to earning money from scale trading and trading around a core position. Now, here's the tension. Here's always the tension, guys. And you guys have probably talked about it on some of these rocket ships to the moon type of thing, is that what is the regret that people experience? Okay, say you miss a trade that you were looking at, that you wanted to be in, and you miss it completely. You have a certain amount of regret, right? What if you sell your whole position and it keeps going? That's another degree of regret, right? What if you sell some of it and keep some of it and it goes back down? How much regret do you have that you're still holding some of the position that you could have sold at a much better price? So these are the things that you deal with all the time. And what I found is that trading around core positions, especially in the area of pairs and things like that, you can do your research. It certainly can pay off for you if you do. But by trading around that core position, you have some always working in the market. And if it really rock and rolls for you, you can do well. And if it stays stagnant and you're just trading the noise, you can earn money. And so
A lot
if
of
you're
noise in the
only
markets, Rob. A lot of noise in the markets. And
if you're a long only trader, this tension between I don't want to sell out of it all because then I might miss something. Well, is there a happy medium there? Is there something that we can construct, a framework that we can use, data that we can rely on that can help us with maximizing the earnings part of the business, not just the winnings part of the business?
All right, Rob Friesen of Stock Odds and Bright Trading coming here and sharing a little wisdom. Sorry about the late start, Rob. Maybe we will get you on again tomorrow. And I know you had a couple other lessons that you want to share, so let's maybe do this tomorrow. Log in a little bit earlier, same time, same place, and we'll get it done. So I'm just going to give a quick wrap of the S&Ps here, folks, and that's not the close that you wanted to see. We just took out the pre-market low, maybe had some sellers on the close. I didn't catch the imbalances. 65.5. We made the new low, and we're trying to bounce back. So my scenario from yesterday came true today. They did sell the pop. It just was one hell of a rally in between. So keeping an eye on that low tonight, 65.5. It looks like we're going to press that. Have to figure out some intermediate numbers on the upside. Spencer, who's our guest tomorrow?
The cow guy, Scott Lady, Scotch Lady, cow guy on pre-market prep tomorrow, 8:35.
Did anyone trade this? Joseph, you are holding it. Okay, Tim, you said yes, hold and day trade. So can you break down then
welcome to happy hour. Benzinga happy hour has started. Here we have Ryan.
Are you still holding your entire investment
smash
position?
that like button. Let's keep it going.
If you took a short-term trade that you knew was going to be a short-term trade, tell me about it. What were you looking for? What were you in and out at? What indicators did you use? What did you use to actually take that trade? Pardon me here. Today is a new phone day, so I'm trying to keep myself in line here and not play with my new phone and go to set it up, because that's what I really want to do. In any case, Tim, okay, got pre-market at 27.5-ish, sold at 32.42 and held what I was holding previously. Okay, Tim, so it looks like then that you're trading around your core position, a position that you hope to hold for a longer period of time for the sake of a trade or even an investment. I do this all the time. Perhaps I do this the most with Apple. That is a core position that I've had for a number of years, that I trade options around my actual core position. So good job doing that. That's one of my favorite ways to actually trade. I really think that helps you develop a feel for each individual stock, and then also give yourself an opportunity to capture some of the volatility when the stock's moving up and down when you're actually trading around your investment. So awesome idea doing that. Let's take a look. You bought at 27.50, so you got a pretty good price here at the open. Looks like it really after it made its first move up in the pre-market, you were able to get it. What caused you to exit, right? So it looks like your 2750 held when we got this first kind of corrective move after the open. It looks like it held through for the most part throughout the rest of the day, and then it really started to take off here. You said your exit was at 32 and 42. So it looks like 32 here. This was just, let me see if there's anything on the daily chart that sticks out here. Yeah, so you looked like you were right about at the top. You might have been considering this a blow-off candle, so you just wanted to make sure that you got out in here. And then 42 was the other position. That's just 10 points higher. I mean, at that point, that's a new all-time high. I think you're just probably booking gains at that point just to make sure you don't give them back. Looks like we top ticked 42.16 before trading back down. I'm wondering, did you get out on this first spike or did you get out on the 42 reclaim that we had shortly after?
Got out on the second spike.
Okay. And so let me ask you then, when it hit 42 and this kind of pulls back in and you see it grinding back up, does that play into your calculus at all? Are you thinking, well, I just saw 42. As soon as it hit it, it pulled back. That might be resistance. If it hits 42 again, I'm going to liquidate. How did you end up playing that?
Yeah, I figured, the first one at 32, I got it because it was flattening there after the open. So that flattening there, I got out there for half of it out that I bought in this morning. And then
gotcha.
When I just let it ride because I was already up, I didn't care. It's kind
Right.
of free money at that point. So, and I saw it hit 42. That looked to me like a profit-taking sell-off on the 42, the first 42. And so and I also was watching the shorts like crazy today, where the shorts are at for my broker. So I saw the shorts have been dried up all day. There were some this morning, but there's been none really all day long. So I just waited for it to go back up. I go, another $10 profit, I'll take 10. So usually stocks run in 10s, it seems like for me.
Your broker is reporting you short interest?
Well, internal short interest, what's available to borrow from them.
Gotcha. I gotcha. So you were, okay. So sometimes that's referred to as locates, right? So you're actually looking for shares to short. So you were judging your decision based off of how many shares were available for you to short. Is that correct?
Yeah, this morning there was, I don't know, 44K or 45K within my broker. And shortly after that first pop, there was zero pretty much all day long. It has been. Every now and then a couple K will pop up, it'll disappear as soon as they pop up.
Okay,
so
awesome.
I'm going short squeeze coming.
So that's really interesting color. That's really awesome. Thank you very much for sharing that with us. Using your broker to determine how many shares are actually available to short and using that as a data point. That's actually not something that I've done, but it looks like that worked out for you today. So congratulations on your trade today. That's a great one. I'm assuming you're still holding your investment position.
Yep.
Your core.
And I was only watching the shorts on that today because there's like a 40% short interest in it anyway. So
right. And so I think that's where we're actually getting this from, right? We have a high short interest in this name. As soon as volume starts to pour in, the price starts to really kind of go off. So I think that's where you're getting this potential short squeeze. I want to be very, very careful and mention that this probably is not going to behave like GameStop. So just because you're seeing the term short squeeze doesn't mean that this stock is going to be 170 tomorrow and then 420.69 or whatever several days later. So I mean, with that stock was just absolutely crazy. I don't think we're going to get a repeat performance of that. But awesome today. I do again. Just from a more like higher level, I do actually really like this stock. I like what they've done with the mortgage process. I would use them again if I went to go get another mortgage because they won me over with their business. So they also gave me a really.
How did they? I was gonna say, how did they win you over? What was it about it that you liked?
It was just how everything was easy. So I had done my first mortgage with a different company. I'm not going to give their name. And then I did my refinance with Rocket Mortgage. And I mean, my refinance, like it couldn't have been easier. There were people on the phone that would call me, answer any questions that I had. I never really had to wait for anything. They helped me find documents. They turned things around easy. Their website was easy to use. All of the forms that you had to fill out, sign, and initial were easy. They didn't take time. They had someone actually meet me at my place. This was in the middle of coronavirus, all right? They had someone meet me at my place outside. I basically had an iPad that I had to check some certain. I mean, just the entire process was so easy and so non-stressful that when I compare that to my initial process of actually taking out the mortgage, there's just no way. The memory is crystallized for me. There's just no way I would go back to that initial company. I would at minimum give Rocket Mortgage another chance to give me the same level of service that they gave me the first time. And then on top of that, the interest rate was awesome. I know a lot of that they can't really control because it's based off of the prime rate and all that. So
I don't want to monopolize more on Rocket. I came in a couple minutes late. I just happen to have been holding it for like a month and a half. Does anyone want to hear my ideas on it?
Yeah, definitely.
So
today's a Rocket day. Let's hear them.
Okay, so this is where you kind of get lucky after waiting a month and a half, right? But saw the CEO CNBC month and a half ago. These guys have been in it for a long time. I haven't been a believer necessarily in Rocket, but after listening to them, I'm like, shit, these guys have been doing this for 30 years, right?
Yep.
Between the both of them, 70 years. So the fact that they, control whatever 95% of the companies still, that says a lot. So I bought it at 25. It dropped immediately in the 30 minutes after down to 20, and it's been there for a month and a half.
So that one more time, you bought it at what?
I bought it at 25 a month and a half ago. I do what I rarely do, which is to buy it while the CEO's on air talking, right?
Gotcha.
The golden rule is to not to do that. So, but I did, right? I'm like, whatever, I'll just put it away, right?
Yep.
So I put it away. It dropped immediately, though. Like it dropped immediately within the 30 minutes, like $5.
Yep.
And it has stayed there for a month and a half, right? I'm like, whatever, I'm holding this thing, right? I think it's going to do something because of the platform that they built, right?
Mm-hmm.
Not because of mortgages, but because of the platform. It's a fintech company now. So, so here we are a month and a half, and I'm like, why is there such large short interest on this? Over the last month and a half, I've been thinking this. Why the short interest? I must be missing something, so I didn't buy more. So they announced earnings. Did anyone hear what their earnings were?
Their earnings were great, right? So here
they were beyond great. They did $1 billion earnings last year. They did $9 billion with a B this year. Earnings. Not revenue, earnings.
Earnings,
$9 billion, right? So I'm like, what am I missing? So I still didn't buy more because I thought I must be missing something with the large short interest. So obviously, it started moving out with, people finally figuring out that, okay, it's a decent platform, blah, blah, blah. And so, of course, today was the squeeze on it. I actually, when it pulled back from what I caught when I came on was, it went up to 41, 42, something like that. Sounds like someone got in for a day trade and sold out at that point, which is awesome.
Yep.
So, take your gains. You're not going to lose money doing that, right? So, but when it pulled back to 36, I just bought some leaps, some, January 22s, some 35s, right? For $12.50. Combined $12.50 for just 10 contracts, so another 1,000 shares. So I actually kind of doubled up at that point, just for a different way to do it, right?
Mm-hmm.
And I am playing it for to see if we get that one. I also don't think it's going to be a game stop. I don't think we're ever going to see that exact action again. But I do think it potentially could have one more day of what it did today in it, just because of follow-on short squeeze. So I'm kind of playing my options for that, and I'll probably hang on to my initial 1,000 shares for kind of a longer-term play.
Okay, so I like again, I like a lot of what you're doing there. You've got multiple ways of exposure to this name, and then you have different time horizons for those different vehicles, right? So you're going to hold your shares for a little bit longer, and you're going to try to play some of this volatility using the options. I think that's really smart. I think that that's really prudent. And I think that if you compare this to some of the other short squeezes that we've seen, even if Rocket doesn't behave like GameStop and AMC did, the fact is that this squeeze process could last multiple sessions. So if you have options like that, it's maybe scaling out of those options, depending on how the stock actually trades, is going to give you an opportunity there. So I do think, this is a huge move today. So I think that a large part of the move is actually in. Now, I said that about GameStop when it was at 100 and it went to 400.
Right.
So,
well, you know what? I think that there might be another move, and just really quick, just to tell you why. The Rocket is doing a several $billion buyback program.
$1 billion.
Yeah.
5 billion?
No,
Yeah,
$1 billion.
1 billion.
Yeah,
1 billion. Okay, and we don't know when they actually are going to start, buying back those shares. So if they time it right, this could be a really good opportunity.
Yeah, and there's been other talk about that too. They actually, years ago, they talked about Apple doing the same thing in terms of timing a buyback. There was a lot of negative sentiment about one of the iPhone cycles, yada, yada, yada. Here's what I'll say about that. In my experience, and I could be completely wrong, but I don't think so. In my experience, companies don't necessarily try to time buybacks in order to initiate short squeezes. Companies are going to be way more concerned with the long term. They don't, when we see, as traders, when we see a candle like this, like we're seeing today, we're like, oh, hell yeah, I want a piece of that action. That's what traders do. Companies are trying to run a successful company over the long term. So something like the price of the stock, especially if it's moving around because of shorts, a short position or a bunch of short interest, I really doubt that the company is actually trying to time that. Now, with that being said, those two things could align and could piggyback off of one another. So your point is well taken. If there is a huge short interest and everything seems to be going well there, you could see kind of a violent move like we saw today.
So just one last thing.
Yep.
That if you're interested, if anyone's interested, several people did some good DD on Wall Street bets.
Yep.
And I've been on Reddit way before all this current stuff. So there's some good stuff, lots of whatever it is, usually it's funny.
Yeah, no, I'm with you.
But there is some good DD on this squeeze. Super interesting in that along with the $1 billion buyback was the special dividend of $1.11. And what I didn't think of or didn't realize that somebody else pointed out on their DD on Wall Street Bets was, if you are short the shares, you are then responsible to pay the $1.11 special dividend. So
Okay.
the shorts by March the 9th is the ex-div date. So if you're short the shares March 9th, you then have to pay the $1.11.
Okay. I've not heard of a dividend working like that, but I could be totally off there. So that's very interesting.
So that's what makes it interesting. That's kind of why I doubled up. I read that and I'm like, I'll buy some options on this. Your point's well taken on the buyback, though. I don't, if that was Sebastian, is that helps to set a floor where I think the floor is probably going to be set at I think definitely at 20 since they declared the buyback there. So your floor is kind of at 20 on it, probably 25, maybe 30. So that's why, to me, it's a good long-term hold if you believe in the platform that they've built.
Yeah, and that's kind of where I'm coming from on this. I do actually believe in the company and the platform.
Right.
And the other thing about those buybacks is, it's not like they release the Kraken, right? It's not like they're like, oh, here's $1 billion, go get me as many shares as possible. They'll stagger those buys, and a lot of the times they'll actually do it on days where the stock is weak, so they
on the pullbacks.
Yeah. So that's definitely something to keep in mind. But all of these factors play in, right? And these things can add up. This can be quite good for a potential play. Just going back here, Brad said I FOMO'd in RKT at 32. So I'm guessing here that you bought in at 32 because you saw it moving and it was a pretty aggressive move. and then you sold at 37. So you captured $5 of profit on that trade intraday. Pretty good. I saw it on Wall Street Bets this morning, and I wanted to ride the hype. Don't know enough to hold it long term. Okay, so we just had several theses talked about in terms of more longer term holds. Maybe you can take something away from that. However, great job executing that day trade today. 5 points on your day trade. That's really awesome. That's something to be proud of. So congratulations on that, Brad. Congratulations to everyone that played RKT today. This was definitely a huge mover and made for quite an interesting afternoon, right? We didn't have this crazy action in the morning. We actually didn't have this till after lunch. So that's really cool. And Brad also throwing out thanks to the BZ Pro chat. I'm really glad that you did that, Brad, because I'm a huge proponent of our community and our chat. That's one of the reasons I like doing these happy hours so much. The chat is obviously a little bit different, but the same type of thing. So I'm really glad that our community was able to help you out. That's exactly what it's there for. Thank you very much for the success story. Brian, you were throwing me some tickers from YouTube. So someone had mentioned Airbnb offering. Right now, we talked about Airbnb yesterday, right? We were doing some charting on this. We said we're beneath this trend. We definitely wanted to reach above this trend. We were unable to do that today. You're talking about an offerings. Let's click on the news here. Looks like we had a $2 billion proposed convertible senior notes offering. So if you want to investigate more about this, I would look into what a senior note offering is. Andy Gold, are you out there by chance?
Yeah, I'm here.
Can you give us a very brief primer on a senior notes offering?
Depends whether is it a convert note or is it just a regular note?
Yeah, this is a convertible senior notes offering, $2 billion proposed convertible senior notes offering.
At what price does it say?
Let's see. No, it just says that the $2 billion, it doesn't actually give a price in here. I'm trying to skim the PR.
It's due 2026.
Okay, so it's due.
What's the convertible in equity at what price? What price point? You know, that's I haven't gone through it, but
yeah, no, neither have I. I'm trying to do it here. Either repurchased, redeemed, or converted note holder will have right to it. It doesn't actually give a price.
Well, it'll probably be at some sort of discount to the market whenever they price it.
Yep.
There'll be like a 10 to
15%
15% discount to the market the day they price it. So, you know, it's like anything. It depends what the market does. You know, people always ask me, why does the stock go up? Why does the stock go down? More buyers than sellers. It's as simple as that. You know, it's like you guys are talking about Rocket, and you know, Rocket at least had good fundamental earnings behind it. So
yep.
And I agree that dollar dividend definitely played a factor in that, because you're right. If you're short a stock and pays a dividend, you're on the hook for that dividend. So Dave is right. Dave Anderson is right about that. So
yep, Dave, that's actually that. Can you explain that a little bit more? Is that only a special dividend, or is that any dividend, or?
No, it's like anything. You owe the dividend. You know, if you're short a stock that pays a dividend, you're owing it. You know.
And so if you hold a stock short, how does that actually take place in your broker? Because that's not something that I have any experience with.
They'll hit you up for the dividend, whatever it is. You'll be paying. It'll come out of your account automatically.
Okay, so that would be quite a surprise to wake up to.
If I would have known that, I would have probably been on that trade. I was a good, you know, I wasn't following Rocket per se, but
yeah,
I think that was part of the catalyst, to be honest with you. So
yeah, no, I think that you're absolutely right, and I think that might be why we're actually getting to. That's why we're squeezing. So. Let's assume that that's the case. Let's carry this forward real quick. Let's assume that that's the case. Can we expect to see this type of squeeze mechanic continue until that ex-div date, or do you think that this is going to kind of lose its
that's probably happened. You know, it's probably somewhat in the sauce at this point, but you know.
Okay, so it's priced in then at this point.
I mean, it's hard to know. I mean, anytime a stock has this kind of move, you know, exclusive of, and especially the way the market's trading right now, you're probably going to see a little bit of give back on this stock at some point, just because. I mean, look at the liquidity in the market; it's just completely dried up in certain areas. I mean, look at the SPAC market; it's awful right now. every SPAC went back to its almost basically to its IPO price. So, which makes all the sense in the world to me. Too many SPACs.
Yeah,
like,
no, that and you know what? Credit to you. You've actually been saying that for a few weeks now.
Yeah, my opinion is the market would get tough right around. Typically in a banner year like 2021, the market gets really tough between February 15th to the end of March because people kind of like, and they're, people have to pay taxes, and you got to figure out what your liability is. And I don't even think half the people understand what watch sale rules are. And I'm assuming most people here aren't mark-to-market traders like myself, but people owe money for 2020. I'm assuming most people had a great year 2020. So, by April 15th, you're supposed to make a payment. Even if you file for an extension, you still got to pay the tax.
Yep.
So that's going to create a lot of people go, well, I owe 25,000 in taxes. Well, I better sell some of my winners. Blah blah blah. And then you get this new stimulus money that comes in, so maybe that'll offset some of it. But it's not going to be devastating. It just, the markets, as you noticed today, yesterday was the first day of the month, so you had money inflows, like I've been saying. So you had all that money flowing into tech stocks the first day of every month, February 1st, March 1st. If you look, it followed to a T. And now it's resumed back to the scenario where we're getting closer to tax time. So this is historically a tough period of the market, and I don't expect anything different. I don't expect it to fall off a cliff, but I definitely expect some tough. Did you watch gold today? Gold had a nice bounce. Be curious to see if that has any legs going forward. All the gold stocks. If it's just a one-day wonder, if it's just is there now is that a safety trade? Because gold's been miserable lately.
And so not to put you on the spot, but kind of to put you on the spot, where do you think we go here from? Where do you think we go next at the end of March? Or do you not have enough data to make that call?
It's hard to say. I think we kind of consolidate. The VIX is at 24. I mean, I don't see the VIX going to 40, but I think the VIX is going to be. I always watch the VIX for direction of the market. So the VIX is 24. It could go to 26 to 28. I don't think it's going to go back to 18 or 19 or 20. So, it could consolidate. I think the CCIV deal really hurt the SPAC market. So
yeah,
a lot of retail people are realizing how much they can get screwed with these deals. So, it's a liquidity. There wasn't a lot of bids today other than stuff like Rocket. Was very few actual, guys bidding for stock. Media companies were strong. But generally speaking, there wasn't a lot of bids today. I don't know if you guys noticed that.
I did pretty much every stock that I had was bidless except for the battery play TPGY that I watched. And,
right.
and then to be quite honest with you, that actually moved up today on low volume. That was after a monster move yesterday. So, I mean, that could be something completely unrelated to what we were talking about. But some of the other stocks, the volume was quite low.
Volume
was quite low.
The bids disappear pretty fast.
Yep.
Bitcoin looks really extended to me. All the Bitcoin plays like Mara, they look dangerous. I don't really follow Bitcoin per se, but those type of names look really susceptible to, trying to buying the bottoms and those don't bounce and they get halved again. Those are really dangerous stocks.
Yeah, and we've talked about that a number of times on the show. I'm not a huge fan of the Bitcoin related stocks. I would rather just hold the coins
as far away as those as you can. So
yeah, I mean, a lot of our chat community uses those as day trading vehicles, and they do quite well with them. It's just never been my cup of tea. And
well, there's going to be a day when they do that, and they're going to buy them, and they're going to just drop $5, $7, $8, $10, and next page be down $5, $7, $6, $8. It's a terrible discipline. So historically, the key in trading is discipline. So you got to be disciplined. And when something starts catching on a falling knife, it's not my game. So
yeah, no, not mine either. I generally wait for a reversal after the knife is falling. I guess to carry that analogy on, I wait for that knife to bounce off of the pavement before I try to catch it, instead of trying to catch it on the way down. So real quickly, let me just close out the conversation here on Airbnb. It looks like there was a convertible senior note offering. We don't seem to have a price listed for it. We probably have to do some more digging in order to figure that out. But again, just kind of carrying my thought from yesterday, I want to wait until there's a clear uptrend here. I'm not sure that I necessarily see it. It's nice that we're making higher lows here in these recent days, but again, we just kind of broke down. We were just having a discussion about things looking toppy just in general. So I wouldn't be rushing to take a new long position here. I'd actually wait to see how the market digests that news of the offering. Good question though, and I'm glad that you guys brought that up. Looks like we have Fubo earnings day. Andy, did you ever trade Fubo? I feel like we talked about this, didn't we?
Well, one of my biggest positions continues to be Chicken Soup, which is in the same space.
Right.
SSE. So Fubo's just buying revenue. So their revenue looks good, and it's just it's a big Zach Mars stock. It's a big momentum name. I think it's super expensive for what it is. Relative to some of the other AVODs that I like. It doesn't mean I would definitely not be short the stock. But they're really basically buying revenue. So, it's like in the old days in the internet stocks, they used to buy revenue. They go, okay, we can do 500 million in revenue, but we're buying it for 600 million. So, be curious and how much money they continue to lose by buying revenue. It's like their EBITDA is still a loss of, 43.5 million. I mean, to me, that doesn't excite me. I don't like the business model, but it doesn't mean it doesn't go higher. And I definitely wouldn't be short it because I love the AVOD space. And I think, you got Laura Martin behind it. You have a lot of the big traditional media guys behind it. But to me, they're just buying revenue. I mean, I'd rather own something,
Yeah. So just to recap, they missed on EPS, beat on revenue, and then guided higher.
Yeah, they're just buying revenue. It's like any company can do that. I mean, you just buy, you buy revenue. You buy media libraries. You just keep buying content. So,
and then the question will be, how well do they actually execute throughout the rest of the year? Then,
I mean, what's the market cap in this thing? $6-7 billion. It's like. Crazy. I think it is. It's got a crazy market, I mean, I've been in Chicken Soup from sevens. It's got a 300 million market cap and it's EBITDA positive, and it's got probably more subscribers than these guys do, more followers. So, and more content, but it's not, it's just a different business model. If you're going to buy content, it's going to cost you a lot of money. Maybe one day it works. What is it? 5 billion cap?
4.599 billion.
Yeah, losing $43 million a quarter in EBITDA. What is that worth? To me, it's like, I don't know. It's like, I'm a valuation guy. So it doesn't mean it can't be 100. To me, it shouldn't be 43. So it could be 143.
Gotcha.
So I'm from a valuation standpoint, it doesn't matter. I mean,
using Fubo as an example, what would you need? What would Andy actually need to change your thesis on Fubo? Do you need to see better earnings? Do you need to see multiple earnings reports after another?
I need to see them at least start turning the corner as far as when they're going to be EBITDA positive. Like when I was buying Chicken Soup in the sevens. They're EBITDA positive and growing, and they're not, their model is, I like their business model way better. I like the CEO way better, what he's trying to do. So that's why that's why I was in it in the sevens and eights, and I think the stock still can go to 100, but, I'm not telling people to buy it at 20, 27? I bought it at 7, but I think it'd be 100 relative to this stock. If you compare them up, I'd much rather own an AVOD that's cash flowing, that's EBITDA positive.
Sure.
So
sure. Brian is also mentioning that sports betting is now live on Fubo. It's not as big as the Barstool Sportsbook, though. Does that change the calculus at all?
Everybody can do, Chicken Soup's going to do sports. Any AVODs could do sports betting. you're already in front of eyeballs. You're already
Right.
on every TV device. So what's the barriers to entry for sports betting? There is none. So it's just you got to get in front of eyeballs. So,
but do you think that they could? But do you think that they could like do sports betting a little bit, more efficiently because people are
because
watching
they have the content right. Yeah, they already have.
Yeah, it's right there.
It's right there, so I don't have a problem with that part of it. But any of the AVODs could do the same thing. They can all pay up for football games. They can all pay up for the same thing. So I think the whole sports betting scenario is it's eventually going to be a commodity industry. It's a land grab right now. So obviously DraftKings and it's a land grab. Everybody's going to do it. Anyone and everyone. Amazon will do it at some point.
So this is a little old school, but it's been on a tear. I'm not in it. I've been waiting, hoping for a little pullback, but keeps going, and it went again today, which is Viacom.
Yeah.
So their Paramount launch apparently is going pretty well. If the younger guys aren't aware of Paramount, I mean, they have a shitload of content.
Yeah.
And when I say shitload, I mean they own the content. They're Paramount Studios, they're Nickelodeon.
It was the single best buy when the market collapsed. It was my biggest position for when it was in the 14, 15s. It was my single biggest position.
So did you dump it?
I dumped it way too early, much like Penn Group.
And so I'm looking at getting in at these levels because it could potentially, if you have seen, which you probably have, see what Disney's done, and the new CEO was on today. I didn't watch him, but he was saying that they've been surprised at the uptake by the older audience. Where typically with Disney, the kids drive it, right?
Right.
Park your kid in front of it, and they watch the same thing 100 times. But I think that Viacom's got the potential. They also, have been doing NFL for decades now. They may drop it, depends on how expensive that gets. But anyway, some, from a value but over the top play, if anyone's interested, that's a potential look.
No, it was the best buy, and it went down to 11, and I started.
What's the ticker?
Well, VIAC. Congrats on that. I should have, but shoulda, coulda, woulda.
That was the buy when to me that was the buy of all buys when the market collapsed, because if that would have gone out to nothing, then it would have been caveman and stones. So
yeah,
there's certain stocks like. It wouldn't have mattered. It wouldn't have mattered whether you own any. In March, some of these stocks where they were, if they would have gone to zero, it wouldn't have. Only the banks would have gone to zero. So it didn't matter. So you were like picking these. Look at Penn Group. That was I owned that at almost $4.75.
There was too much to buy and not enough money.
Yeah, at that point in that March time frame, and I was just like licking my chops. That was a once in a lifetime opportunity.
I know.
Well, okay. If we get another sell-off, I'm really hoping that we can elevate these happy hour sessions to the next levels, because you guys are smiling and talking about, setups of a lifetime and licking your chops and best buys and all of that. And that's great. The next time that this sells off, let's have those conversations here. Having your shopping list ready. I mean, how many times have you heard that? Coming up with a quality shopping list of stocks that you actually want to own and hold for the long term. That's where the community can really, really be important. Let's do that, because I'm sure we're going to see another sell-off. Maybe not just like this, but another sell-off is coming.
Oh, for sure you will. And it'll be started, for sure, 100%. It's just a question of like what themes you want to buy, what can turn around the quickest, who has the best balance sheet, who's got, who needs to raise money, who doesn't. Everybody's raised money now, so you're probably unlikely to see as big of a sell-off as you saw in March. But you're going to see, I've been through many markets since, the late 80s. So you're going to see some of this other stuff happen.
Here's gonna be the sell-off. Here's when to get into Bitcoin. As soon as the first government announces that they are definitively going to regulate Bitcoin, that's when you can buy Bitcoin 2 days later, because it will go.
So
like
wait
a
for the
rock.
puke. Wait for the puke.
As soon as one government announces, that's just then the start of it to tank.
There's just hard for them to be able. I mean, it's built to be impossible to do that.
Right. That's why you still are going to buy it, but as soon as they announce, then it's going to drop, because everybody who doesn't understand that the way the blockchain works will, panic and dump.
Oh yeah.
But then that's when you go buy Bitcoin when it goes back to 20.
All right, guys, you heard that here first. I appreciate it, David. We're giving out potential trading ideas here on Happy Hour. That is absolutely awesome.
So one thing, I definitely, I'm a new guy here, so but I would,
That's
if you guys
okay.
are interested, I'd like to do a session if you guys are interested in talking about the EV charging space, just because you did mention TBGY. So I've got my short list on that, but ChargePoint tanked yesterday. I don't know why. I wasn't in it, and I'm not sure if that was that the SBE SPAC that was ChargePoint. But anyway, I have a
Andy would probably know better than I would.
Yeah, probably. See, the problem with a lot of
CHPT. I believe this was
So there, there's like 3 to 5 of them, right? And
Blink.
And yeah, that's maybe one.
Sniper's one too, isn't it? SNPR.
So this is the thing. If you guys are interested in doing a session just on these, where you look at them, I mean, they're not, to me, they're not the day trading type stuff, but it's the infrastructure, it's the picks and shovels. And somebody was just on today talking about Volvo. I mean, every car company is announcing that they're going to be 50 to 100% electric by 30 to 35, right? And that sounds like forever, but I think that 1990 was just yesterday.
Yeah, no, that's a really good point. And actually, if you've been part of the Benzinga ecosystem, you've heard Jason talk all the time about the thing behind the thing. And that's exactly what you're talking about when you're talking about some of these charging plays. Notice that when all the charging plays got beaten down yesterday, there was one that did not. And it was relative strength. It was TPGY.
Yeah.
And I had actually said before, this thing looks incredibly oversold. I said on Twitter that the stock has no business being under $30. I actually took calls on Friday, which I'm doing quite well on today, but I took April calls. I'm hoping that this actually runs a little bit more. I mean, if we take a look at some of the recent chart here, just technically when we were oversold, I'm thinking that we're going to test this 34 level again in the near term. That's just what I see to my eye. So, David, we've actually, EVs have been a hot theme recently. Andy is a big time theme trader. He talks about it all the time as one of his big criteria for actually entering a stock. We've been discussing EVs in some capacity every day on the show for feels like months now. And I don't anticipate that going away. As far as EVs go, just in general, the sector in general, meaning all of the associated charging plays and the car company plays, we're in the first inning of this, in my opinion. I'd like to hear your guys' thoughts on that, because I think this is going to go for years.
So I haven't traded any of the autos, especially the Chinese autos, for what we were talking about yesterday. So I haven't been in any of these. I look at infrastructure stuff, right? So this is where it doesn't matter which cars sell; they all need to go to a charging station. So, which is why I threw out MP yesterday. If you guys want to take a look at MP at all, but MP is the only rare earth miner in the U.S. And I don't like the chart, which is why I threw it out. They pop. If you see the heads on those, they pop and they come back. So those are all red candles where it closes lower than where it opened, right? For 3 days in a row there. So this is where I threw it out yesterday to maybe take a look at it, because I've been waiting for a pullback on it, and it just keeps going up, right? And so I was just wondering your or anybody's thoughts on this chart pattern here.
So interested. The first thing that I'm going to say is that I believe that Sandman had talked about this several times, even months back. I actually think that I sent him, I'd have to go through my messages, but I'm pretty sure that I sent him a message about some news article that came out of this a few months back. And he said the same thing that you did. It's the only rare earth play here in America, right?
Yeah. And so the key is that it's the minerals that you need for the magnet. So right now they mine it here, they send it to China to make the magnets, and then part of the U.S. infrastructure play, if it ever happens, if anything ever happens, is that it's a strategic asset to make the magnets here in the U.S. so they could get federal funding to then, build the plant to make the magnets here. So then they would be more vertically integrated and value add.
All right. So you're looking for, so first of all, I like that whole thing. I really like angles when you get military contracts. I think that's great. I think it's going to do wonders for your stock price as well. From just looking at this technically, I mean, obviously the first thing that I would want to do is I'd want to take a look at a Fibonacci retracement to get an idea of what some of these levels are going to be. It looks like the golden ratio, when we pulled back earlier after December, when we pulled back earlier, we did in fact pull back to that golden ratio. So I would expect then, if you're looking to actually load this, these pullbacks don't look violent. They look like they happen kind of quickly, and they don't look very steep. So, I mean, I would think an add here around 43 is probably prudent. I doubt we'll actually get down to 37, so maybe 38, 39. But just from looking at this chart, I would agree with you, David. I try to also take entries on. I wait for things to pull back instead of chasing green candles. I think that's definitely a smart move. If I were stalking this for an entry, and you guys are kind of making the case for me to do that, I would be looking for low 40s here as my potential.
I will just say that has an $8.5 billion valuation. What are the revenues of this company?
I know, exactly. It's why,
so, from a standpoint of, a guy that ran money for a long time.
Right. That's why I don't like it here.
That's a really hard thing to sell to my investor base.
Exactly.
I'm not saying it doesn't work, but that's a really, really hard valuation for me to wrap my hands around.
So Andy, would you be waiting for a specific price, or would you be waiting for a specific valuation to change your thought on that?
I'd really have to see what the production, ramifications are, what the revenue basis could be on that. And, you can throw out, okay, 2025 numbers are going to be X, Y, Z, but we all know when people are doing business plans, they never hit those numbers. So I just think it's dangerous. For those type of stocks, for me, they're dangerous. It's a bad discipline. It's a bad way to try to make money. The better way for me over the years is to be on a theme and be on it early. EV is great, but it's late. It's probably a 9-inning game. I agree. And you may be only in the first inning, but it could come back, and wait for it maybe to come back to, some sort of reasonable levels. You're better off. I mean, we're going to get an construction infrastructure bill. That's probably an easier theme to make money over the summer. It may not happen right now, but.
Joseph also had mentioned read Morgan Stanley's coverage. They gave it a price target of 57, which we're not far off from at the current level right here. Tim mentioned that it makes more sense on the weekly chart. Looking at this weekly chart, this looks quite extended as well. So yeah, I mean, this is why we have these discussions, right? This is what makes a market. This is why we're talking about both sides.
It shouldn't be an $8.5 billion, so it could be a $17 billion valuation. So it doesn't matter. When stuff becomes overpriced, in my opinion, it can be whatever it wants to be. Any stock can be whatever. More buyers than sellers, it's going to go up. Because the theme is good. So that plays into the whole scenario of being in the right theme at the right time. So 100% how you make money.
Do you think we're going to see any drop off in market participants over the next year or two? Do you think that this was kind of like a high point that we recently saw with the whole coronavirus, being locked in the house and all the GameStop stuff? Do you think that market participants are actually going to leave and thereby lower volumes?
No, I don't necessarily think that. I think it's just it'll broaden out in certain areas. If you notice, the steel stocks are acting better, the fertilizer companies are acting better. I mean, there's been strength underneath the surface. I mean, look at stuff like Mosaic and, you know, fertilizer guys. Look at, you know, there's definitely strength in areas that we don't talk about a lot that, you know, that have done really well under the surface. Maybe not, you know, they're not up 500% a day, but they steadily grind higher because they do have good numbers and you can justify the valuations in them. You know, it's like, you can look at them and say, oh, well, you know, now the stock's gone from 15 to 30, but it's still only got an 8 PE ratio. You know, it's like, and that's how I played my game. So it doesn't always work, but it's worked a lot over the years.
And I think that's important, right? Stick with what works.
I don't want the risk. I don't want the risk of getting just completely destroyed by not having fundamentals underneath what I own, you know? So I'm a fundamental guy. So I like balance sheets. I like, you know, debt-free companies, and I like earnings, and I like cash flow positive companies. Because
I think that I think the younger traders, I mean, I see them here as I scroll through, you know, but I think the younger traders are here to stay.
Mm-hmm.
They're smarter. They're smarter than anybody thinks.
I agree with all of that.
And they definitely provide liquidity, and they provide volatility. And all of that makes for more interesting trading, that's for sure.
I would agree with all of those points. Hector actually said more people are going back to work. He actually said two things in separate messages, and it was interesting because when I read them, I understood them a little bit differently. His first comment was, for one, more people are going back to work. And my first thought was that was an argument that there's going to be less market participants, but he followed it up with there's going to be more money and more stuff to invest in. And I think that that's really the key point. That's the part that I agree with. I think that even in the situation of people that were forced at home that are now going back to work, like you were saying, David, the newer trader is here to stay. Whether or not they have a day job is not going to determine whether or not they participate in the market. It's the fact that they've kind of got a taste of this and they see what's possible. Even when you go back, if you can't spend all that time in front of the screen, you can't watch every tick, you're still going to be a market participant. And all of those things that you just mentioned are in play now. More volatility, more liquidity, all of those things.
But I'll say one thing, if I may.
Yeah, absolutely.
What happened between 1998, 99, 2000, there was a ton of retail people in the market. And they all got wiped out in the internet craze when all those internet companies came public that were, you know, I mean, there was companies called Life Minders would remind you about your birthday. It was an IPO. So the second a lot of guys start losing tremendous amounts of their trading capital, that will change the parameters. Now we're getting more money, more stimulus money coming in. So we're going to reload these guys with more money. So as long as they keep reloading people with money and stimulus, I agree the market participants will be there. When the guys like Citadel and Vert and these guys start really coming into the market and start really taking all the day traders' money from them, things could change pretty dramatically. So I don't want to be, you know, I don't want people to understand that can't happen, because we saw the exact same thing between 98, 99, and 2000, where there was a ton of retail traders came in the marketplace with basically the beginning of the internet days.
So you and I are probably the same age. I was right in the middle of that. Actually, I was working in tech, and this is, back then they said this is different. I wouldn't say that the market's different, but the trader is different. The technology is different. Mm-hmm. I think that, and this is one of those things that they say about our age, which is, okay, boomer. Like, I do everything I can to learn from the young guys, so I'm not an okay boomer. But you know, you're an okay boomer if you don't realize what's going on. Yeah. The young guys, you can call them X, Y's, and Z's, whatever. It doesn't matter, because a lot of them are making money too. So they're not all getting their money taken away from them in this case, right?
No, I agree. They're smart. They're way smarter than in 98, 99, and 2000. It was like shooting fish in a barrel for me. I mean, it was
until the end.
Yeah, well, I did well, but
yeah,
we were just crushing it, because the people that were trading against us had no knowledge whatsoever about the market. It was like one of those periods in time where it almost felt like you were taking advantage of people because they were buying stuff that was just nuts.
Well, so the amount of real-time information makes this different. So
Yeah,
this is where we were just starting to build the internet. Now it's.
I agree with some of that, but there'll be a period of time where people lose a lot of money.
Oh, I mean, they're losing a lot of money right now. Look, if you were in GameStop, they were trying to warn you on CNBC. Well, the guys on CNBC also didn't make a ton of money from 40 to 400. So a lot of people made money from 40 to 400, and some got out. But so just to say, I totally agree with you. There's going to be tons of people, and there already have been tons of people who have lost a lot of money. There also have been tons of people, and they've made a lot more money than I have because I'm a boomer. So I've got,
of course. I agree. Same. I agree. I've been more conservative than.
So my wife, I said, like, I'll tell my wife today. I told her 5 days ago when they announced the rocket earnings. I'm like, I don't, you wonder like what's going on in the market when you see it go up and down, and she looks at it when it mostly goes down. And I'm like, you can't watch it. I'm taking care of it. And so I gave her the example of Rocket, where I bought it and 30 minutes later, it lost 20%, right? I said, but that's why I don't tell you what I'm doing, because then you won't want me to do anything, right?
Right.
So as you get older, you get a little more risk adverse. The young guys are like, whatever. Like right now, I can't go to a ball game. I'm not going to spend $100 going to the football game to buy a ticket because I can't. So I'll put that in the market. I'll put it in. So I am heavy into DraftKings and Penn because those are the ones that, my tenants at one of my rentals, those guys are constantly betting, right? It's just another form of betting.
Yeah, if you ever go to a barber shop and you listen to the guys getting their haircut in the barber shop, they're always talking about those names. So the young the millennial guys in there. Oh, what do you think of? They always ask me questions about stuff like that.
Right. Anyway, that's one of those themes. So sorry.
Well, you know what? Coming from a guy who's young, with me, I've learned that a lot of it has to do with what price you're getting a lot of these things at. Because I got Fubo at 11, and I'm gonna hold it regardless. And I like what they said about the betting. And so, I think there's a lot of factors that you have to go in. Then the last thing I always say is, in every trade, even if you're selling, somebody's buying. And if you're buying, somebody's selling. So somebody has to win and somebody has to lose.
A lot of that can depend on your time horizon too, right? So if I buy something at 40 and it goes down to 30, it looks like I lost. But if it squeezes and goes to 100 and I'm still in, who actually lost? So I think that there's a big, I think that's one of the things that Andy was hinting at. And Andy, correct me if I'm wrong here, because I'm certainly not trying to put words in your mouth. But if you're saying, back in 99, 2000, it was easy because the people that were piling into some of these stocks didn't understand what the market was going to do or how the market was going to move around. You ended up taking advantage of that, right? You did understand how that was going to work. And then you were able to use that knowledge as your edge in trading.
I made $8 million in one day trading. So
what was that?
I made $8 million in a day trading. So
that is hopefully at some point I have one of those days. That would be really incredible.
Wealth creation, it comes from finding the right name and doing the research. And like I pumped on the message boards for months about BASI, BASI.
Yep.
Every day I pumped on that, and look at BASI's chart. And this, I mean, look at that. I mean, I pumped that at 4 or 5, like between 4 and 5 forever. I knew the story, and I'm out now. But it was basing it insider buying, good balance sheet, right space, great theme, and good new management guys. I wouldn't be now they're going to raise money, but so there is a company that I did a ton of fundamental research on. I pumped this name so much in your chat room I was like, I hope anybody bought it, but that was one of my names that I really liked.
Yeah, I know. I remember you. That's why I'm so glad that everyone comes here and participates on these calls, because not everyone
That's
is going to
true wealth.
follow.
That's- no, that's
not
true
everyone is
wealth
going to take it
creation.
as a recommendation, but the ones that do, you're going to remember this. And I mean,
That's true. So I bought 500,000 shares in the $4 to $5 range, and I sold it between 13 to 16. So that's true wealth creation, and it wasn't an overnight sensation. I bought it.
Yep.
I kept accumulating it slowly, but I knew the story. I talked to the management. I mean, obviously a lot of you guys can't call the managements, but I do Zoom calls with managements if they'll speak with me. A lot of them won't, but some of them do.
yeah. And I'm assuming that do you also listen to conference calls on
I do, and I go through SEC filings, and I go through insider buying, and I do. I'm a fundamental guy, but I like Benzinga because there's a lot of guys that pull up ideas that I would never look at because the valuation parameters don't hit my criteria, but the theme is good.
Yep.
And so, that's why I like the chat room. I like to get ideas from different people because I'm so valuation oriented that I miss stuff because I'm like, well, it trades at too many times, 5 times sales. I can't buy that. It's like,
that's actually an important point too. It almost seems like you're looking for a difference of opinion because you understand that you're going to find something in there.
I think the purpose of a chat room in an organization like this is to get everybody, more sets of eyeballs looking at things.
Yeah.
And then we all come up with a good idea and we go, yeah, that makes sense. I get that.
Yep. I'm with you. I'm with you on that 100%. That's phenomenal. Okay. So this has been great. We're already a couple of minutes over. This has been an excellent discussion. It's exactly the type of stuff that I want to do on this happy hour. So I know there are a couple of tickers that we didn't take a look at the chart and we didn't take a look at some of like the technical stuff, but I think we got more education here on what's happened in the past, fundamentals and things of that nature. So I really want to thank everyone for showing up. David and Andy, I really want to thank both of you for your banter back and forth here. Stuff like that is incredibly helpful. And especially when it's not something that's in my comfort zone, I end up taking more from that. So I hope that there were others here that also found this helpful. I look forward to being able to do that. You want the Benzinga Discord to get to that level. Joe, let's work on that. I think that there are some things that we can do. We want to keep doing these happy hours, but maybe we can kind of promote that Discord and then have some of this idea generation running 24/7. That's actually a really good idea.
I'm working on Rohan's first trade Discord tonight, so I'll definitely help you out with that.
Okay, great.
If I could add just one thing, I mean, if we're going to call this a happy hour, I think that everyone should at least have a beer or a cocktail.
Yes. So David, I'm really glad that you brought that up. That's actually something that one of our engineers brought up the other day. He goes, happy hour, more people should be drinking. So let me send out the official invite. Please, if you want to come here, you are welcome to bring an adult beverage to this particular happy hour. I will say that one of the reasons that I often don't drink here is because shortly after this happy hour, I go out and get myself dinner, and I absolutely refuse to get behind the wheel of a car after I've had any amount of alcohol. So don't let that stop you from having some. And in some cases, when I know I don't need to go out, I will join you. I will have some of that scotch. I know Joseph's got some peated scotch ready to go back there. So anyway, yes, David, that's a really good point. Everyone is welcome to bring a beverage here. We want this to be fun. We want this to be helpful. As you just heard Andy say, the purpose of having community and chat is not so people can argue, not so people can find gotchas, not so people can say, I was right, I did this, I did that. None of those things are good. Those are all toxic behaviors. The good parts about a chat is idea exchange, sharing information. And when you have people that specialize in different areas sharing their information, that's when you're going to get the best quality content. That is exactly the goal of what we're trying to do with this show and with the chat room. So really, I want to thank all of you for your participation today. Really, really appreciate it. Please join us tomorrow. Tomorrow's Wednesday. We're going to be doing this again. We'll be doing something very, very similar, and we'll go through whatever you guys have. So thanks very much. Again, Andy, I still need to send you an email. We still need to do a webinar to teach people how to become fundamental investors. I think that would really, really help. And that would put some tools in the toolbox that can be used for wealth creation long-term.
Yep.
So let's do that. Thanks everyone again for joining. Really appreciate it. Brian, if you wouldn't mind actually ending the stream here, that'd be much appreciated. And I will see all of you tomorrow.